The next bill on the calendar for today is House File 848. The clerk will report the bill.
House File number 848, number 1 on the calendar for the day, an act relating to the financing and operation of state and local government. Second engrossment.
I recognize the bill author, the member from Fillmore, Representative Davids, to explain the bill.
Thank you, Mr. Speaker and members. This is the Don't Stop Believin' House 2015 tax bill. And very simply what this bill is tax relief for middle-class Minnesotans. And as we go through the bill, you'll see line by line, line after line, how this tax relief goes to individuals. We're looking at tax relief for our senior citizens, for our veterans, for our farmers, for our students, and for our college graduates with student loans. As we go through the bill, I'll be pointing out the author and what each provision does. But members, before I do that, I'm going to defer to Chair Drazkowski, Chair of the Property Tax Division, to go over the division report, and then I will go through the rest of the tax bill itself, and then we'll go to amendments. So thank you, Mr. Speaker.
He will yield. The member from Wabasha, Representative Drazkowski, to explain your portion of the bill.
Thank you, Mr. Speaker. Thank you, members. We began early in this session, actually, some of us before the session, but certainly in the first couple of months of the session, actually going out and talking to Minnesotans across the state. I know we had a full property tax committee hearing at both Stewartville and Albert Lee, and I followed up with some additional meetings, and one or two other members joined me at a couple of them. But we went to about a dozen locations in total throughout the state of Minnesota, because we've heard over the last 2 years especially how the burden of property taxes on Minnesotans has grown larger and larger and larger. And the frustration among Minnesotans with those property tax increases certainly was communicated by really all of, I think, the approximately 500 people who we heard from at those locations talked about their concerns. The three major driving concerns that we heard was, what can we do to help stem the growth in local government spending? Because we heard over and again from folks in these communities that it indeed is local government spending ultimately that drives most of the property tax increase frustrations that they were seeing. The other two areas that we heard from them about were the large increases that were being seen in farm property taxes throughout the state. Farmers especially on their acreage and especially focused on school construction levies and the very rapidly increasing amounts that they were seeing there, and the very heavy burdens that these farm operators were seeing in their farm families. The third area that we saw and heard from people was the very heavy burden that were being placed on commercial and industrial properties throughout the state. And this included, especially we heard from the small business owners on Main Street in each of the towns that we went to, the people who create jobs in our communities from the southwestern part of the state to the northeastern, from the southeastern part of the state to the northwestern part of the state. The people who create the jobs and make our economy go, the job creators, the small business folks, were telling us about this statewide business property tax that is a property tax that has been placed upon them in addition to the local property taxes that they pay in each and every one of their communities. So those are the struggles we heard, Mr. Speaker, as we went to those locations. We had a lot of discussion. We held a large number of hearings, heard from a lot of people here at the Capitol as well, and had a lot of good proposals that came forward in order to begin to address those very concerns that we heard from the the people throughout the state of Minnesota. Members, as you look at the bill, and I'm going to go through the property tax provisions that are under the jurisdictions of Property Tax Committee, and I know Chair Davids will come back and cover the rest of the tax bill. But if you're following along on the spreadsheet, on line 29 of the spreadsheet begins the outline of the school building bond agricultural credit. And this is the new version of the house, garage, and an acre proposal that many of us were working on early in the session. This is a house, garage, and half your acres. So what we're seeing is that farmers now on school construction levies will be receiving a credit that will go on their income tax for actually exactly half of the property tax burden that's attributable to school construction levies on their acreages throughout the state. The next item, members, is on line 125 of the spreadsheet, and that begins discussion about the statewide property tax, the state general tax as it's called, which I just outlined briefly. This is an effort to exempt the first $500,000 of value and repeal it from statute for all commercial industrial properties in every corner of the state, in every one of our hometowns, every one of our neighboring towns throughout the state. Their first $500,000 of value, they would be the oppression of this state property tax upon many of these struggling small businesses that help create the jobs, especially in our rural communities, would be lifted from them. It will be lifted from them under this bill. Also, the first $250,000 of value of seasonal recreational properties, we also repeal that in the bill. On line 128 is an effort to address really some unbalances, if you will, in the fiscal disparities program, and provides a state general levy distribution from those municipalities that are up over a threshold of 8.5% in their municipality towards the fiscal disparities, to offset that then with a portion of the state general tax that's collected in those communities. Then, members, on line 129 of the spreadsheet is Representative Green has a bill that's included here to provide that when there's an abatement, in other words, when a property owner is overcharged from the local government and it's determined that they're overcharged, that in state law right now the county is given the option to refund them for that. This actually says that the county will provide a credit on the future property tax for those people, so that that is corrected for those property tax payers. Then, members, we go to line 207 on the spreadsheet and 208 that outline the Border Cities program. This is a property tax relief program for the border cities of along the western border, affecting Representatives Keel, Lean, Backer, and Markwart's district, and provides $2 million in the biennium of property tax relief to them. Also adds Taylor's Falls in Representative Barrett's district to the Border Cities program. Then, members, we go to, at least on my spreadsheet, it's page 12 of 19, and on there identified as line 6. We repeal the political contribution refund program in its entirety, saving the taxpayers of Minnesota a full $10 million in the biennium to end the political welfare program that we have in statute as we know it. No longer under the bill will politicians be receiving welfare from the taxpayers of Minnesota. Then on line 9 of that section of the spreadsheet, Mr. Speaker, is a modification in the local government aid distribution for the 4 cities of the first class. It brings down their LGA payments to 112% of the average of the rest of the cities in the state. It doesn't fully put them or bring them down to a level. We know that they have been paid a lot more on a per capita basis, a very large amount on a per capita basis, more than the average of the rest of the state. And so this brings them down to 112% of that average of everybody else. Not quite to 100% where maybe it should be. It could be argued it should be, but at 112.5%. Then on line 11, we have a penalty forgiveness for the city of Oslo for its LGA for not reporting back in 2013. There's also on line 12 LGA forgiveness for the cities of Dundee, Jeffers, and Woodstock. And then we add some state auditor provisions so that we can get this reporting from these cities, many of them often small cities, to happen in the future, so we don't have to be doing these penalty forgivenesses that we have done in the last couple of tax bills as well. On line 14, 14 through 16, we eliminate a transfer of overages from to the Minnesota Sports Facility Authority from a sales tax collected in the city of Minneapolis, and allow the city of Minneapolis to keep that sales tax and reduce their LGA by the same amount. On lines 17 and 18 and 19 are some county program aid provisions, including Representative Backer's provision. Representative Backer was leading in this area in the Property Tax Committee by attempting to bring forward an effort to correct some imbalances that currently exist and have developed in this county program aid formula. And he's developed a nice answer to that to come back with a study for next year so that we are ready to address that in a very meaningful way. Then members, on line 22, we repeal the aquatic invasive species aid that was placed into the tax bill 2 years ago. As I understand it, in conference committee, was not heard in the House. Many of us believe that the AIS aid does not belong in the tax bill, so this removes it from there. And as you remember in the environment bill, Chair McNamara and his committee addressed AIS aid alternatively in their bill. We repeal the Minneapolis Library special library aid that was placed in the tax bill 2 years ago, a special provision that many of us saw at the time, and we correct that imbalance, if you will. And then on lines 28 of the spreadsheet, we bring the liability for property taxes for those new lands that we purchase from the legacy bill and from the LCCMR bill each year, and provide that those property tax liabilities are part of the cost of buying those properties, as they have been talked about ever since we began the legacy program, and actually requires those funds to pay for those liabilities instead of the rest of the taxpayers of Minnesota being placed in a position of a tax increase in order to pay that liability, as we have seen. Members and Mr. Speaker, on line 29, Representative Detmer's got a provision to remove the limit on the property tax market value exclusion for veterans. It's currently limited to 8 years. It removes that limit. Representative Howe on line 30 provides some property tax relief for our legions and VFWs all across the state of Minnesota by reducing their class rate on their buildings from 1.5% to 1%. On line 32, Representative Hertaus has a provision that provides an exemption for those who die and need to opt out of the agricultural preserve program to be able to do so. Representative Quam has a provision that deals with agricultural homestead properties. On line 34, Representative Hackbarth has a provision allowing wine produced on farm wineries to be considered agricultural. in the agricultural tax classification for those facilities dedicated to wine production and bottling. On line 35, Representative Dill has a proposal to allow for early withdrawal from the Sustainable Forest Incentives Program in certain situations. Representative Sundin on line 36, a provision for authorizing a levy for recreational purposes in Carleton County. On line 37 is a provision I authored that brings forward the ability for local citizens to bring forward a reverse referendum in those communities in which the property taxes are raised, and simply gives them the authority to bring one forward if they believe they need to. Line 38, Representative Runbeck provides a reverse referendum for those communities that building projects, both cities and counties, so that if they do go through an EDA or an HRA with a lease levy purchase agreement, that they are also open to reverse referendum like the capital improvement process is currently in statute. Mr. Speaker, on line 44, Representative Anderson has a study on county administrative impacts for health-related costs related to the cost of implementation of MNsure. On line 53, Representative Davids has a provision related to Destination Medical Center in Rochester, as does Representative Norton. Two, if you will, somewhat competing or maybe not competing provisions to make certain that the people of Rochester do not shoulder additional property tax liability because of the arrangements with the implementation of Destination Medical Center there. We hope to iron those out and come up with the final approach to what that will be when we get to conference. On line 54 is the prohibition of government spending on the zip rail proposal that would also allow fully a private developer to develop a zip rail if they so had the means and ability to do so, but would not engage the taxpayers of Minnesota into paying for zip rail or allowing eminent domain to be used by the government for it. On line 56, Representative Green has another provision to give the ability for townships where we have township assessing, if the township votes at an annual meeting to move to county assessing for that township, they then would move to county assessing under that provision. On line 57, Representative Anzels has some town audit requirements in the bill. Representative Johnson B on line 58 has a bill regarding mandatory appeals and equalization courses for property taxes. On line 59 is a bill that I authored that brings all, with a few exceptions, nearly all local special levies to be held on the first Tuesday after the first Monday in November, so that every voter in Minnesota knows when the elections are, and we get higher voter turnout and in those particular elections. Mr. Speaker, on line 60, Representative Heintzman equalizes the penalties for late property taxes, whether you're in the first half of the year or the second half. Representative Applebaum then on 61 has a provision bringing special taxing districts to have their proposed levies published on September 30th. Line 62, Representative Runbeck has a provision related to tax forfeited lands and providing a lower rate of interest on the unpaid balance. Representative Lewick on line 63 of the spreadsheet, House File 951, which deals with an ongoing problem, conflict we've had with assessor accreditation requirements in different counties, especially as you move from smaller counties with less means to hire the assessors with a higher accreditation requirements, which means a lot more cost for those counties. I think Representative Lewick has struck a very good balance with his proposal, and we've included it in the bill. And then members, on line 64, Representative Johnson C. has his local option sales tax proposal in a modified form for Mankato and North Mankato. Other local options sales taxes include Representative Swazinski for the City of Marshall, Representative Purcell in Walker, Representative Murphy M. in Proctor, and nearing the end here, Mr. Speaker and members, Representative Simonson in Duluth, bringing some conformance there to local sales tax proceeds, and Representative Hamilton with the City of Windham. Lastly, members, the tax increment financing provisions in the bill include Representative Schoen, his Cottage Grove TIF, extending it to for an additional 5 years. Representative Hertas in Wayzata, a similar provision. Representative Mason has the extension of her city's TIF in the City of Eagan. Representative Davids has a clarification on TIF interloan requirements. Representative Pinto, a St. Paul TIF provision. Representative Uglum, Coon Rapids TIF provision, as well as Representative Fabian, the tax increment financing district for workforce housing is in the bill. Representative Slocum's Richfield TIF is in the bill, 10-year extension to that TIF. And lastly, Mr. Speaker, Representative Simonson's Seaway Port Authority, we modified that special provision in statute. Mr. Speaker, that outlines the property tax and local government provisions of the bill.
The member from Fillmore, Representative Davids.
Thank you, Mr. Speaker and members. This bill has gone through 2 committees, had 2 full hearings through the Tax Committee, through the Ways and Means Committee, and again, the focus of our bill is tax relief for middle-class Minnesotans, for our seniors, veterans, farmers, students, and college grads with college debt. So I'd like to go through the bill. Basically, I'd like to first of all thank Representative Lomer for the many years that she spent working on Social Security and excluding that from income taxes at the state level. I had a bill, various members had bills. We went with the Lewick bill, House File 304, a Social Security income tax subtraction that is phased in. Representative Heintzman and Detmer worked on a bill regarding veterans military pension subtraction. The bill has House File 299, a Heintzman bill. Representative Roz Peterson, research and development credits refundable up to $200,000, putting a second tier from 2.5 to 4. An R&D credit extended to sole proprietors. Anderson S. had a provision in there for the angel investment credit. Representative Knobloch, K-12 education subtraction and credit. Chair Anderson S., modification to eligible expenses for K-12 education subtraction and credit. Members, you're probably getting quite a bit of mail or emails supporting that provision. We put in our bill a modified House File 1064, Representative Loon. That is the provisions, that's out of the governor's tax bill, not to the $104 million that he was looking for, but rather we started off for the biennium at $35 million. It's a good placeholder to continue the debate with the governor's office on child care credits, which I am supporting fully. House File 2084, student loan refundable credit. That's where if you have a college graduate with a student loan, has a job, there's a formula you go through where they can take part of they can get a credit to reduce the amount owed on their student loan. 2 very good provisions from Representative Wills for Section 129. So we don't just do a credit, but we also do subtraction, and it just depends on what works best for the family. Clearly a middle class, very favorable to the middle class Minnesotans trying to save for college payments down the road. Representative Erdahl, a credit for certain master's degree education for teachers. We have a House File, let's see, the disallowance for working family credit subtraction for long-term care savings. Two long-term care issues, and when I say long-term care, it's not just nursing home, but it could be nursing home, in-home care, hospice. We took the Schumacher provision subtraction for long-term care savings plan. In the O'Driscoll, we increased the long-term care credit. One provision that I really think it's a good provision is from Representative Gruenhagen. And what the provision does, it allows a subtraction for doctors and dentists for charity health care. We have learned over the years that a lot of doctors and dentists have a lot of uncompensated care. And what the Gruenhagen provision allows is for them to deduct that, and there are certain restrictions included in that. Representative Newberger, subtraction for first responder meals. One that is near and dear to me, that Chair Linchesky last year, as chair of the tax committee, put in some provisions for Minnesota-Wisconsin tax reciprocity. We're going to make another run at that. This will be the third time. The governor's office has not been able to cut the deal with Wisconsin, and in no way am I criticizing our governor on that. The governor's office, back with Myron Franz as commissioner, was very, very supportive. It didn't work out the last two times with Wisconsin. We're thinking that the third time is a charm, letting the governor and his commissioner Bowerly to negotiate with Secretary Chandler over in Wisconsin to get that back. House File 2153, Section 179 expense with a 10-year carryover. What we found out actually from a farmer in my district called in and said, you know, Greg, we had $7 corn, now we have $3 corn. I bought some equipment. I had one Section 79 expensing, which we don't fully conform with the feds. We do an add back, but what happened was now we have $3 corn in 2014. We had a lot of losses. They were not able to use that deduction, if you will. And we're going to allow them to carry that forward. Bipartisan support on that issue. A fine piece of legislation from Representative Dean R. Credit for job training center rehabilitation in North Minneapolis or North Minneapolis. Okay, very good. That provision is there. Representative McDonald, subtraction for fitness facility fees. House File 837, David's domicile determination, modified prohibition of certain factors. And a Dean M provision, House File 1001, that has to do with medical treatment days. This has become quite a big issue, members. We have folks in Florida and Texas advertising that as snowbirds go down to the southern states, they're saying that if you want to become a resident of Florida or Texas or whatever state we're talking about, you need to sever your ties with your CPAs, your attorneys, your financial planners. And we're saying that if they are residents of that state, that they should still be able to do business with Minnesota companies back here in Minnesota. This is a provision for middle-class individuals. Actually, for every individual in the state, we increase the subtraction 25% of the federal personal and dependent exemption. Right today at the federal level, you have an exemption of $4,000. We're saying in Minnesota, every Minnesotan gets a $1,000 personal and dependent exemption. Representative Drazkowski covered the division report. Then we go over on the spreadsheet to page 4. And there's, again, Representative Roz Peterson has some issues there with R&D credits. Representative Albright, net operating loss carryovers, refundable credit. And then, as you'll notice, members, in the tax bill, we're carrying some of the funding mechanisms that have to do with tax policy for the transportation bill. And so you'll see that on the spreadsheet there. House File 531, Swedzinski, exempting construction contracts for local governments, cities, counties, and school districts. They love this one. What we're saying is when they make purchases on construction material and other items, that they don't have to pay a sales tax to the state on that. House File 69, vendor allowance for retailers that are collecting sales tax. McDonald repeal tax on digital products. You go down, repeal the tax on machinery and equipment used by restaurants. Representative Carlson had a good provision exempting sales tax on purchases by 501c3 corporations, not-for-profits. The committee did not really understand why we were taxing sales tax for not-for-profits. The Carlson provision is in the bill. Swedzinski, modifying the application of tax for modular home purchases. Petersburg, exempt off-road fuel. It's fuel that's not being used for transportation on the highways. We're exempting that. Gunther exempt sales and purchases of nonprofit animal shelters. Wills exemption modified for certain nonprofit fundraising events. The first bill we heard in the year was a Rosenthal bill. That had to do with exempting bullion coins from sales tax. We took the Rosenthal bill and modified it a bit with some provisions from Representative Knobloch. That's in the bill, and I believe they had agreed to that. We're good on that one. Nornis exempt materials, supplies, equipment for improving existing resorts, recreational areas. A very good provision, House File 89, is in the bill. Representative Davney, expand tax exemption for textbook and instructional materials. That's in the bill. Baker, exempt purchases of certain propane tanks. Quam, expand the exemption for medical equipment, accessories, and supplies. We did not go retroactive on that as the original bill did. McDonald exempt sales and purchases for city celebrations. Rarick has a bill for the city of Mora to exempt sales tax on building materials for a wastewater treatment facility. And that goes back to January 1st. Representative Knobloch, exempting admissions or charges for access to BMX tracks. Petersburg, exempt admissions for agricultural center. That's Farm America. Garofalo provision on natural gas purchases. The House File 700, we are not lowering the cigarette tax, but rather we are getting rid of the inflator. We're at $2.90 currently. Other states are in the 40s, 50s, 60s, whatever they're at, and it's created some trouble, especially for border communities, to be that high, so we get rid of the inflator. Create a separate excise tax rate for vape products, vaping products. One provision the committee supported here was House File 958-A1, an Earhart provision to phase in the estate tax. That gets phased in quicker than what current law says right now. And then, members, we have the Hoppy Bill 1176, modification to rate structure and exemptions for not-for-profit gaming, and Knobloch has House File 296 in the bill. Cretia, House File 438, new markets tax credits. And I think Chair Drazkowski went over the other provisions. I just want to check and make sure I didn't miss anything. So with that, Mr. Speaker and members, I believe there are some amendments at the desk.
You are correct. There is an amendment at the desk. The clerk will report the amendment.
Norton moves to amend House File number 848, the second engrossment, and the amendment is coded A50.
The member from Olmsted, Representative Norton, to explain your amendment.
Thank you, Mr. Speaker. I'm rise to discuss Article 5, and I have an amendment that deletes four different sections in the bill that are specific to my community. And it's interesting that we're looking at a tax bill, and in that tax bill, my community has been targeted in multiple places, and I'm going to explain what those are. In the bill, in each of these four places, it says, no appropriation or other state money, whether in the general or another fund, must be expended or used for any costs related to the studying of feasibility for, planning for, designing, engineering, acquiring property, or constructing facilities or related to, or development or operation of intercity or interregional passenger rail facilities or operations between the City of Rochester or locations in the metropolitan area and any location in the metropolitan area as defined in law. And it has that reference. That same provision with that same language is in there in a few pages later that says no DMC money can be used for that. And if you go back a few more pages after that, it says no, the council cannot spend any local tax dollars on that. So members, in the tax bill, we have a prohibition that's saying my community, the state, a private destination medical center organization cannot study, plan, do anything related to a potential rail, intercity rail. And I just think this is wrong. There are potential unintended consequences, and I know Representative Drazkowski has changed his language a couple times and has tried narrowing it, but in fact, it will have an effect on my community's ability to plan for a potential rail that would come to my community. And as many of you know, with the Destination Medical Center proposal, we are planning hubs, multimodal hubs, and it seems quite reasonable in the planning of those multimodal hubs that should this private entity that has approached the state actually at this point and my community interested in a high-speed rail, that knowing that they might be interested, that we cannot even plan for the eventuality that they would come to our community. So members, this is just completely unnecessary. We don't know the consequences of it, and it has a potential of stifling interest in these private entities. The only other provision that is included in this had to do with condemnation and eminent domain. I think it really jumps the gun. If anyone has listened to the folks, the National High-Speed Rail Association, that's at least approached us with some interest, they're talking about a raised facility that will go above the road or above the land. We don't have any details, and this is really preemptive and could really stifle something that has the potential to connect two large metropolitan areas and increase productivity and economy in the entire southern part of the state, and in fact the whole state, using steel from the Iron Range, and because we put that in our Destination Medical Center bill at the request of the Iron Range a number of years ago. And it can hurt the economy statewide, even though the rail may connect the Minneapolis-St. Paul area to Rochester. So members, I just ask for your support to take out a provision that targets my community unnecessarily and stifles development before it even has a chance for a good discussion.
Discussion to the Norton Amendment. Representative Drazkowski.
Thank you, Mr. Speaker. Mr. Speaker, members, I encourage a no vote on this amendment. Members, this particular rail proposal is very, very, very controversial in southeast Minnesota, expected to be about a $6 or $7 billion cost. This language in this bill has been through several iterations. I have worked directly with both the lobbyists from Olmsted County, which I find it somewhat intriguing that they are still here lobbying at the Capitol, even though given the fact that they are suggesting they're not planning to spend public money on this, and the fact that the private developer that's suggesting that they may develop this is saying they don't want or need public money in order to do what they're doing. We still see them here at the Capitol. I've also worked with that private developer to make certain, and if you look in the bill on lines 125.21 through 125.23, and the same language appears in multiple places in the bill. It says the restrictions under this section do not apply to funds obtained from contributions, grants, or other voluntary payments made by non-governmental entities from private sources. So we fully give the ability to the private sector to do what they would do best if they believe that this infeasible project is feasible. And it makes certain that we don't squander taxpayer resources on something that is not in the best interest of any of the taxpayers of the state of Minnesota. Thank you, Mr. Speaker.
Further discussion to the Norton Amendment. Seeing none, all those in favor of the motion, the amendment signify by saying aye. Aye. Those opposed? No. The motion fails. There's an amendment at the desk. The clerk will report the amendment.
Isaacson moves to amend House File Number 848, the second engrossment, and the amendment is coded A54.
Representative Isaacson, to your amendment.
Thank you, Mr. Speaker. I would like to temporarily withdraw this amendment. Thank you.
Representative Isaacson temporarily withdraws the amendment. There's an amendment at the desk. The clerk will report the amendment.
Thiessen moves to amend House File Number 848, the second engrossment, and the amendment is coded A57.
Representative Thiessen, to your amendment.
Thank you, Mr. Speaker. Members, I bring this amendment in the interest of transparency. What this amendment does is one thing. It says that instead of phasing in the tax changes in this bill over 5, 6, 7 years, what we're going to do is just do it all right now, this year. And what that would do, just remember so you understand really what's going on in this tax bill. We would go from what we have now, just about a $2 billion budget surplus, to an immediate deficit of over $2 billion, $2.5 billion in fact. The business corporate cuts in this bill alone would be $1.7 billion. That one line would be $1.7 billion. By the time this gets phased in, we're talking, members, about over $2 billion out of our state budget every year. I don't think we should be going in this direction for a variety of reasons, but maybe the most important relates back to the discussion we had last night. What you're doing in this tax bill is setting up deficits for the foreseeable future. You're setting up huge holes in our budget, billion-dollar holes in our state budget into the foreseeable future. And what that's going to mean is that we're going to be right back again to cutting schools, to cutting hospitals, to cutting nursing homes. We're going to be right back again to 2011 and what you had to go through in 2011. I don't think we want to go down that path, members. This is an incredibly, incredibly irresponsible tax bill just because, for a variety of reasons, but most importantly, because it's getting, we spent 2 years and did a lot of heavy lifting to get our state budget into order, to get it structurally balanced for the first time since I've been in this legislature, since Representative McNamara has been in this legislature, since Representative Hoppe has been in this legislature. For the first time after the 2013 session, we actually have a structurally balanced budget. And what you're doing with this tax bill is sending us right back into the cycle of deep deficits, deep cuts to education, high tuition increases, deep cuts to health care, an inability to actually provide services. Maybe that is what you want to accomplish. Maybe you want to drown government. But I don't see that in the bills you're bringing forward. I don't see that in all the spending you're so desperate to do. What you've shown this year is that you actually believe that government provides important services because you want to spend on so many things. If you look at the bills you've introduced, over $2 billion in new spending. You're not going to be able to do it with the bill that you're putting forward here, members. It's fiscally irresponsible. It's going to get us back to deficits. It's going the wrong direction. And with that, Mr. Speaker, I'll withdraw the amendment.
Representative Thiessen withdraws the amendment.
Mr. Speaker, I raise a point of parliamentary inquiry.
Representative Drazkowski, state your point of parliamentary inquiry.
Thank you, Mr. Speaker. Just curious, I want to make certain I heard you correctly on the A50 amendment, and I thought I heard you say that it fails. Is that accurate, Mr. Speaker?
Representative Drazkowski, yes, I said it failed, and I should have said it was not adopted to be more consistent with our tradition and custom and use in the House. Thank you, Representative Drazkowski.
Mr. Speaker, point of parliamentary inquiry.
Representative Thiessen, state your point of parliamentary inquiry.
Thank you, Mr. Speaker. What we heard over here is that the motion prevailed. And is there a way for us to go back and actually do an instant replay and actually hear what you actually said on that, on ruling on that motion?
Representative Thiessen, as I had clarified that the custom and use of the House is to say that it was not adopted, and because there was some confusion as to whether it was fail or prevail, we could reconsider a vote on that amendment and bring it back before the body. And at that point, we could see what the body wants to do with the reconsideration, or we can also probably end up with a similar outcome. However, I'm not speaking for the body.
Thank you, Mr. Speaker. I guess we will just, I'm again disappointed with the way this place is being run, but I guess we'll just let it go. I'd like to call the House.
Call of the House being asked for, seeing 10 hands, there will be a call of the House. The clerk will take the roll. The clerk will close the roll. There's an amendment at the desk. The clerk will report the amendment.
Atkins moves to amend House File Number 848, the second engrossment, and the amendment is coded A68.
Representative Atkins, to your amendment.
Thank you, Mr. Speaker. And Chairman Davids, this is the amendment. I'd like to try to notify folks of amendments ahead of time. This is the one I told you about a few minutes ago, and I apologize for not getting it to you sooner. This is actually an issue, Mr. Chairman, that I give you credit for bringing to our attention. It deals with unclaimed property. Minnesota has $650 million in unclaimed property that are being held by the Department of Commerce right now. It has tripled in size over the last decade. In fact, it was an article 2 years ago now in which you were quoted about how we seem to be doing a lot about bringing money in, but not doing enough to get money back out. It was actually Representative Pepin's, Majority Leader Pepin's constituent. I believe Representative Pepin sent out an email update talking about unclaimed property. She referenced me in my bill, saying that she supported my bill, a separate bill, separate from this amendment. Her constituent, who I believe worked for the Department of Revenue, contacted me with this idea that's reflected in the amendment. What the amendment does, and it's shockingly simple. His point is that while he worked at the Department of Revenue, he was frustrated by the fact that when there is unclaimed property, it comes into the Department of Commerce and it's got people's Social Security numbers. If it's a bank account or a mutual fund or insurance, it comes in, it's got the Social Security number attached to it. But there was no outreach from the Department of Revenue to the Department of Commerce to share that information with the Department of Commerce. And in fact, our law prohibits it from being used for that. So all this does, this shockingly simple amendment, is say that the two commissioners will work together to get that information that Revenue has to share it with Commerce so that Commerce can notify individuals who have unclaimed property. And Mr. Chairman, as I said, my hope is that you will take this with you to conference committee, figure out what is most practical. Again, it came from literally Representative Pepin's constituent. Otherwise, I would have put it in as a bill. But I think it's a great common sense idea. I hope you support it, and I hope you can find a workable way to effectuate it. I think it literally just calls for the two commissioners to work together. And with that, I'd appreciate members' support.
Discussion to the Atkins amendment. Representative Anderson.
Thank you, Mr. Speaker. Would Representative Atkins yield to a question?
Representative Anderson, he will yield.
Thank you, Mr. Speaker. Representative Atkins, am I remembering correctly, did you have this as part of the jobs bill, Representative Atkins? I can't remember. I remember seeing this in committee, and I think that it's planted somewhere else, and I just want to know all the different spots it's in.
Representative Atkinson.
Thank you, Mr. Speaker, and thank you, Representative Anderson. I alluded to it very briefly in my comments, but I'm glad you give me an opportunity to talk about it. This is a separate idea. What's in the jobs bill, and Representative Chairman Garofalo was kind enough to place that in his omnibus bill. What that does is require legislators to be notified of the names. It requires Commerce to do a little bit better job of reaching out and finding people, and it requires publication in the newspapers of the names, kind of like what we used to do. This idea actually was from one of Representative Pepin's constituents who read that bill, realized that I didn't have this piece in it. And what this does is it calls for the Department of Revenue Commissioner and the Department of Commerce Commissioner to work together to share that information. So I appreciate the clarification.
The member from Fillmore, Representative Davids.
Thank you, Mr. Speaker and members. I don't really see any problem with taking the A68 amendment into conference, so I'd vote however you want, as you will anyways. But I think it may be workable.
Further discussion to the Atkins amendment. Seeing none, all those in favor of the Atkins amendment signify by saying aye. Aye. Those opposed? The motion prevails. The amendment is adopted. There's an amendment at the desk.
Moline moves to amend House File Number 848, the second engrossment as amended, and the amendment is coded A56.
Representative Moline, to your amendment.
Thank you, Mr. Speaker. I'd like to temporarily withdraw my amendment.
Representative Moline temporarily withdraws her amendment. There's an amendment at the desk. The clerk will report the amendment.
Bernardi moves to amend House File number 848, the second engrossment as amended, and the amendment is coded A58.
Representative Bernardi, to your amendment.
Thank you, Mr. Speaker. I request to temporarily withdraw my amendment.
Representative Bernardi requests a temporary withdrawal of the amendment. There's an amendment at the desk. The clerk will report the amendment.
Marquardt moves to amend House File Number 848, the second engrossment as amended, and the amendment is coded A59.
Representative Marquardt, to your amendment.
Thank you very much, Mr. Speaker and members. I'd like to temporarily withdraw that amendment, Mr. Speaker.
Representative Marquardt temporarily withdraws his amendment.
Simonson moves to amend House File Number 848, the second engrossment as amended, and the amendment is coded A62.
Representative Simonson, to your amendment.
Thank you, Mr. Speaker, and I would like to temporarily withdraw the A62.
Representative Simonson temporarily withdraws his amendment. There's an amendment at the desk. The clerk will report the amendment.
Daphne moves to amend House File Number 848, the second engrossment as amended. The amendment is coded A60.
Representative Daphne, to your amendment.
Thank you, Mr. Speaker and members. I'd ask to temporarily withdraw the amendment.
Representative Daphne temporarily withdraws his amendment.
Mr. Speaker, I'd lift the call of the House.
Clerk will report the amendment. Yes, all those in favor say aye.
All those in favor of lifting the call of the House signify by saying aye. Those opposed? There's an amendment at the desk. The clerk will report the amendment. The motion prevails, excuse me. There's an amendment at the desk. The clerk will report the amendment.
Lincheski moves to amend House File Number 848, the second engrossment as amended, and the amendment is coded DE1.
Representative Lincheski, to your amendment.
Thank you, Mr. Speaker and members. Members, you might recall earlier we had a minority report and the majority moved to table it. So we really didn't get to discuss it, and so I'd like to do that now, and this time you'll actually get a vote on the DE1 amendment again. So just members to recall for you, I'll just hit the highlights of what's going on in the DE1 amendment. Members, what this does is we drop the estate tax changes in Chair David's bill. We change the state general levy. We still exempt the $150,000 exemption and the $76,000 exemption for seasonal rec. We're making changes in LGA and other reductions that were made to the first-class cities. We're removing those. We're also removing the health premium tax credit and healthcare provider changes. We're removing the extension of the K-12 credit to private school tuition. We're also removing all the transportation provisions within the bill. We are removing the taxes that are being applied to vapor products. We're also changing the aquatic invasive species. The majority had taken that out of the bill. We're returning it. We're also removing the changes in the Davids bill to the legacy funding of PILT. And we are removing a provision that Chair Davids had regarding federal taxes and tax incident. And members, further, what we're doing is we're taking the parts of the bill that we think really are middle class relief, because in the current form there's very little, and we're giving you significantly more middle class tax relief. So what we're doing here, members, if you vote for the DE1, you will be voting to phase in the Social Security exemption faster than is in the majority's tax bill. We'll get that done in 4 years instead of 5. The temporary income tax exemption, we are in the majority bill, it's just a 2-year temporary tax cut. We're making that permanent, so all of the Minnesotans who would receive that tax cut for 2 years would get it permanently. We're also increasing the elderly exclusion for individuals who benefit very little from Social Security. That was an Isaacson bill. We're also adding the increased dependent care credit tax benefits. Representative Bernardi carried that bill, very similar to Governor Dayton's proposal. We're also enhancing the working family credit. We are putting into the bill the governor's tax proposal for the senior citizen property tax referral. This will cut property taxes for senior citizens. We're expanding the renter's credit, which is, there is nothing done in the current bill on that. We're going to expand the renter's credit and increase the homestead credit refund so people will get an increased circuit breaker. We're increasing LGA. That was Representative Paul Anderson's bill that we thought was a good idea and we put in this bill. We're increasing county program aid. That was Representative Backer's bill. We also thought that was a good bill for the counties and we're putting that in. We're also increasing township aid. Additionally, Representative Drazkowski mentioned he's got a small increase for border cities. We're enhancing that so those border cities, for those communities, will get a larger aid. We are including Representative Marquardt's railroad tax modernization and safety provision. We also have a new tax credit that our colleagues who represent the Iron Range have put together to help the mining industry during this slowdown. We also are requiring American steel be used for public projects. And additionally, we have another provision because, and I mentioned this in the minority report before, we are unlikely to be able to come into session very early next year, and that was when we would normally pass on federal tax cuts to our constituents through a process called federal conformity. We're doing that here right now. It's an automatic tax federal conformity, so your constituents next year when they start filing their taxes in January will get the federal tax cuts immediately. And so members, I'd ask for a roll call, and I hope you will consider this significant improvement in middle class tax cuts for Minnesotans.
A roll call being requested and seeing 15 hands, there will be a roll call. There is an amendment to the amendment. The clerk will report the amendment.
McNamara moves to amend the Lincheski amendment to House File 848 as amended, and the amendment to the amendment is coded A81.
Representative McNamara, to your amendment.
Thank you. Good afternoon, Speaker. I hope everyone's enjoying the beautiful day. Mr. Speaker, so I don't forget, you know what, I think I should ask for a roll call.
A roll call being requested and seeing 15 hands, there will be a roll call on the amendment to the amendment. Representative McNamara.
Thank you, Mr. Speaker. Well, Mr. Speaker and members, it's a real honor to have served the last 13 years and finally be in a position for only the second time in 13 years to have a budget surplus. I think we had one for a short while in like '07 or some year like that. And I am just dumbfounded to think here we are with a $1.9 billion surplus. Our workers are just barely creeping ahead, getting a, I don't know, it's, Mr. Speaker, it's like 1%, 1 point some percent annual increase in wages. And the sad thing is if you go back, I got to think, you got to go back about 12 years to 2002. Since that, I'm sorry, I'm going to go back a little farther, 2000, 2 years before I got here. Since the year 2000, our hardworking Minnesotans have had their wages increase 12%. Sadly, our state government has grown at the same time at 75%. And so the reality is our taxpayers are working harder for not much more. And I'm just dumbfounded that the other body has proposed what I can't imagine, and I want to make sure that the people in this body don't support it as Chairman Kelly goes to conference committee to make sure. So members, if you've had a chance to look at the A81, if you can imagine, this is the administration and the Senate's proposal. And Mr. Speaker, I've asked for a roll call, but I'll be voting red. I won't be voting for my own amendment. I can't imagine in this day and age that we would do. I was looking over the amendment, which I think is a good idea if you're going to present an amendment to read it. This is kind of dumbfounding. I'm trying to figure out how it works. It actually says that if the price of gas goes down, the gas tax won't go down. I guess they don't call it a gas tax. They call it a wholesale something or other, but people pay it at the pump by the gallon. Minimum of 16 plus cents a gallon at current prices. And so, Mr. Speaker, I'm low on gas, so I know right now it's going to cost me about $30 to fill my hybrid Escape, or hybrid Mariner. I got the Mercury one, not the Ford one. It's a Mariner. So it's about $30, $32 to fill if I'm all the way down to empty. That was $50 not too long ago. So if you equate that to a hard-working Minnesotan and take one that lives 30, 40 miles away from his or her job, and some of them, unfortunately, they got to drive a little older vehicle because they got a moderate income. And if they're lucky enough to have a good union job, maybe a good labor or carpenter job, and they might have to drive 30, 40 miles to work every day. And because of weather and not knowing if they're going to get in a little overtime or not, they can't carpool with anybody. So they got to drive their older pickup that only gets like 10 miles to the gallon. Sometimes they got to drive 30, 40, even 50, 60 miles a day to work every day. Well, members, think about that. If they're buying 6 gallons of gas each way each day, that's 12 gallons of gas. Do you know that this proposal, this is dumbfounding. If gasoline or diesel fuel, if you got a diesel pickup, goes to $4 a gallon, the tax would be 28 cents. Chairman Kelly, I think that's the whole gas tax, state and federal today. If I'm not mistaken, it's 28 cents. Or is it 20? Is it that? Yeah, yeah, just the state's 28. So we would double it. If gas goes back to $4, and the guy above forbid if that happens, but if it probably is going to happen someday. And to think, this is a proposal from the Senate and the governor that is so regressive and hurts the moderate, hard-working income people in Minnesota. Members, here's your chance to stand with me and vote red on the McNamara amendment. Please vote red.
Further discussion to the McNamara amendment. Representative Hornstein.
Thank you, Mr. Speaker and members. I will join Representative McNamara in voting no. You know, we need a comprehensive and balanced approach to transportation. I think we know what's going on here in terms of this particular vote, and I'm very hopeful that our conference committee that will be named in a very short period of time will work something out with the Senate and the governor, and we can move forward together bipartisanly on transportation funding for both Metro Transit, Greater Minnesota Transit, roads and bridges in the Metro, roads and bridges in Greater Minnesota. I'll join Representative McNamara in voting red.
Further discussion to the McNamara amendment. Representative Pepin.
Thank you, Mr. Speaker and members. Thank you, Representative McNamara, for bringing this forward. I would encourage a no vote. But I have to say that we brought a well-balanced transportation package with the leadership of Chair Kelly last week. We put together a sustainable plan that provided over 10 years, $7 billion in sustainable funds to transportation. It included funding for, as you might recall, auto reparts tax, lease tax, rental car tax, and it dedicated those funds towards what they should be dedicated toward, like 33 other states do, road and bridge projects. Chair Kelly and others spent many months working on this proposal, but yet we were criticized and said that our plan wasn't sustainable. And the plan that the Democrats brought forward was a gas tax, an additional gas tax. No other plan came forward. So apparently, if you think that the answer is another increase in the gas tax, and that's your answer for solving problems to roads and bridges, solving the roads and bridge issue, then you should absolutely vote yes today. Our side put together a comprehensive plan, and I encourage all the Republicans to vote no to this amendment, because we have a plan, we put forward a plan. But Democrats, this is your chance. This is the proposal that's been forward. The Senate passed it. The Senate wants to raise gas taxes an additional 16 to 26 cents per gallon. I think that is the absolute wrong direction. Republicans think that is the absolute wrong direction. And let me tell you a personal story. My brother-in-law is a truck driver. He buys about 150 gallons of gas a day, and he's not the only truck driver in Minnesota. I want you to put that 16 cents per gallon up to 26 cents additional gas tax per gallon. I want you to do some math and figure out how much that's going to cost an average Minnesotan. It's an awful lot of money, and it's unfair. And you haven't put together a plan. You haven't given us a realistic choice. So this is your chance. If you are honest about wanting to fix the road and bridge projects throughout the state of Minnesota, you had a chance to vote for our plan that put money into small cities, medium-sized cities, state, county roads. It was well balanced, but you voted against it. So if you're honest about wanting to fix roads and bridges, apparently your only other opportunity is to vote for this gas tax today. So Democrats, I suggest that you put your money where your mouth is and vote yes today. Republicans, I encourage you to vote no and stick to the well-thought-out, sustainable plan that we put forward so that we can bring that to conference committee. And Mr. Speaker, I would ask for a call of the House.
A call of the House being requested, and seeing 10 hands, there will be a call of the House. The clerk will take the roll.
Mr. Speaker?
Representative Pepin.
Mr. Speaker, I move that further proceedings under the roll call be dispensed with and the Sergeant at Arms be instructed to bring in the absent members.
Representative moves that further proceedings under the call of the House be dispensed with and that the Sergeant at Arms be instructed to bring in the absent members. All those in favor signify by saying aye. Those opposed? The motion prevails. The clerk will close the roll and the Sergeant at Arms will be instructed to bring in the absent members. Further discussion to the amendment. Representative Metza.
Thank you, Mr. Speaker. Members, Representative or Majority Leader Pepin, I'm really disappointed that you called it a thorough package. Representative Moline and I both brought up American Steel. Today we had about 12 students here from our districts, and I asked with a show of hands from those students how many had parents that were getting laid off at the mines. Half of them raised their hands. Half. the majority voted down American steel. The Senate's got it in there, and I sure hope that as we're moving forward here, that we include American steel as part of a balanced transportation package and take it a little bit more seriously rather than throwing up gotcha votes on something that is very isolated and singular in terms of the gas tax alone. We all know that transportation requires bipartisan support and work across the aisle, and I hope we get to that point versus voting on this amendment, and I'll be voting no, along with Representative McNamara and Hornstein.
Further discussion to the amendment? Representative Drazkowski.
Thank you, Mr. Speaker. Members, I think Representative McNamara framed it very well. While after adjusted for inflation, family budgets or family median incomes have risen 12%. The state spending increased 75%. Now, if you uninflate that family income, they're actually a decrease over the last 7 years. $4,320 decrease if you don't apply inflation to it. Family budgets are not keeping up with the inflated budgets of state government, and that's what we're seeing. And it's heartening to me to hear many of the leaders in the Democrat Party, the side that usually and historically and almost always seems to like to tax, and spend, are saying that this very regressive gas tax on the hardworking people of Minnesotan is written onto the wall. The message is, the writing's on the wall. The writing's on the wall. The regressive gas tax on the hardworking people of Minnesota is dead on arrival. Dead as a doornail. That's what we're hearing today. So thank you, Representative McNamara, for bringing forward and exposing for the people of the public to see the doornail up there on the barn wall, dead as it is. Thank you, Mr. Speaker.
Further discussion to the McNamara amendment? Seeing none, the member from Wabasha, Representative Kelly.
Thank you, Mr. Speaker and members. I appreciate the opportunity to have this discussion, and I appreciate Representative Hornstein, your comments, because the task at hand now is to go into conference committee and work through this transportation issue. I'm glad that we were able to, as a body, prioritize this. I think we did a very good job in doing so, and I look forward to working through the process and bringing back a transportation bill that we can all accept in the end. Thank you.
Further discussion to the McNamara amendment? Seeing none and hearing none, a roll call being requested. The clerk will take the roll. Members, the House is under call. Please vote. Members, please vote. The House is under call. Members, please vote. The House is under call.
Mr. Speaker,
Representative Pepin.
I move that those not voting be excused from voting.
Representative Pepin moves that those not voting be excused from voting. All those in favor signify by saying aye. Aye. Those opposed? The motion prevails. The clerk will close the roll. To the Lincheski amendment. There being 132 nays and 0 yeas, the motion is the motion fails. The motion does not prevail and is not adopted. The amendment is not adopted. Thank you kindly. To the Lincheski amendment, discussion. Representative Pepin.
Mr. Speaker, I move that the call of the House be lifted.
Representative Pepin moves that the call of the House be lifted. All those in favor signify by saying aye. Those opposed? No. The motion prevails. To the Lincheski amendment, further discussion. Representative Thiessen.
Thank you, Mr. Speaker. I would like a call of the House.
The call of the House being requested and seeing 10 hands, there will be a call of the House. The clerk will take the roll.
Mr. Speaker,
Representative Pepin.
I move that further proceedings under the roll call be dispensed with and the Sergeant-at-Arms be instructed to bring in the absent members.
Representative Pepin moves that further proceedings under the call of the House be dispensed with, that the Sergeant of Arms be instructed to bring in the absent members. All those in favor signify by saying aye. Those opposed? The motion prevails. The clerk will close the roll. To the Lincheski amendment, further discussion. The member from Fillmore, Representative Davids.
Well, thank you, Mr. Speaker and members. I would respectfully request a red vote on the DE1 amendment, if not for just the very simple fact that the excise tax on a gallon of gas on the wholesale price just went down. The DE1 amendment takes out the provisions for funding transportation in the Kelly bill under the tax provisions. And so, members, let's just give this one a red vote and move on. Thank you.
Further discussion to the Lincheski amendment? Seeing none and hearing none, a roll call being requested, the clerk will take the roll on the amendment. Members, the House is under call. Please vote.
Mr. Speaker,
Representative Pepin.
I move that those not voting be excused from voting.
Representative Pepin moves that those who are not voting be excused from voting. All those in favor signify by saying aye. Aye. Those opposed? No. The motion does not prevail.
Mr. Speaker, I move that those not voting be excused from voting.
Representative Thiessen moves that those not voting be excused from voting. All those in favor signify by saying aye. Aye. Those opposed? No. The motion carries. The clerk will close the roll. To the Lincheski amendment, a roll call, no further discussion. There being 59 ayes and 73 nays, the amendment fails and is not adopted. The amendment does not prevail and is not adopted. There's an amendment at the desk.
Lincheski moves to amend House File Number 848, the second engrossment as amended, and the amendment is coded DE2.
Representative Lincheski, to your amendment.
Thank you, Mr. Chair and members. Members, the DE2 makes some changes to Chair David's bill. Members, it eliminates the bill's K-12 credit for private tuition. It eliminates the transportation funding dedications. It eliminates the phase of the phase out of the state general levy. It adds the governor's proposal on closing corporate loopholes that Chair Davids had not included in his bill, and it adds the governor's proposals on modernizing the railroad property tax assessments. Mr. Speaker, I'd like a roll call.
A roll call being requested, and seeing 15 hands, there will be a roll call. There's an amendment at the desk. The clerk will report the amendment.
Simonson moves to amend the Linchesky Amendment to House File Number 848, the second engrossment as amended, and the amendment to the amendment is coded A73.
Representative Simonson, to your amendment.
Thank you, Mr. Speaker, and I'd like a roll call on the A73.
A roll call being requested, and seeing 15 hands, there will be a roll call on the amendment.
Thank you, Mr. Speaker and members. So the A73 brings us back to the broadband discussion. And I think we have talked about this a number of times over the course of this session, both in committee and here on the House floor. But the reality is that, you know, we're all faced with certain choices. And when you make promises during your campaign, I think it's beholden upon you to follow through with those choices. And I think a number of you, and you know, myself included, I made promises to my constituents that I would follow through with efforts to pursue a statewide border-to-border broadband program that was good for all Minnesotans, not just one particular area of Minnesota or one particular section of Minnesota or some particular population in Minnesota, but actually all Minnesotans. So this gives you a different option than we've talked about before. Up until now, all we've really talked about is direct appropriations through grant process to allow the development of broadband across Minnesota. And this gives you a new option that allows you to create a grant and tax credit program. This is something new that we've not necessarily talked a lot about, but it's another opportunity for you to promote economic development across greater Minnesota. And again, I'll remind you, and I shouldn't really have to, but I'll remind you that this is the #1 thing that cities and counties and local government units across Minnesota, greater Minnesota, are screaming for. This is what they need to promote economic development within their districts. So this particular amendment, the A73, would create this tax credit, refundable tax credit program, and it would use the money from Chair David's tax bill by deleting page 10, section 5, and page 30, section 15. And those are the provisions in the underlying tax bill that are the Technology Corporate Tax Benefit Program. Now that's a new program that's just coming forward now in Chair David's bill. So it's not like you have to steal money from some existing program somewhere. You're simply eliminating this net operating loss provision in the underlying bill and using those dollars instead to fund economic development across rural Minnesota. So with that, Mr. Speaker, members, I would encourage a green vote.
The member from Fillmore, Representative Davids.
I'm with Simonson.
Further discussion to the amendment. Representative Kresha.
Thank you, Mr. Speaker, and thank you, Representative Simonson. I know you've been a big supporter of broadband, and while we had it in the jobs and tax bill, the jobs bill, and we had our opportunity to move it there forward, I think it's good that we're doing it here as well. And I'm hoping that we can get you on the final vote as we take money out of the state government and put it into taxpayers' hands so they can get more access to broadband. So I encourage that we do a yes vote on this as well.
Member from St. Louis. Member from Wabasha, Representative Drazkowski.
Thank you, Mr. Speaker. Members, I'd encourage a no vote as we look at what is happening here. Government is taxing people, taxing job providers all across the state, including those job providers that build out our private broadband. They're accumulating the money here, and Representative Davids and I still will work together real well. So we accumulate their money here in St. Paul and then go out and believe that government can engineer the development of a broadband system throughout the state. This is a wrong function for government to be involved in. I encourage a no vote. Thank you, Mr. Speaker.
Member from St. Louis, Representative Simonson.
Thank you, Mr. Speaker, members, and Chair Davids, I certainly appreciate your agreement with me, and I hope that continues as we go forward here this afternoon. But with that, Mr. Speaker, I would withdraw the request for the roll call.
The roll call has been withdrawn. Any further discussion on the A73 amendment to the amendment? Representative Mariani, do you seek recognition or are you just standing behind your desk? No? Okay. Seeing none, all those in favor, please signify by saying aye. Aye. Opposed, say nay. No. The motion prevails. The amendment to the amendment is adopted. There's another amendment. The clerk will report the amendment.
Marquardt moves to amend House File Number 848, the Linchesky amendment, as follows, and the amendment to the amendment is coded A76.
The member from Clay, Representative Marquardt.
Thank you very much, Mr. Speaker and members. I'll withdraw that amendment.
Representative Marquardt withdraws the A76 amendment. The clerk, there's another amendment at the desk. The clerk will report the amendment.
Simonson moves to amend House File moves to amend the Linchesky DE2 amendment to House File Number 848, and the amendment to the amendment is coded A66.
Member from St. Louis, Representative Simonson.
Thank you, Mr. Speaker and members. Members, this particular amendment is an opportunity to build on Representative Linchesky's underlying amendment and provide some real sustaining tax relief for middle-class Minnesotans all across Minnesota. Essentially, what this amendment would do is that it drops certain provisions from Chair David's bill, such as the changes to the estate tax, state general levy tax, changes in local government aid, health premium tax credit, extension of K-12 credit to private school tuition, transportation article with a dedication of taxes, vapor products tax change, repeal of aquatic invasive species aid, legacy funding of PILT for acquired land, and federal taxes on tax incident study. It drops those provisions from the underlying bill. But more importantly, what it does is it gives you an opportunity to vote on some real tax relief for Minnesotans, because what we have in the underlying bill is really kind of tax relief for large corporations, many of which don't even live here in Minnesota. But under this provision, this particular amendment, you're allowed to faster phase in of Social Security tax exemption from the 5 years that you have in the underlying bill to 4 years in the minority report. Your income tax exemption increase, which is temporary in your bill, you know, this property tax relief that you're claiming for middle-class Minnesotans, the one that you blink off after 2 years, but your corporate special interests get to enjoy their tax rate into perpetuity, this one flips it, okay? This is the amendment that you want to vote for if you're for middle-class Minnesotans and you want their tax relief to go forward. If that's what you want, if that's who you support, if that's who your constituents are, this is the amendment for you to vote on. It changes the dependent care credit, increases the income at which the credit begins to phase out from $44,000 in the House bill to $100,000. And thank you, Representative Bernardi, for carrying that original bill. Makes 3 changes to the working family credit based on the governor's proposal. Increases the credit rate so that families, actual Minnesota families, will reach the maximum credit sooner at lower levels of earned income. It increases the income at which the credit starts to phase out and decreases the phase-out rate for families with children, so that families, real Minnesota families, start to have the credit phased out at higher levels of income, and the phase-out will extend into higher income ranges. It extends the marriage penalty relief in the credit beyond tax year 2017, when it was currently scheduled to expire. Under these provisions, members, 287,000 returns will get larger credits, and an additional 30,000 returns would qualify for a credit that aren't going to under Chair David's bill. Senior Citizen Property Tax Deferral Program, okay? Senior citizens, these are the ones that you have told us time and time again that need protection, that need to feel this relief from government, lower taxes and things like that. This proposal, which is the governor's proposal, lowers how long a homeowner needs to own the home to qualify from 15 years all the way down to 5 years, allowing more seniors to qualify. This amendment has real property tax refund and homestead credit refund changes. This is where the rubber meets the road, is with this amendment, because you can offer all the corporate tax breaks that you want, and you can tell us all day long that that's somehow going to trickle down into real Minnesota families, but the reality is that these are the provisions that you want to support if you're for middle-class Minnesota. This amendment increases aids to local government, restores the local government aid that's being removed in the underlying bill. It adds additional aid to the border city enterprise zone from $1 million annually to $2 million per year. Some of my favorite provisions, two of my favorite provisions in this particular amendment are this tax credit for laid-off miners. And we have heard many times from our range delegation about what's happening on the Iron Range with the result of the economic changes in the steel industry. And if there's one thing that we can do, if there's one thing that we should do, forget about the politics and come together and support people that are being laid off. This gives you an opportunity to do that. Provides a refundable income tax credit for laid-off miners equal to 25% of their unemployment benefits. That's the kind of thing that I want to support. That's what I came down here for, is to help real people. It also requires American steel to be used for public projects, and it's high time that we did this. We spend too much time debating silliness things when we can debate real things that make real impacts to real Minnesotans, and this is an opportunity to do that. So this amendment, members, Mr. Speaker, is a good amendment if you're for middle-class Minnesota. If you're not for middle-class Minnesota, then you definitely want to vote red on this amendment. I encourage a green vote, and Mr. Speaker, I request a roll call.
A roll call being requested, and seeing 15 hands, there will be a roll call. The member from Fillmore, Representative Davids.
Thank you very much, Mr. Speaker and members. I would respectfully request a red vote.
Further discussion to the Simonson amendment? Seeing none and hearing none, the clerk will take the roll. Members, we are under call. Please vote. The clerk will close the roll. There being 65 ayes and 68 nays, the motion does not prevail and the amendment is not adopted. There's an amendment at the desk. The clerk will report the amendment.
Daphne moves to amend the Lechewski amendment to House File Number 848, the second engrossment as amended, and the amendment is coded A71.
Representative Daphne, to your amendment.
Thank you, Mr. Chair and members. Members, as Chair Davids explained earlier, we've had 2 hearings on this bill. It's been pointed out by others that the House File 848, the GOP tax bill, contains no property tax relief for middle-class Minnesotans. That in the face of a $2 billion surplus, the House GOP can find $1.5 billion in the next 4 years for business tax cuts, and not a dime for middle-class Minnesotans in property tax relief, in renter's credit, or in the programs that they rely on and that the business community relies on, local government aid, township aid, county program aid. This amendment, the A71, increases refunds for homeowners and renters across the state, increases local government aid, county program aid, and township aid. Keep in mind, Representative Backer had an excellent bill reflected in this amendment where he brought forward the 25 rural Minnesota counties that are losing aid because in county program aid because they get no tax base equalization aid because of the current dynamics in the property tax system. This keeps those counties whole and goes beyond in funding county program aid, so greater Minnesota residents, greater Minnesota farmers, greater Minnesota business people can see the sort of property tax relief they need and receive the sort of public services from their county that they need. It also returns underlying local government aid cuts in House File 848 back up to base and is paid for by eliminating by reducing the phase out of the state CI tax to a level more along the lines that Representative Hertas had proposed. Members, it's time we stand up with one voice and work for middle-class Minnesotans. I ask for your voice. I ask for your green vote. Mr. Speaker, I ask for a roll call.
A roll call being requested. And seeing 15 hands, there will be a roll call. Further discussion to the Davney amendment? The representative from Fillmore, Representative Davids.
Thank you, Mr. Speaker and members. I just want to correct something for the record. It's two things. First of all, when I went through the bill itself, I missed House File 416, an Ansell's bill regarding modification to definition of direct reduced iron. That is in the bill. Also, but to the comments that were just made about $1.5 billion for business tax cuts. Now, I'm not real good at math, but that just doesn't add up. Because, members, if you go to the Social Security subtraction, I don't know of too many corporations receiving Social Security. That's $236 million in the biennium. Military pension subtraction for each year of service, $51,600,000. And you just go down the list. You have Section 529s. You have the credits and deductions all throughout the bill. Minnesota-Wisconsin Tax Reciprocity Agreement. That's all individuals, all individuals. So to make the comment that $1.5 billion is going for business tax cuts in this bill, now yes, maybe with the CI down the road, you'll have, but a lot of the businesses that are going to receive that are sole proprietors also. So in this bill, a large majority of the money goes to individuals. This bill as it is great tax relief for middle-class Minnesotans, members, and so I would again respectfully request a red vote.
Further discussion to the Davney amendment. Representative Davney.
Thank you, Mr. Speaker. Mr. Speaker, the proposed phase-out of the statewide CI levy put in to assure tax fairness in 2001 in Chair Abrams' tax bill, if phased in immediately, would be a $1.698 billion tax cut for Minnesota businesses and not a dime for average Minnesota taxpayers. The A71 amendment means increased property tax refunds for your homeowners. It means increased renters credit for your renters, with an emphasis, of course, on the seniors and disabled who rely on renters credit for those checks to help them pay the property taxes that they're paying in their rent each and every month. It means township aid, so our smallest units of government who only succeeded in getting this aid reestablished 2 years ago get a little bit more to deal with the roads and deal with the issues that they face. Local governments across the state, the over 700 local governments, 770 cities across the state who receive local government aid, get reliable, consistent funding to make sure that they can provide the sort of public services, the police, the fire, the roads, the parks, the libraries that Minnesota not only relies on, but that the Chamber of Commerce testified before the Property Tax Division that business relies on for a strong business climate. I already spoke to the 25 counties that will benefit because they don't currently receive the full county program aid, but all 87 of our counties benefit. I ask for your green vote on the A71 amendment for middle-class Minnesota taxpayers.
Representative Drazkowski.
Thank you, Mr. Speaker. Members, I encourage a no vote on this amendment. Members, the state general tax, as identified in the tax incidence study that is conducted every year, is identified as one of the most regressive taxes we have here in the state of Minnesota. This is a regressive tax, taking more money from the poorest of the poor, that when our job creators are running their businesses out there, whether they're the smallest business in the middle of the smallest town or any business in the middle of Minneapolis, they are providing not only jobs, but they are that tax is being brought down to the consumers. The consumers pay the tax in the form of increased costs of goods and services, one of the most regressive taxes we have. And members, when we went around the state, one of the places we went to was Aiken. We went up into Aiken County, and I met there with, I don't know, there were probably 40 people or so at that meeting that day. And we met with several people, and several of them talked about how oppressive this state business property tax is to them. Now remember, they're paying this state property tax in addition to all the property tax that these businesses are paying for schools, for their city, and for their counties. And on top of that, they have this huge state property tax that amounts to anywhere from 25 to 40% of their overall property tax burden. Now, members, I think it was handed out to you, but there's a copy of a property tax statement that came around. And this is from the Westerland family. If you take a look on the back of the sheet, you'll see their business located at Melmo, right along Lake Mille Lacs. This is a Sunrise Cafe. So Representative Davney's amendment is saying, Sunrise Cafe, you can't have property tax relief, because that's what House File 848 provides. Property tax relief to all of the Sunrise Cafes throughout the state of Minnesota. And if you see there's a circle on the picture. It shows the middle of winter, one single customer at the business, at Melmo. A single customer. Now this is a family business, multi-generational. It's a restaurant. It's a bait shop. They sell gas. They sell local groceries to people. You can get your fishing license there. We've got these businesses all over rural Minnesota. All over rural Minnesota. In this, so what's the valuation of their property? Turn it over. $464,000, members, is the value of the Sunrise Cafe at Melmo. Under House File 848, they would be exempted from their commercial and industrial state business tax. If you look at the property tax statement, $4,283 in 2015. Members, that's 35% of their tax. 35% doesn't go to their schools. It doesn't go to their Melmo. It doesn't go to Aiken County. It comes to the state of Minnesota, where it is accumulated or projected to accumulate over the next year, over the next 2 years, by over $2 billion or nearly $2 billion too much in taxes that we are expected to accumulate here. So what does the Westerland family do? How do they pay off this tax? Well, they sell pies, members. The Sunrise Cafe sells pies. It's estimated they'd have to sell 800 pies a year. 800 pies a year at the Sunrise Cafe just to pay the state business property tax. Members, let's stop taking the future money of the Sunrise Cafe. Members, the pies have not even been baked yet, and state government is already eyeing up the money. Let's leave them alone. Support House File 848. Members, please defeat this amendment. Thank you, Mr. Speaker.
The representative from Hennepin, Representative Lincheski.
Well, thank you, Mr. Chair. And Representative Dabney, thank you so much. Chair Drazkowski, I hope you'll take another look here at Representative Dabney's amendment, because much of what you just said does not apply to the amendment. Representative Dabney's amendment keeps the exclusion for the small business. So that whole item about how many pies you have to sell, Representative Dabney has included the business tax, property tax relief for small businesses. What the difference is, members, in Representative Dabney's bill and Chair David's bill is this is the time where all of you can choose to, in addition to providing small business property tax relief and cabin tax relief, you can do homeowner property tax relief and renters property tax relief, and you can fund local government aid, and you can fund county program aid, and you can increase township aid, all of which you cannot do when you vote for Representative David's bill. So members, what Representative Dabney is doing is removing the commercial industrial property tax relief for the large corporations. The large corporations. So the small businesses, the mom and pops that people like to talk about when they talk about business property tax relief are in the Dabney amendment. So I don't know, I actually have a lot of those big businesses in my district. So I'll have to think a little bit, Representative Dabney. But for all the folks who have the small business and the lower valued property taxes, particularly in greater Minnesota, this works great for you members. So I hope you're really reading the amendments. If you have more questions before you vote, you might want to go talk to Representative Dabney, because what's happening here is there is property tax relief for small business, as Representative Loeffler has been an advocate for years and carried those bills, and Representative Hertas. That's in here. But what you get to do is increase local government aid, increase county program aid, increase township aid, and give homeowners more property tax refunds, larger property tax refund. 95% of your constituents benefit from this program. And for folks who rent their home, there's increased property tax refunds from them as well. So members, I strongly urge you to vote for Representative Dabney's amendment.
Representative Drazkowski.
Thank you, Mr. Speaker. Thank you, Chair Lincheski. As a matter of fact, Representative Dabney's amendment still leaves the Sunrise Cafe on the hook. So, members, under the amendment, no longer does the Sunrise Cafe have to bake and sell 800 pies in order to pay their statewide business property tax. Under the amendment, they still have to bake 560 in order to pay their statewide property tax. Encourage a no vote. Thank you, Mr. Speaker.
Further discussion to the Dabney amendment. Seeing none and a roll call being requested, the clerk will take the roll. Members, we are under call. Please vote. Members, we are under call. Please vote. Members, we are under call. Please vote. clerk will close the roll. There being 65 ayes and 68 nays, the motion does not prevail and the amendment is not adopted. There's an amendment at the desk.
Bernardi moves to amend the Lincheski Amendment to House File Number 848, the second of Grossman as amended, and the amendment to the amendment is coded A75.
Representative Bernardi, to your amendment.
Thank you, Mr. Speaker. It really does feel like an opportunity and a privilege today to be here before the House of Representatives, to be standing up for working families and middle-class families, not only in my district, but in the state of Minnesota. My amendment that I'm bringing before you today focuses on working families. Families are making middle-class incomes in our state of Minnesota. It is in this bill already to have a small amount, but it phases out for families making over $44,000. My amendment focuses on families that are making up to $100,000. In the state of Minnesota, our House researchers say that the median family income is over $70,000. I hope that you join me today in standing up for middle-class Minnesotans. In Minnesota, we have the third highest daycare costs in the country. It costs $900 per average for each child to pay for daycare for families. This is a big expense in a family budget. So I encourage you to join me in standing up for middle-class families and working families, and I ask for a roll call. Thank you.
A roll call being requested, and seeing 15 hands, there will be a roll call. Discussion to the Bernardi amendment. The member from Fillmore, Representative Davids.
Thank you, Mr. Speaker and members. Please vote no.
Further discussion to the Bernardi amendment. A roll call being requested. The clerk will take the roll. Members, we are under call. Please vote. Members, we are under call. Please vote. The clerk will close the roll. There being 61 ayes and 72 nays, the motion does not prevail and the amendment is not adopted. There is an amendment at the desk. The clerk will report the amendment.
Moline moves to amend the Lincheski Amendment to House File Number 848, second of Grossman as amended, and the amendment to the amendment is coded A77.
The member from St. Louis, Representative Moline, to your amendment.
Thank you, Mr. Speaker and members. And this amendment really is about our priorities and what our priorities are here in Minnesota. And I want members to understand what the proposed changes in the estate tax in the underlying bill mean for Minnesota. And so what this amendment does to the Lincheski Amendment is it deletes the estate tax article and uses that revenue savings to increase the long-term care credit by $8.7 million, increases the threshold used to calculate the student loan credit to increase that credit by $25 million, and increases the per child amount for the K through 12 credit so as to increase the credit by $25 million. I want all members to understand what the current law is in regards to the Minnesota state tax and who pays into that and what the proposal is in the David's bill. Members, currently the exemption for state tax is $1.2 million. It's going to be phased in up to $2 million in 2018. The proposal in the bill is to exclude estates worth up to $5 million. Members, currently, statewide, only 800 heirs of estates pay the estate tax. Only 800 heirs of estates pay the estate tax statewide. If the proposal in the David's bill becomes law, only 100 heirs of estates will pay the estate tax statewide. 100 heirs of estates statewide will pay the estate tax under the David's bill. Members, if you look at the numbers of what this is going to cost the state of Minnesota for a tax break for 700 estates, I'm just looking at the spreadsheet here. In fiscal year 16 and 17, $60 million for 700 estates, tax break. In 18-19, $123 million tax break for 700 estates. Members, when it's fully phased in 5 years, it's a $347 million tax break for 700 heirs of estates statewide. Now, I'm just trying to figure out why this would be our priority when we have a $2 billion surplus. Members, rural members especially, if your leadership told you that this was about farms or small businesses, it is not. Farms and small businesses are already excluded up to $5 million. I'll tell you what the difference is. Under current law, heirs who inherit a farm up to $5 million have to homestead that farm and continue to farm for 3 years in order to get that exclusion. The law change happens, that's not a requirement. They don't have to keep farming for 3 years. They could sell it off to a developer the next day. That's the only difference. Farms and small businesses are already excluded up to $5 million. So if your leadership is telling you that this estate tax break is about farms, it is not. There was a pundit that made a statement that, so nationwide the estate tax is about $5.43 million right now. A pundit that made the comment, more Americans have been to the moon than farmers paid the estate tax in 2013. NPR did a political fact on that and it came out as true. Nationwide, more Americans have been to the moon than farmers paid the estate tax. And members, I just want everybody to understand what choices are before us right now. I was hoping that Representative Baker was going to be on the floor because in Kandiyohi County alone, in Kandiyohi County, 737 people are going to be losing Minnesota Care in the bill that Republicans passed yesterday. More people in Kandiyohi County alone will be losing Minnesota Care than heirs of estates will be benefiting from this multi-million-dollar estate tax break that's in the bill. Members, that should not be the priority of Minnesotans. We should be fighting for the everyday Minnesotans. Most people are not fortunate enough to inherit a multi-million-dollar estate. And I think the fact of the matter is, Representative Hancock, if you walk into Baudette High School, I don't want you to have to tell students, you know, sorry you had to lay off a teacher, but we had to give an estate tax break to heirs of a multi-million-dollar estate. What you have in front of you is an amendment that says you're going to at least give those parents some relief. You're going to increase their K through 12 credit on those students instead of giving an estate tax break to multi-million-dollar estates. Representative Backer, you know, I don't want you to have to talk to those students at the University of Minnesota Morris and have to tell them, sorry your tuition's so high, sorry you can't get a extra credit for your student loan, but we had to give a tax break to heirs of multi-million-dollar estates. In front of you, you're going to have an amendment that allows you to give them an increased higher education credit to help alleviate some of their debt and burdens that they have from gaining a higher education. Members, I think that this is a really easy vote that says what our priorities are here in Minnesota, and it's investing in everyday Minnesotans. It's giving a credit for K through 12 students, higher ed, and long-term care, so that Representative Baker doesn't have to walk into the Wilmer VFW and tell the seniors sitting there that he couldn't give them a long-term care credit increase because heirs of a multi-million-dollar estate needed a tax break. Members, I'd ask for a roll call and ask for your support.
A roll call being requested, and seeing 15 hands, there will be a roll call. The member from Fillmore, the representative from Hennepin, Representative Earhart.
Thank you, Mr. Speaker. You know, I remember debating this type of issue with another guy from another person from the range. His name was Tommy Rakavina. And you know what this is? This is class warfare. Pure and simple. We're going to pit one class against another here. And they should be up there because of certain reasons which I'm going to tell you about. They should be helping the folks who provide the leadership in the areas where they are producing the incomes that pay their LGA, for one thing, up there. You know, the breadbasket of this state is the metro area. As a matter of fact, in the 7-county metro area produces 66.8%, and this is from 2010, of the sales and income tax. 32% of that was paid by Hennepin County. Now that's the chief monies that the state pays LGA and other things out of. Now they want to bite the hand that feeds them again, which is the same thing they were doing when we changed the tax structure on education in 2001. 2001, where the Western Metro and my district were being taxed to send money to the range to support them. And we weren't getting anything back. For years, we didn't get any school tax money except what we raised ourselves. And we finally worked that around because I was chair of the property tax committee at that time, that everybody got an equal amount under the general education fund. We were still sending our money up there, but we were getting something back. And those same productive people that are producing the income and the property and the sales tax monies are still living in the western suburbs. And they're still sending money to support the range and other areas outstate on their LGA. For instance, these cities receive no LGA, just a few of them: Egan, Eden Prairie, Edina, Lakeville, Maple Grove, Minnetonka, and Plymouth. No local government aid, but they're still kicking in more of their taxes in the form of sales taxes and income taxes than other areas of the state. Now, if we look at what Hibbing is getting from the state, from the monies that we're creating, its certified levy of this year is $8 million. Now, I don't object to helping people that don't have the tax base to help themselves. I recognize that that's a function of good government and one Minnesota. But those people should not now be picked on because they are trying to continue in leadership roles as business and professional people by shutting down one way they can stay here in this state. And when I go to someone's door and they say, you passed a gas tax, I'm leaving, and we got that out of the way, and now we are not allowing them to equal the federal amount that they're being taxed. So you move to Florida, you don't have any state tax, but you're paying a federal tax. And here we could do that same thing. Now, not everybody wants to get out of here, and some people will stay and pay that. You're listening to 800 people a year, and they're paying an estate tax on average. That it seems to be the, what we have going on right now is the fact that there are more people rushing to the day when they will be paying an estate tax. And there'll be more people bailing out of here to go down to Arizona, Texas, Florida, where not only the weather is nice, but they don't have to, they can pass more of their estate on. So to pull class warfare once again, I think it's wrong. And so I think you ought to vote this amendment down and let this be one Minnesota again. I don't object to spending money to Loeffler's district, if that's what she wants, or the range. But there are somebody's got to speak up for this. And we went through this when we were doing the tax for schools in the turn of the century in 2001.
The member from Hennepin, Representative Anderson S.
Thank you, Mr. Speaker. Would Representative Fisher yield for a question?
Representative Anderson, it does not look like Representative Fisher is on the floor.
Okay, thank you, Mr. Speaker. We'll just have to do without the information I was going to ask from him. Representative Fisher brought forward a bill to the tax committee, and he had with him a family business. I think it was three or four brothers that had started this business together, and they had grown it into a very successful operation. Their children are part of this business, and their children's children are part of this business. And what was compelling to me is sitting there and listening to the testimony from these brothers, saying to us, when I die, everything that I have worked so hard for, I cannot share with my family. And one of the things that they pointed out that was so key to me, and that I've heard so often here at this Capitol, is that those children, they didn't earn that, they didn't build that, they don't deserve that. And they said, that's a bunch of bunk, because it's our children that are working side by side with us every single day to make this operation work. I know we have a lot of people that have family operations here in the Capitol. And you know, without your family, none of your success would be possible. And so when we have members that stand up on the House floor here today and say, you can't do this, that this is wrong, that flies in the face of what our country is all about, what our founding fathers wanted for us to achieve. I want to thank Representative Fisher for bringing forward his bill. I thought his comments on this issue were really interesting. I pulled this up from his legislative update. He says, as I serve as your state representative at the Capitol, one of the primary drivers for me is to make sure everyone is treated fairly and has a chance to get ahead. Wow, imagine that, a chance to get ahead. To get a break and say, hey, I can make something out of this, and I can turn this around and help my community. When you think about all those small businesses, who is the first person you go to when you need funds for that Rotary Club? When maybe the band wants to go on a trip? When maybe there's some equipment that needs to be purchased for some entity? It's that family business, folks. The folks that have worked hard, where their family has stood by them when it means that you're eating supper at 9 o'clock because that's the only time that you can eat supper together. So I find it a little hard when I hear members saying, yeah, that's not okay. How dare they be successful? Representative Fisher goes on to say, it's for that reason that I introduced legislation to raise the state's estate tax threshold to bring it in line with the federal government base of $5 million. Here's the line that gets me. While people who have made a great deal of money in their lives deserve to pass most of that along to their heirs without penalty, it's important people have an opportunity. Members, I ask that you stand with him, to Representative Earhart, for all of those families that are here in the state of Minnesota that just want to achieve that American dream, that just want to be able to share their success with their family and their community.
The member from Pope, Representative Anderson P.
Thanks, Mr. Speaker and members. And Representative Anderson, thank you for those words. You are spot on talking about the importance of family farms and family businesses as they work together. And one of their top goals is to pass on that operation to the next generation. I'd just like to make a bit of a correction to the comment made that the farmers already have this big $5 million exemption. Well, that's true in many cases, but I've talked to several farmers that have children, but they aren't involved in the farming operation. And we have a couple of pieces to our bill that say you have to keep it in the family and it has to be farmed for 3 years. And those folks as well want to pass along that farm to their kids, but they may not be involved in farming. And this provision in the bill would help those folks as well to pass on their operation and keep it in the family. So what we can do to simplify our tax code and to codify with federal measures, I strongly support, and thanks Chair Davids for your work in this.
The member from Itasca, Representative Anzels.
Thank you, Mr. Speaker. Mr. Speaker and members, my, oh my, oh my. It is shocking that members of this House would have difficulty seeing the merit in my fellow Iron Range colleague, Representative Moline's very common sense amendment here. Members, this is Minnesota. Minnesotans share. Members, Minnesotans are compassionate. Members, Minnesotans help out the farmer. Minnesotans help out the miner from the range. And all of this is reciprocated one way or another, and we all get on with the business of trying to achieve prosperity. Prosperity is a good thing. We all aspire to be prosperous and to seek prosperity for our children. But you know, along the way, state government has the opportunity to even things out a little bit and share. And that's what Representative Moline's amendment is all about. Sharing, bringing a little more balance, Chairman Davids, bringing a little more balance to your bill, which is out of balance. We all know it's out of balance. If you're prosperous, wealthy, doing well, you do even better. If you happen to be on the lower end, life has dealt you a couple of bad cards, you get laid off, very little prospect for another job, and you're faced with having to leave the rural area that you love and move to the city to find a job. That's what Representative Moline is talking about here. And lastly, please think before you vote on the Moline amendment. If you support silk stockings, you will vote no. You don't want to share. If, on the other hand, you support smart wool, you'll vote green.
The member from Hennepin, Representative Loeffler.
Well, thank you, Mr. Speaker and members. And I was kind of sitting trying to put that 800 estates a year into perspective. And you know, Minnesota's kind of big, but I thought, well, how many people die a year in Minnesota? So how many people who die would benefit and how many wouldn't? And so I just Googled, you know, deaths in Minnesota, and the health department comes up with something. And it's kind of odd because they give you a count per day on the site that popped up. And on average, we have 112 deaths a day in Minnesota. Now, the #1 cause of that is cancer at 26. And if we achieve the goals I talked about yesterday on cutting our cancer diagnosis in half through our statewide health improvement program, that'd be down to 13, and we'd be at an average, just a nice even 100 people a day. But we're at 112 deaths a day, and you multiply that times 7, and you get 784 deaths a week. 784 deaths a week, which is kind of almost exactly the 800 estates that would benefit from this huge tax break. And that means that if all those super, super wealthy, privileged, talented, lucky, whatever wonderful things happened in their life to make them this wealthy and successful, and hopefully they shared that with their community and with others, if they all died in the first week of the year, then all the rest of the people of Minnesota who would not get this estate benefit, this tax benefit, would be the rest of the people who died in the rest of January and in February and in March and in June and July and December. That's how many people's estates would benefit from this particular tax break. And their tax break is going to have an impact on all the other people and their heirs who die the rest of the year. Because the money that comes out of our state treasury to give a break to those estates would otherwise go to our school districts and school aids, or it'd go to support our seniors in home care or nursing homes, or people with disabilities, or protecting our environment, or fixing our roads and making sure our bridges don't crash. But instead, we're debating whether or not the 700 wealthiest people who die every year should get that much more benefit at the expense of everyone else and their families and their communities. And I just can't vote for this. I hope you'll join me in voting no, or voting for Carly's amendment and voting for priorities that reflect the real interests of middle-class families, hardworking people who just don't happen to be the very top and at the end of their life. So please join me in voting yes on the amendment to the amendment.
The member from Ramsey, Representative Lash.
Thank you, Mr. Speaker. Members, in the old world,
families pulled every string they could to keep the wealth concentrated in the family line, because this was your legacy. And your legacy controlled so many things, like the noblewoman you could marry your son off to because she had a lot of assets, or how proud you could be of the size of the mansion or the land that your kids could buy because you concentrate wealth. Some in the old world even went so far as to carry this on even after death. So you see these History Channel specials of pharaohs who get buried with boats and their slaves and their animals and all of their treasure. And then there's furthermore evidence in Europe of these burial mounds of the Celtic kings and Celtic chieftains who get buried furthermore with all their household assets and their slaves and their animals. But people have figured something else out since then, members. You can't take it with you. I mean, that's what my folks told me. You can't take it with you. For some reason, there are folks here that think you can, so they want to reduce the tax on dead people. Now, others would argue, say, well, we're not really doing that. We're actually reducing the tax on the people who would inherit it because they're going to get the money. But I thought you Republicans were all about working for your money, working for what you'd earn. Not earning other people's money. This is other people's money. So here in America, across the pond, because of the way they controlled things in Europe, there was this giant sucking sound of all the talent sweeping across the Atlantic and building the great nation, the greatest nation in the history of the world, the United States of America. We attracted talent because we knew that those old ways in Europe, the things they did, concentrating the wealth in a few family lines, didn't guarantee opportunity for the kind of people we wanted to attract. And folks know that you could earn what you had here by the sweat of your brow, and it wouldn't be like the aristocracy in Europe. This amendment is about American aristocracy, trying to maintain wealth in a few family lines for people who didn't work for it. Now you could say, well, maybe their families participated, or their children participated in the family business, so they helped out their dad or their mom who actually earned the money. Well, then that's on them. Then you're talking about the equality of the tax system for those people who did the work, for what they earned by the sweat of their brow. Not what dad did, or not what mom did, or not what grandpa did. Members, reducing the estate tax for people is not American. It's a vestige of an old system. And those of us who like progress, who like what America represents, who believe in the opportunity for everyone to achieve if they work hard, that's what we've created in this country. And by reducing estate taxes on rich people for their rich kids and their trust fund babies is not what we're all about. Vote green in the Molina Amendment.
The member from Hennepin, Representative Hertas.
Well, thank you, Mr. Speaker. Great history lesson, great lesson on Keynesian economics. I agree with you, Representative Lesh. Maybe it is something that is an aristocracy, but ironically, the estate tax just does just that. It perpetuates the aristocracy because it knocks everybody else down at the knees as they're trying to build some familial wealth. Because the wealthiest of the country, no estate tax, no amount of financial planning, all of the structure that exists for the very wealthy, they can avoid the taxes. You know, the numbers just don't add up. So there's 800 people who are stuck in Minnesota and get nailed with the estate tax. I mean, the numbers don't add up. Business Magazine right here says there's 7.1 million millionaires in the country. If you divided that out equally, if all states were equal, which they're not, but nonetheless, that would be 142,000 millionaires. According to Business Magazine right here, it says that 1 in 16 households is a millionaire in the United States.
When I was as young as Representative Moline, $1 million really amounted to something. It really meant something. With agricultural land at the prices that they are right now, at $5,000, $6,000, $7,000 an acre, a $5 million estate in a farm really was something that was worth it, something that would get you to that level right away. But Minnesotans share the wealth. We just heard how they share the wealth. Well, I tell you, folks, if you have to share the wealth through the force of law, you're not free to refuse. "700 people. Representative Earhart, you're correct. It is class warfare. Why should we not be encouraging people to want to build the American dream? You're taking away a carrot, you're taking away a nugget. It's really unbelievable how you pit groups of people against other groups of people. I thought the object of government was to protect the minority. This minority you don't care about. It's still a minority. Vote red.
The member from Cottonwood, Representative Hamilton.
Well, thank you, Mr. Speaker. And I was just on the phone with a farmer from back home. And this is very, very real. First of all, farming and ranching is very capital intensive, and it's relatively low margins with liquid assets such as land and barns. And over 88% of all farm assets are illiquid, and they're family owned, and they are subject to estate taxes. And excessive state taxes, tax bills almost assure that breakup of multi-generational family farms and the loss of valuable farmland to development. It will cause this. And like I said, I just got off the phone with a farmer, and you're talking about losing a loved one. In this case, he lost his wife over a year ago to cancer. And he said, Rod, we are still struggling, still battling through this. Because the way that it was set up, they are taxed to the point where he's going to have to sell off multiple acres of farmland in order to pay these taxes. And so, like I said, they're relying on this income that they once had, and now his wife passes away. They have this huge tax bill, and now they're going to have to sell additional assets in order to pay that tax bill. This is very, very real. So I want to thank the tax chair. Thank you, Representative Drazkowski, Chair Drazkowski as well, to address this very important issue. Thank you.
The member from St. Louis, Representative Moline.
Well, thank you, Mr. Speaker. And I wanted to respond to Representative Hertaz, who gave an impassioned speech and then left the House floor, to let him know that $1 million still means a lot to a lot of Minnesotans. Including in my district, Itasca County, the average household income is $46,000. Chippewa County, $46,000. Big Stone County, $45,000. That's the annual household income. Aiken County, $41,000, the annual household income. To those Minnesotans, the ones that I represent, and the ones that a lot of you represent, $1 million does still mean a lot to them. And I want to clarify this farm issue because, Representative Anderson, you're right. You are changing the law. The proposal is to change the law so the heirs of the farm don't have to farm. They can sell it off to a developer or do whatever they want, and they still get the $5 million exclusion. Current law is farms get a $5 million exclusion, but the heirs have to continue to farm it for 3 years. And so it sounds like what Representative Anderson wants and what the Republicans want is we're going to give farms that $5 million exclusion, and then the heirs can do whatever they want with it, sell it off to a local housing development or whatever they want to do. Also, members, the comments I made earlier, so the federal exclusion is $5.43 million. That's what the Davids bill goes up to in the state of Minnesota. Nationwide in 2013, only 20 farmers and small businesses, that's both farmers and small businesses, paid the estate tax. Now, out of 20 nationwide, I don't know how many live in Minnesota, but apparently there must be a couple of them because it sounds like Representative Hamilton and Representative Anderson have talked to a couple out of the 20 nationwide. And members, Representative Hamilton passing on an estate to your spouse is excluded from taxation. So if you have a constituent who paid estate tax when his wife died, I don't even know how that would happen. Current law does not require you to pay an estate tax when you pass it on to your spouse. Members, this is a pretty simple issue. What we're talking about here is whether or not we are going to invest in providing opportunities for all Minnesotans, or whether our priority is going to be a very, very, very large tax break for the heirs of a few estates in Minnesota. And, my good friend from Edina, I respect and understand your position on this, I really do. And it obviously differs greatly from mine. But the fact of the matter is, people in greater Minnesota are not going to benefit from this tax break. What's happening in the Republican budget priorities is thousands of Minnesotans are getting kicked off of Minnesota Care in greater Minnesota. Schools are going to be laying off teachers. People are going to have a hard time sending their kids to college, and those are the budget priorities in the Republican proposals that have been brought forward. Despite the fact that you're proposing to spend more than we've ever spent in state history, and despite the fact that we have a $2 billion surplus. Members, I would just ask that you get your facts straight on this and what it means for Minnesota, and would ask for your support. Thank you.
The member from Hennepin, Representative Davney.
Thank you, Mr. Speaker and members. Representative Moline, thank you for trying to bring us back to ground. Thank you for trying to bring us back to reality. Members, one of the members of the party opposite said, "Oh, I remember when $1 million actually meant something." Because apparently for that side of the aisle, $1 million is hardly even worth mentioning today. Well, let's get back to reality. Let's get back to reality, members, with maybe some facts. Now, last night, we had a little problem with a $285 million hole in the Health and Human Services budget. Because facts don't matter very often, Minnesota, when we debate here on the House floor. But some of us like facts just the same, because that's the lives of our constituents. That's the lives of our neighbors. Members, the average Social Security payment in the United States today is $1,294 a month, just under $1,300 a month for the average Minnesotan, for the average American. There are over 11 million IRA accounts opened in the United States. The median balance, $25,000. $25,000. If you're age 55 to 64, some of us qualify. The average American has $103,000 in retirement savings. Not $1 million, not $2 million, not $3 million, not $4 million, not $5 million. They've got $103,000 ready for the rest of their lives. Members, if you're prudent and follow the recommendations of the financial industry experts, you only withdraw 4% of your retirement savings to make sure that they're there, because, you know, the deal is you don't know when you die, and you need to plan. Well, members, if you withdraw 4% of $103,000, what the average American is going to be able to do, less than $350 a month. You add that to your Social Security members, and you're asking the average middle-class Minnesotan to live on $20,000 a year. Members, $1 million may not matter much to folks on the other side of the aisle, but $20,000 a year matters to my constituents, because that's what they're being asked to live on. While the property tax cuts in this bill go to business interests in Florida, in Denmark, in Chicago, around the country and around the world, there's not a dime for the average middle-class Minnesotans, so that they can put a little bit more aside for their child's college education, so they can put a little bit more aside for their retirement. Instead, they're financing the 700 wealthiest families in the state for whom $1 million doesn't mean anything. Members, let's come back to ground. Let's come back to reality. Let's come back to middle-class Minnesota. Let's vote green on the Molina amendment. Thank you.
The member from Beltrami, Representative Purcell.
Thank you, Mr. Speaker. Doggone, I wasn't going to talk today. Didn't want to talk about taxes. I still don't want to talk about taxes, and I'm trying to remember how many human beings have been on the moon now, and I can't bring it to memory, but it's like a handful, isn't it? A couple handfuls. But I heard some things that I need to respond to, and the first thing I want to say is, and I've said it a couple of times, and it's something that I believe in very sincerely. We mutually pledged each other our lives, our fortunes, and our sacred honor. Some of you know that comes from Declaration of Independence. I take that serious. And coming upon that, then, the wealth of this country is built on the backs of its veterans, men and women. Not too many rich folks in there, a few of them. One of them got ridiculed to beat hell, pardon my language, Mr. Speaker. His name was John Kerry, one of the few wealthy folks that ever wore the uniform. So, when we talk about how we as Minnesotans, we as Americans are working to make things better for everybody in the state of Minnesota, let's keep that stuff in mind. Yeah, we all pay taxes, and I don't like pay taxes any more than anybody else does. Back in my town board days, and I'm going to get a reputation like Representative Gruenhagen, I suppose. I talk about town board and him and his school board. But back in the town board days, come tax time, I'd take my tax paper in there and I'd ask the assessor, how in blue blazes did you come up with that number? And he always had an answer. And I'd end up paying my taxes, and I'd mutter under my breath as I walked out, and doggone it anyway, but I'm part of this country. I wore the uniform. That's what this is all about. So we figure out how to move things ahead for everybody. And I don't want to put any burden on anybody that's making all kinds of money. More power to them. But remember why you're making that money. The blood, sweat, and tears of veterans and their families. Look it up there. What did that feller Lincoln say? His second inaugural. Let's look after those who have borne the battle and their widows and their orphans. That's all of us. All of us in this room. All of us in Minnesota. It's so important to us. So, the last thing I want to say is I like country music. Some of you know that. And a particular song that I like a lot, and it got a little refrain, and it goes like, why is a rich man doing the dancing while the poor man pays the band? And, we all need to dance a little bit. So let's vote for Moline's amendment. It's a good amendment.
The member from St. Louis, Representative Metza.
Thank you, Mr. Speaker, members. This comes down to choices. Representative Molina has brought us a choice today. We could choose over the next 5 years, instead of spending all this $350 million, giving it back To people who have earned the money, Representative Hertas, no question, these people are hardworking people, just like my family when they came to this country. Well, they were hardworking people, I should clarify. But just like my family, you know, my great-grandfather settled in Nashwauk on my mom's side, started a pasty shop. My great-grandfather on my dad's side started a little bar and worked up near the Sedan underground mine. And they did that so their great-grandson could be here today speaking to you about issues like this. And we can choose to give that $350 million back to those families, or we could choose to put $70 million a year, Representative Creshaw, into broadband for the next 5 years. So we have choices, members. My choice today is supporting Representative Moline's amendment.
The member from Fillmore, Representative Davids.
Thank you, Mr. Speaker. Members, I'm supporting Representative Earhart's provision in the Omnibus Tax Bill. Please vote red.
Seeing no further discussion to the amendment, a roll call being requested, the clerk will take the roll. Members, we are under call. Please vote. Members, we are under call. Please vote. One more amendment. Members, we are under call. Please vote. The clerk will close the roll. There being, Uglin votes no. There being 57 ayes, there being 56 ayes and 76 nays, the motion does not prevail. The amendment is not adopted. There's an amendment at the desk. The clerk will report the amendment.
Isaacson moves to amend the Lincheski Amendment to House File Number 848, the second engrossment as amended, and the amendment to the amendment is coded A88.
Representative Isaacson, to your amendment.
Thank you, Mr. Speaker. This past year, I had the opportunity to door knock many doors, and in doing so, I spoke with many seniors on a fixed income, and many of them asked me for some help. They said they were in a position where their slice of the pie of their income was getting smaller, but the income itself wasn't growing, and that there was more being taken out. They're on a fixed income, so I went to the fine people in House Research and asked for some help in trying to craft a bill that would be supportive of a broad group of folks who are on the fixed income, not looking at just one pension or Social Security, but a broad group of folks on a fixed income at a certain income amount, and asked if we could find a way to help them save a little cash, keep it in their pockets so they can have a little bit more spending money for their bills and their medicine and quality of life. And so came up with two ideas. One was to expand the exclusion and raise it for seniors in their personal income tax, and the second was to offer a second exclusion for property taxes. In the bill, I find a way to pay for it, and I'm happy to discuss that further, but I hope that you'll consider supporting not only my seniors, but seniors across the state with a sensible way to provide some real relief for them. These are the folks that have worked hard all their lives, and now it's time for them to retire, and I'd like to make sure that they can have a little comfort in their retirement. So I hope that you'll support my amendment. Thank you.
Discussion to the Isaacson amendment. Seeing none, Representative Davney, the member from Hennepin.
Mr. Speaker, I'd ask for a roll call on the Isaacson amendment, please.
A roll call being requested. And seeing 15 hands, there will be a roll call. Representative Davids.
Thank you, Mr. Speaker. Members, please vote red.
Further discussion to the Isaacson amendment. Seeing none and hearing none, a roll call having been requested, the clerk will take the roll. Members, we are under call. Please vote. Members, we are under call. Please vote. Members, we are under call. Please vote. The clerk will close the roll. There being 61 ayes and 71 nays, the motion does not prevail. The amendment is not adopted.
Members, we are on the DE2 Lincheski Amendment. Discussion. Representative Lincheski.
Thank you, Mr. Speaker. Members, I would just simply ask for a roll call. I honestly can't recall way back then if I did, so I'd like a roll call, Mr.
Roll
Chair.
call being requested. Seeing 15 hands, there will be a roll call. Representative Lincheski. Any further discussion on the DE2 amendment? Member from Fillmore, Representative Davids.
Thank you, Mr. Speaker. Members, I respectfully request a red vote.
Seeing no further discussion, the clerk will take the roll. Members, the House is under call. Please vote. Members, please vote. Members, we are under call. Please vote. Members, please vote. Representative Pepin.
Mr. Speaker, I move that those not voting be excused from voting.
Representative Pepin moves that those not voting be excused from voting. All those in favor, please signify by saying aye. Aye. Opposed, say nay. Motion prevails. The clerk will close the roll. There being 61 ayes and 70 nays, the amendment is not agreed to. Members, there are no additional amendments at the desk. The clerk will give the bill its third reading.
Third reading, House File Number 848, as amended.
Third reading.
Mr. Speaker, I move that we lift the call.
Representative Thiessen moves removal of the call of the House. All those in favor, please signify by saying aye. Aye. Opposed, say nay. Motion prevails. Discussion. Member from Ramsey, Representative Freiberg. From Hennepin, Representative Freiberg.
Thank you for the clarification, Mr. Speaker. I'd like to talk about a portion of the bill that hasn't generated as much attention as some of the other ones. It's basically the tax breaks for the tobacco industry. Now, this bill would offer the tobacco industry $80 million in tax breaks by repealing the inflationary adjustment for cigarettes, paying tobacco wholesalers to put stamps on their products, and by changing the way electronic cigarettes are taxed. Now, I'd like to focus a bit on that last point. The bill would put a tax on electronic cigarettes, which it calls vapor products, at the rate of 30 cents per milliliter of consumable material. Consumable material is defined as any liquid nicotine solution or other material containing nicotine that is depleted as a vapor product is used. Now, there are a couple ways you could tax e-cigarettes or the fluid used in e-cigarettes. You could apply a percentage of price tax at the wholesale level as current law does. You could have the tax vary by concentration of nicotine in the solution, or you could apply a tax based on how much liquid is in an e-cigarette, regardless of the nicotine concentration, as this bill would do. Now, doing this could have unintended consequences, or I don't know, maybe they are actually intended. But if you impose the tax based on the quantity of liquid, there will be an incentive to include a higher concentration of nicotine so that less liquid is needed and a lower tax is paid. Now, I'm wondering if Chair Davids would yield for a question, Mr. Speaker.
He will.
Thank you, Mr. Speaker. Representative Davids, do you know how the nicotine level in a product like Vuse, which is the e-cigarette brand of R.J. Reynolds, which is the maker of Camel brand cigarettes, generally compares to the nicotine level in liquid that's typically sold at independent vape shops?
Member from Fillmore, Representative Davids.
Thank you, Mr. Speaker. No.
Representative Freiberg.
Thank you, Mr. Speaker. Well, I'm happy to answer the question for you. Generally speaking, products like Vuse have a nicotine concentration level of 48 milligrams of nicotine per milliliter of solution. Now, in contrast, most of the liquid sold in independent shops has a concentration of 12. This means that Big Tobacco's products would be treated more favorably under this bill by a factor of 400%. Now, I wish Representative Metsa were sitting here. I was going to sort of point to him here, but think of the effect that this provision would have on poor Representative Metsa. Now, he told me that he uses both types of products, but this provision would make that Iron Ranger want to purchase only the products manufactured by the biggest corporations. And from what I've heard, Iron Rangers are not fans of big corporations. Now, the system we have for taxing e-cigarette liquid may not be perfect, but surely we can do better than what this bill would do and not give tax breaks to the largest companies and put smaller competitors at a disadvantage. But thinking about it, maybe that relatively overlooked provision in this bill is the perfect microcosm of this bill. This bill leaves Minnesotans behind so that corporate special interests can get further ahead. The bill would permanently eliminate the statewide business property tax, which gives corporations and businesses a multi-billion-dollar tax cut over the next 8 years. Regular Minnesotans, in contrast, would essentially get a $70 tax cut in 2015 that will go away in 2 years. It's Jesse checks all over again. By passing this bill, these primarily corporate tax cuts will be the priority of the House of Representatives. Left behind will be Minnesota students and working families. It's really not that different from putting smaller companies at a competitive disadvantages to giant corporations. It's really not that different from giving a tax break to cigarette users, even though high tobacco prices are proven to encourage adults to quit smoking and keep kids from starting. I urge a no vote on this bill.
Member from Hennepin, Representative Joachim.
Thank you, Mr. Speaker. Members, as it's been said over and over today, this bill is about choices. Choices and the message that those choices send to Minnesota. And it's pretty clear that with this bill, the choice was made to give huge permanent tax cuts to big business and table scraps to the middle-class working families. You've heard a lot from the people on our side of the aisle tonight talking about those choices, so I won't repeat them. I actually want to talk about a small policy provision in the bill that has a large impact and that will be felt in every one of your cities and your districts. And that is Representative Drazkowski's reverse referendum provision on a city's general operating levy. A city's general operating levy is their budget. It's their budget that allows them to provide services for their constituents that those constituents have come to expect and deserve. It plows their roads, it maintains their sewers, it mows their parks, it updates their facilities. It is the number one thing a city council is charged to do. Representative Drazkowski didn't go into detail with this today, but we did in committee. It allows a reverse referendum if a city raises their levy more than $1 over their levy the previous year. Just $1. And requires a very, very small minority to trigger that referendum. A small minority equal to just 10% of those who voted in the last election. Now, to put that into perspective, I live in Hopkins. I was a city council member there. We have roughly 18,000 people. Just shy of about 10,000 of them are registered to vote. I look back 10 years in the election rolls, and this would mean on our high election year, the trigger would be met with 219 people signing a petition. In our lowest election year in those 10 years, it would be 87. 87 people in a city of 18,000. A very, very small minority could overturn the decision of a city council that a majority of the people have elected. Many of you in this chamber have served on local city councils. You know and value the work that you did, and I'm sure you took very, very seriously the trust that your citizens put in you to do that work. When this reverse referendum came up in committee, Mark Haveman from the Minnesota Center for Fiscal Excellence spoke against the provision. He said it would fan the flames of resentment between local governments and state government. And you know what? I agree. I want this body to make sure they understand that this provision sends a very toxic message to your local city councils. It's saying to them, trust me to do the job that you elected me to do, but I don't trust you to do the job I or your constituents elected you to do. Trust me, but I don't trust you. Members, this tax bill is about choices. Choices and the message you send to Minnesota with those choices. No matter how this bill comes back from conference committee, you own the choice that you make when you vote today. It's yours. I would ask you to think about that and to vote no.
Member from Clay, Representative Lean.
Thank you, Mr. Speaker and members. And I do want to start by expressing my appreciation, Chair Davids, for the border city provisions that are in the bill. These provisions and the way they're set up on the ongoing appropriation basis will continue to benefit the 5 border city districts in western Minnesota. And I do want to express appreciation for folks both on the Republican side of the aisle and the DFL side of the aisle for working on this provision on a bipartisan basis, both last session and this session. And I did vote for the division report as it came out of the property tax division onto the full tax committee because of the border city provisions. There were, I did also have some concerns about what else was in the bill. And I knew there were other stops that the bill would take before it got to the floor here today for a debate and vote. And as this bill is in front of us today, I think it goes too far. I don't think we need to break the budget of Minnesota in tax cuts in order to build a better Minnesota. And when the legislature passed tax cuts last session and signed by Governor Dayton, we passed about $400 million in tax cuts. And as we know now, according to a Department of Revenue study, that'll benefit 90% of Minnesotans. 90% of Minnesotans will actually see a decrease in their tax burden here, along with an improved economy. Again, members, we don't need to break the state budget in order to build a better Minnesota for tax cuts. Also, with the tax cut debate, I'm sure some folks may be thinking, well, Representative Lean, are you going to leave out the tax increase? And along with that debate, we of course heard a lot of rhetoric how people and businesses and families were going to be leaving the state because of that. I heard a couple members last session on the Republican side saying, Representative Lean, they're going to be fleeing your district. And I have not seen that to be the case. In the last 2 years, I have not seen that to be the case. In fact, I have seen nothing but growth from Moorhead. Moorhead is a strong, growing, proud community. And I also want to think back to a conversation I had after the 2013 session with a friend of mine who actually served in the legislature for close to 40 years. And granted, he did serve in the Senate, and I do still consider him to be a friend. But he told me, you know something, Ben? When I was first elected in the mid-'70s, up until when I retired, I heard the same rhetoric, the same conversation for the last 40 years, that Minnesota's taxes being too high are going to cause people to leave the state. And he told me if that were the case, the last folks would have left Moorhead, would have left Clay County long ago and shut the lights out behind them. And I have not seen that to be the case. As I have said, Moorhead is a strong, growing, proud community. Members, we don't need to break the state budget on tax cuts in order to build a stronger Minnesota. And over the last couple of years, I've participated in the small business caucus that Representatives O'Neill and Rosenthal have organized and put together. And the first meeting of this caucus we had this year, some folks from the Department of Revenue came in and gave a little presentation and answered some of our questions. And I remember, I'm not going to call out any members or anything, but I do remember a Republican member on the, a freshman Republican member asking the folks from Revenue, can you tell us how much the state has lost in revenue since the fourth tier was enacted because people have essentially left the state? And what we were told is that none. There's no data that says people or businesses leave the state solely because of taxes. They may leave for other job opportunities, they may leave for family, friends, to go to school elsewhere, believe it or not, the weather, but taxes are not going to be the sole reason that a company or business leaves the state. And again, that's what I have seen in my district. And I'd just like to close, the Tax Foundation sends out a little book every year showing tax burdens in each state. And so last year and this year, I went through the numbers and I took a look at states, the 10 states with the highest local state tax burden and the 10 states with the lowest local state tax burden. Then I took a look at the Department of Commerce Bureau of Economic Analysis website, and I took a look at the gross domestic product growth in those states, and I averaged them out. And what I found was that for the 10 states with the highest tax burden, in 2014 had a 1.77% average GDP growth compared to the 10 states, the 10 states with the highest tax burden had a 1.77% GDP growth compared to the 10 states with the lowest tax burden having a 1.7% GDP growth. So this year I did the same thing, and I found that the 10 states with the highest tax burden had a 1.78 average GDP growth, again, compared with the 10 states with the lowest state local tax burdens having a 1.7% GDP growth. Now, I'm not going to go so far as to say 7 or 8 hundredths of a % in GDP growth is going to mean that higher taxes mean that you know, a state's economy is going to do better. I'm not going to say that, but I will say that we can't go the other direction. That we can't say states with the higher state local tax burden mean that their economies are not going to do well as other states. Again, members, we don't need to break the state budget and tax cuts in order to build a stronger Minnesota. Thank you.
Member from Dakota, Representative Wills.
Thank you, Mr. Speaker and members. I had the honor of serving on the Tax Committee for the first time this session, and I really enjoyed working with the members and under Chair Davids. And I'm proud to support the Don't Stop Believe in Tax bill today, and to provide tax relief for middle-class Minnesotans. And in our bill, we have tax relief for seniors, for veterans, for farmers, for college students, and for middle-class families. And we heard some debate today saying that these aren't real people. But in our bill, we provide tax relief for real people. And as I've gone around and talked to my constituents, these are the areas where they need relief and they need help. And one bill that I have in here that I'm proud to support, and Chair Davids mentioned it, the 529 plans to help reduce college debt for students. And it helps incentivize families to be able to save for those college expenses to reduce that debt. And so I'm proud to have that legislation in there. And then we also have a bill that I authored to eliminate the automatic inflator on the statewide general property tax levy. And this is important because it affects our Main Street businesses, our mom and pop shops that are struggling to get by. And this, the inflator has just increased very rapidly over time, and it's crushing our businesses. And these are like I said, just the small mom and pop shops that are struggling, and we're trying to provide some relief. And another bill that I have in here is going to help kids. The bill extends the window for the tax exemption for nonprofit fundraising, and this especially helps the kids in my district who do 4-H programs, and they're trying to raise money, selling milkshakes, and trying to raise money to do these great activities and to help kids get on a successful path for the future. And they use this money to help low-income kids be able to participate in that program. So I'm glad to see that that's in this bill. And then another bill that I've talked about before that I've worked really hard on bipartisanly is the Veterans Hiring Tax Credit Bill, House File 10. And we worked together to get some language in this bill that provides a study. So it's not the tax credit to the extent that I would like it to be, but we're doing a study to make sure that when we can do the credit, we have language in here to do that in 2016, that we're doing it smart and that we're making sure we have the most effective tax credit to help provide jobs for veterans. So these are some of the areas that are important to my constituents, and I'm proud to support the bill, providing this tax relief for middle-class Minnesotans and to bring government spending in line with family budgets. And another thing that was mentioned in the debate today was that this is a bill about choices and that we're making choices today. And thinking back to 2 years ago when the tax bill was voted on then, the choices made there were to increase taxes on Minnesota families by $2.4 billion. And in my mind, that was the wrong choice to make, and so I voted no on that tax bill. And I'm glad that we can come back now and provide relief from that burden that was put on our Minnesota families. And also in those choices, you may have forgotten that we had a Senate office building in that tax bill. And that was a priority that the Democrats chose to support. But in our bill today, we're supporting middle-class Minnesota families. And I'm encouraged to see the broad support that we have, and I'm looking forward to having us all vote green on this bill. So please join me in voting green on this Don't Stop Believe in tax bill. Thank you.
Member from St. Louis, Representative Simonson.
Thank you, Mr. Speaker, and Representative Wills. Thank you for your comments. I want to say that this is my first term serving with you on the tax committee, and I think that, I want to give you a compliment because I think that You're a very thoughtful legislator, and I appreciate how you conduct yourself at the committee. But I do want to, talk just briefly about something that you just mentioned about what we did 2 years ago in the tax bill. And the fact of the matter is that we did increase taxes, but who paid for that tax increase? It was the upper 2% of wage earners in Minnesota and smokers, okay? And out of that tax increase, we were able to pay back the school shift, increase more in education, increase more in Minnesota, and give well-deserved property tax relief all across Minnesota. So let's put that into perspective. And Representative Wills, I would encourage you not to fall into this trap of the rhetoric around the Senate office building. I think you're a better legislator than that, and that just kind of brings it down to a level that I don't think that we need to go to. But, Mr. Speaker, members, today we have a tax bill in front of us, and I want to thank Chair Davids. He's certainly been more than fair, and I certainly appreciate that. And there's some things in here that I just philosophically am going to have to disagree with. But I want you to know that when I consider a bill or an omnibus bill like this, there's a couple of questions that I always ask myself. And the first one is why? If something is going to make sense to me, I have to be able to explain to myself and to my constituents why it is that I'm supporting an initiative. And there's really very little in this particular bill that I have a really good answer as to why. And the reasons, members, we have almost a $2 billion surplus. And the party opposite has chosen to take that surplus and invest it in corporations, businesses, estate taxes, at the same time throwing a crumb here and a crumb there to middle-class families and calling it tax relief. It's pretty sad. But because of the size of this bill and this incredible target that you had, Chair Davids, of $2 billion, we were unable to do things that we as Minnesotans should do, things that we should be proud of. So, as a consequence, we've drastically underfunded education, teacher layoffs, public schools. Okay, let's admit it. What we're going to pass here today off the House floor, if it's signed into law, teacher layoffs, larger class sizes, poorer education. That's not Minnesota, people. No investment, virtually no investment in our earliest learners, and higher tuition for Minnesota college students. Why? That's the question. Why? $2 billion surplus. Why do we need to hurt Minnesota students? It makes no sense to me. GOPs are leaving Greater Minnesota behind, okay? You made some kind of promise in your campaigns that you were going to work hard for Greater Minnesota, and you've left them behind. You're ignoring Greater Minnesota with this tax bill. Your plan, this plan, underfunds broadband initiatives. It's like the #1 need across all of Greater Minnesota, and you totally underfund it. You started out just ignoring it completely, and then Representative Knobloch had the common sense to at least put $8 million into it, throwing yet another bone to the Greater Minnesota community. But you've totally ignored Greater Minnesota. You're throwing working Minnesotans off of their health care plan, throwing them off. 100,000 people, the poorest of the poor, you're throwing them off their health care plan and saying, you know what, go fend for yourself. Find your bootstraps, go fend for yourself, because we don't care. That's the wrong message. Who's the big winners in this plan? Corporations and business. And we can argue about sole proprietorships and individuals or corporations and where they live, but the fact of the matter is, do the runs, look at the numbers. The largest tax decreases in this tax bill will go to people that don't even live in Minnesota. And you can say, well, you know what, that's contained in their lease agreement and that's going to trickle down to the small mom and pop shop business owners at the Mall of America, and maybe that's true for the duration of that lease, but it's not going to last very long, members. There's nothing in this tax bill that says that those savings have to be passed on to the individual business owners. No. Let's be honest about what we're doing. And frankly, we're not being honest to Minnesota about the cost of that provision in the tax bill. Because you should have a spreadsheet in front of you that talks about the CI property tax levy reduction. And in the biennium 16-17, that cost $453 million roughly, and the 18-19 biennium about $1 billion. But the rest of the phase-out members comes outside the forecast window. You can't see it on the spreadsheet. It's not here. You're not accounting for that factor in your budgeting, and that's wrong tax policy because you're setting us all up for a deficit. Whoever comes back here in 2 years or in 4 years is going to be faced with deficit. What we just got out of over the last decade, we're going to be right back to where we started again. My final comment, Mr. Speaker, members, is about local government aid. And this is the piece that bothers me because I find it pretty easy to go to committee and we have discussions and we have debates about issues and we disagree on things, and that's okay. I fully expect that there are certain things that I believe in that perhaps Chair Davids doesn't believe in or vice versa, and that's just philosophical differences, and that's okay. Because we can have a discussion, we can have a debate, and whoever has enough votes will get their way. And that's the way it works, that's democracy. But there are some things that just really bother me when we interject politics, especially into tax policy. And that's what we're doing here in this bill with local government aid. You remember I asked the question, and I asked this question about 42 times in committee. Why? Why are we cutting local government aid to Duluth, Minneapolis, and St. Paul? I have yet to this day receive an answer that makes any sense whatsoever. All we hear is that you folks get too much LGA, you're above the average per capita, and we know that's not true. We saw the data in committee. We know it's not true. So what's the real reason? Because I still don't have it. I can understand philosophical differences, but this is an attack. It's a pure and simple attack on 3 cities that are represented by Democrats. And I'm not ashamed to be represented by Democrats, I'll tell you right now, because I know who stands up for working people. My district members, 32% of the households in my district, one-third live on $25,000 a year or less, okay? That's not a lot of money. In this bill, you're cutting local government aid to the city of Duluth for $20 million. That's going to increase property taxes on every single property tax payer across the city of Duluth. And I heard today, I'm pretty sure that I heard Representative Drzkowski talk about the regressivity of property taxes and how you want to hold those down and you want to push those down. But yet in your bill, you want to increase property taxes to 800,000 Minnesotans, because that's who lives in St. Paul, Minneapolis, and Duluth. It's 800,000 people. So I'm okay with having philosophical differences. I get that. And we can argue that and we can campaign on that, but this is a flat-out attack for no reason whatsoever, because you know it's not going to become law. But the reality is, you're going to own this vote. I don't care what happens in conference committee. I don't care what comes back to this House floor. You will own this vote, and I take it pretty darn personally. And the people in my district, the 32% that live on $25,000 or less, double their property tax increase, that's about a $200 increase, okay, on an average. $200 a year. Now that's not a lot to you, right? Because somebody said, well, $1 million, that doesn't even mean anything anymore. But $200 to somebody, to a family of 2 or 3 or 4 or 5 that's living on $25,000 goes a long way. $200 is the difference between Christmas or no Christmas. That's what it comes down to. That's how tight some of these family budgets are. You should be ashamed.
Member from Washington, Representative Detmer.
Thank you, Mr. Speaker, and as most of you know, I don't get up a lot and speak, but I would like to, first of all, thank the Chair, Davids, for the many good provisions that we have in the tax bill for our veterans and their families, and the tax cuts that we have in the many areas for our veterans. And personally, I would like to also thank Representative Heinzman for his bill that we've got into the tax bill. We worked closely together, and along with several other representatives that had also some tax deduction bills for our income. I know Representative Ansel had a bill, Representative Earhart had a bill, Representative Newton in the past have had a bill, Representative Anderson M., Representative Purcell, and myself. We put together a bill that would, it's kind of like a hybrid bill that now we're not one of those 6 states in the country that still tax their veterans' retirement pay. So briefly, what it does, it allows the new income subtraction for military retirees and survivors starting the tax year of 2015, the subtraction of $1,000 for each year of active service up to a maximum of $20,000. And this is something that other states have already figured out. In fact, there's only 6 states that still have this tax. Iowa just got rid of their tax last session. And today in Minnesota, we have approximately 370,000 veterans that live in Minnesota. And of those 370,000, 4.7% of those are receiving retirement pay. So that's about 18,000 veterans that we're talking about. And this provision in the tax bill, when military personnel decide to retire after 20 years, they'll be looking to Minnesota now to come and be part of our economy. Thank you.
Member from Anoka, Representative Scott.
Thank you, Mr. Speaker. And Representative Lean, I find it very interesting that you're concerned about breaking the state's budget. And if you look since the year 2000, if Governor Dayton's budget were to pass, government's budget would have increased since the year 2000, 15 years, 75%. 75%. Do you know what family budgets have gone up in that same time? 12%. This tax bill helps better align government budgets with state budgets. Representative Lean, would Representative Lean yield to a question?
He will. Representative Scott.
Thank you, Mr. Speaker. Under this tax bill, a college or technical school student could receive up to a $3,500 in-student loan debt relief each year from a tax credit for student loan payments. Now, do you think that's something that the students at the university there in Moorhead would appreciate having?
Member from Clay, Representative Lean.
Thank you, Mr. Speaker, and Representative Scott. I'm sorry, could you repeat that figure?
Member from Anoka,
Yes.
Representative Scott.
Thank you, Mr. Speaker. Under this bill, college or technical school students could receive a tax credit for student loan payments of up to $3,500 per year. Is that something that students in your area would benefit from?
Representative Lean.
Thank you, Mr. Speaker, and Representative Scott. I did vote for that in the minority report we put forward. Also, with the full tuition freeze at the 4-year schools that was put into place in 2013, those folks would have saved over the last 2 years over $2,000, $2,089. So if we would have been able to extend that tuition freeze at the 4-year MnSCU schools this session, that would have been over $4,000 in total tuition savings.
Representative Scott.
Thank you, Mr. Speaker. Well, I know that I have 2 children in college right now. One's going to be graduating this year, and he's going to have some student debt because we weren't able to help our kids with college like maybe some of the folks in this room. But I know a $3,500 tax credit on tuition loan payments would really be helpful to my students in my household. And the other thing that this bill does, besides better aligning family budgets with government's budgets, is it does help provide tax cuts for the middle class. Under this tax plan, a middle-class family of 4 could receive more than $500 over the next 2 years in tax credits and tax cuts. Now, I think it was Representative Simonson was just talking about, you know, that $200 a year is the difference between Christmas or no Christmas. Well, this would be $250 a year. I don't think that's insignificant, people. So I would just encourage a yes vote on this. I really liked the name of your tax bill last time better, the Smoking Hot tax bill, but I'll go ahead with the Don't Stop Believin' tax bill. Please vote green.
Member from Hennepin, Representative Loeffler.
Well, thank you, Mr. Speaker and members. I'm still trying to figure out exactly how this all works together, because I've been hearing a whole lot about how we're trying to help in this tax bill the small businesses and the independent business, the mom and pop kind of operation, and that's been a passion of mine. Working on small business health insurance breaks, working on property taxes for them. And I know Representative Hertas, Representative Sarah Anderson, and I have all proposed things at various times that try and address this. But we've been really at the $150,000 level. We may have approached it differently, but that's kind of the small little shop on the main street that people imagine when we're talking about small businesses. And yet I look at this bill, and it's got big tax breaks that grow for the biggest business. And I looked at the Star Tribune this morning, and they had a list of the biggest taxpayers, commercial, industrial, in my county. And, you know, of course, it starts with the mega mall, and then it goes to a lot of office buildings, some of which I walk through when I'm in going through the skyways downtown. But I'm still trying to understand how this walks down to that average person. I mean, I get it, and where the benefits go. And I'm wondering if Representative Hertas would yield and help me understand how he sees this really getting to the kind of business that we've been talking about on the floor.
He will yield. Representative Hertas.
Well, thank you, Representative Loeffler. It really does get at the core of those smallest interests in the business. The tax is, the exclusion is targeted at the smallest entities. There's 132,000 property taxes, commercial, industrial property tax properties in the state. And so every one of those properties in an indiscriminate way gets that same benefit, gets the $500,000 tax exclusion. So it's important to understand that it's fully captured by having the exclusion. It's not shifted to anybody else. This is this fourth tier of property tax that no other property in Minnesota pays other than seasonal recreational. With more than 55 different property tax classifications, these are the three that are singled out. Now, it's also important to note that there's been a lot of discussion and rhetoric about this being a corporate tax break. It is not a corporate tax break. It is a break to commercial, industrial, classified property. And a lot of the small entities that are the job creators in greater Minnesota, when Chair Drazkowski and myself and others, some of the members on this side of the aisle also helped attend some of those things. When you went into the communities and you listened to these folks and you talk about the properties, I think Chair Drazkowski passed out this, you know, in Aiken, the Sunshine property. This is a $450,000 property, a little restaurant. And so that's the type of property that it's looking at. And when we talked with the folks out in greater Minnesota, you know, the one thing that was so evident is without these small businesses in greater Minnesota, in these small towns, you don't have a town. And there's a lot of these storefronts that say for sale or lease. It's been very difficult times. The businesses have certainly incurred a lot of increasing costs, indirect costs, through no fault of their own. These things continue to rise. And in this example that was passed out, you know, $4,283. You know, if a business was lucky enough and profitable enough to have a 10% operating margin, it would take $42,830 of additional sales just to pay this tax. So how does that help? That ends up being money that stays right in those small towns. It's money that can stay there. Maybe that restaurant builds a patio for its patrons. Maybe it's able to hire another part-time job for a student during the summer. That's money that stays right there and doesn't come to St. Paul. Members, this fourth-tier general levy tax is not something that's applied equally to all property tax classifications. And so that's where it really does help. It's money in the pockets. It's almost like a direct stimulus to every small town. There's about $235 million of benefit is going to greater Minnesota. About 50% of the total CI benefit in the $500,000 exclusion, about half is Metro and half is Greater Minnesota. So it's very equally distributed.
Representative Loeffler.
Thank you, Mr. Speaker. Well, Representative Hertaus, I don't think you understood. My question was really about what was happening to our small businesses across the way and the big breaks that I read about in today's paper that would go to the Mall of America and to skyscrapers. And the bill before us doesn't just deal with the $500,000 that Representative Hertaus was talking about. It goes to the entire value of these properties. And that's when it gets fully implemented. It's $1 billion to our state budget. I get that part. The part that I've been having some challenges with is figuring out how it really helps those independent stores in the way that our previous proposals did, that were really targeted to them. But this benefits every CI property in the entire state of Minnesota, including the mega mall, including the skyscrapers in downtown. And you know, I've been trying to figure out exactly how that works and who benefits, because we're taking money away from our general fund that could go to reducing school district levies, which benefits those businesses. It could go to our counties to reduce the costs of their mandates so that they don't have to levy as much property taxes. And so you can do property tax relief in a whole bunch of different ways, but we usually target it. And this isn't targeted. And so I'm trying to think of how this would work when I read in the paper that the mega mall.
Representative Loeffler, hold on one second. I'm sorry. Members, if you could please take your conversations to the alcoves or to the retiring room. The noise in the chamber has become quite loud. Please respect the speakers as well as other members who wish to engage in the debate. Representative Loeffler, you have the floor.
Thank you, Mr. Speaker and members. And this is a serious proposal, and it's been discussed in serious tones. But we need to know what the serious ramifications are. And we have a proposal that for every business property, no matter what size, will over time be have this eliminated. And the discussion has been about this benefiting small businesses, but it's actually in my county, and I suspect in most counties, going to most benefit the largest properties, the biggest taxpayers. And now we have a list of them in my county. I wouldn't have guessed half of those. Some of them I didn't know what they were. But they're going to save millions and millions of dollars of this. And I'm not sure that there's anything that will require them to contribute any of this to our economy. And if I think of the big box stores, whether it's the Walmart outside of town in Greater Minnesota, or it's the IKEA outside of the mega mall, or the Home Depot, or the Lowe's, their corporate headquarters are not here. I don't know if the tax break that we're giving IKEA goes to Sweden and it improves their economy. I got some great relatives there. They'd love a gift, I'm sure, but I'm not sure that it's going to help the taxpayers of Hennepin County to give them a tax break. I don't see that it's tied to anything. I looked at the mega mall, and I don't go there very often. When I've gone there, it's mostly to go to a restaurant. So I tried to think of some of the businesses that are at the Mall of America that could benefit, and are some of those the small businesses that we ought to benefit. And you know, it's a great place to pick up Lego stuff. They got special Lego stores, and you know, I thought that I didn't know, but so I was trying to find a Minnesota company. They're based in Denmark. And then I thought of Nordstrom, they're Seattle, so that might benefit Washington, but I don't know that it's going to necessarily increase the employment at Nordstrom. It's going to increase the wages at Nordstrom. If it just even got passed through on that first lease. But then when the lease is up, say, you know, they saved, you know, $500 a month if they passed it on to Nordstrom. That $500 will go back up in rent when they renegotiate the lease. And I'm not sure that they need it. I'm not sure that they need it. I'm not sure IKEA needs it. I'm not sure that the big skyscrapers in downtown Minneapolis need tax relief that will put in jeopardy our entire budget, because this is a $1 billion cut to our revenue in future years. And while our economy is climbing slowly, if you look at the out years of our state economists, it actually kind of gets a little flat. So this could potentially put us in a deficit situation where we are looking at increased property taxes because we as a state can't step up enough for our schools, or we can't step up enough for our mandated human service costs, and so the counties put it onto property taxes. And I don't see the long-range plan that gets us to balance the benefits that we're offering in this bill and the state budget. And I wonder if Chair Knobloch would yield.
He will. Representative Loeffler.
And thank you, Chair Knobloch. I don't serve on your committee, but I have grown to respect the fact that you're someone who takes your work seriously and has served many more years than I have, just in a different time frame. And can you tell me the vision in which giving $1 billion of tax cuts just in this one aspect is going to result in a balanced, an easier to balance budget in future years? I can't see how this does not jeopardize our long-range plans. And have you done projections that you could share with us of how fully implementing this would look?
Member from Sherburne, Representative Knobloch.
Well, Mr. Speaker, Representative Loeffler, I'm really glad you asked that question, because I had actually risen so that I could address this question based on what some other people had said earlier. So what I would first say, members, and I've wanted to bring this up, is that if you look at our House budget and you look at what we are projected to have in the bank on June 30th, 2019, which is what people call the out biennium, 2 years after what we're budgeting for, our House budget projects that we'll have $640 million in the bank, plus whatever we carry over from this year that isn't spent, and that is after we implement the tax bill and carry forward the various tax cuts that go into 18 and 19. And I should mention, members, too, that Governor Dayton's budget has a surplus on the bottom line of $371 million. So we are approaching twice as much as what Governor Dayton is budgeting. So we have a cushion there that is significantly more than Governor Dayton. But going beyond that for 2020 to 21 and 22 and 23, where I know some people have said that they've got some concerns about, well, when we fully implement this, what will it be? As I think members know, Department of Management and Budget doesn't make projections going that far out, but I think it might be instructive to look at the February forecast and say, well, you know, what's the projected change from June 30th, 2017 to June 30th, 2019? And if you look at that February forecast, we added an additional $3,191 million in extra surplus on the bottom line between those 2 years. So certainly if that continued at that rate, we would have plenty of money to take care of all the additional tails in this tax bill and much more besides. Now, of course, we can't count on that. If there are changes in the economy, if we go into another recession, adjustments might have to be made. But the final thing I'd end on, members, is that if you look at Governor Dayton's budget, it's not like we're saving all this money. If we look at some of the other proposals that are out there, it's not like we're saving that money. Instead of having it as tax cuts, we're spending the money. And so you're in the same situation. It's just a question of what are you doing with the money. So members, we have a very well-balanced budget for as far as out as the state projects through June 30th, 2019. And at least if you look at the February forecast and look what past projections have been, if you could project them forward, we certainly have a balanced budget even with passing this tax bill.
Member from Hennepin, Representative Loeffler.
Well, thank you, Mr. Chair, and thank you, Mr. Knobloch, Representative Knobloch. But I have to say, Things change really rapidly. This state has had more deficit years than it's ever had surpluses, and we've just climbed out of another one. And committing us to these kind of large tax breaks that grow into the future, when we don't project out our expenditures in the same way out that length of time, when we know they're going to go up, and we know our revenues are going to go down, because every person grows, as Tom Gillespie used to say, 365 days older every year. And we have an aging population, and they are going to have more needs, and they're going to be contributing less because they're going to be in their retirement years. So responsible tax planning, to me, is not to make promises and commitments to future legislators that we may not be able to maintain. And it means that we cannot count on, we are already underfunding our education system in the bills that we have passed off this floor. We have to have solid commitments, and it's not fair to this generation of legislators to commit this much money to the future to people who don't even live in our state, who may not even live on our continent, who own business properties in our community. They are not my constituents. I appreciate the fact that they're willing to invest their resources in our communities, but that doesn't mean they can't get up and move. Even our homegrown companies. Medtronic was started in a very humble garage in my district, in a neighborhood you would never dream of, that would transform healthcare and save hundreds of millions of lives over time. It's abandoned my area. It's gone out to other places in the suburbs, but now it's abandoning our country even by taking advantage of tax loopholes in order to become an Irish company. And so my loyalty to giving this kind of property tax breaks to owners in other states, owners in other countries, when we could do small, narrow, targeted tax relief to our mom and pop small independent businesses, which were in the minority report that we presented and that have been in other responsible bills with much smaller price tags and have been seriously proposed by people of both parties, I think that's a much more responsible way. I think it is reckless for us to make these kind of billion-dollar promises that will grow over time at a time when we know the needs of our state will grow and our ability to control the future of our economy is not there. And so I would urge members to vote no. This is going to give a lot of tax breaks to a lot of people who we don't call Minnesotans, and leave potentially at risk all the services that real Minnesotans who live here year-round, pay property taxes, pay sales taxes, go to those mom and pop stores, and have their kids in our schools deserve.
Member from Hennepin, Representative Anderson.
Thank you, Mr. Speaker. You know, just 2 years ago, we were sitting here on the House floor having a very different conversation. Instead of talking about tax relief for Minnesota families, we were talking about adding to the tax burden of every Minnesotan in the state. We were talking about a warehouse tax that was going to cost our businesses 7,000 jobs. We were talking about putting a tax on babysitting. So when you have the neighbor girl come over and take care of your kids, she would be taxed on babysitting. We were having a conversation about having a tax on clothing. So all those mom and dads out there that have no choice, their kid's going to grow, they're going to have to buy clothes. We were talking about putting a tax on clothing. If that didn't aggravate the Minnesota families here enough, we were even going to tax the aspirin that they were going to need to take to deal with all of the taxes. We had a House tax plan that under a tax incidence analysis showed that 95% of Minnesotans, that's the bottom 95% of Minnesotans, were going to be paying more in taxes. 60% of those people were in the middle income tax bracket, going to get hit hard with tax increases. Those moms and dads, those individuals that are just trying to make a living and trying to make it work here in the state of Minnesota. What a difference 2 years can make. And we said to those folks, don't stop believing. Stick with Minnesota, because better days are coming. And today, that day is here. Folks, we have a tax bill before us that gives $2 billion in tax relief to those hardworking families. Chair Davis has done an excellent job. He has lived up to don't stop believing, folks, because something better is here. He's giving 75% of that as tax relief to individuals. You've heard him say it several times here on the House floor. Let me give you a couple of the highlights of those individuals. In this bill, Chair Davis is extending the K-12 education tax credit. We're going to be helping out moms and dads that just want to help their kids do their best and learn, and that's about 53,300 people. We've got the Jennifer Loon provision here in this bill, the dependent care for working families tax credit. That's going to help 39,950 people. When we expand the education expense credit to pre-K expenses, you know how many families that's going to help? Over 130,000 families in Minnesota. On the innovation side, Minnesota has been known for their biotech industry. I have several in my community. There's several throughout the state, as we heard through the angel investor tax credit. We now undo the 2013 change and bring back the refundability of the R&D tax credit. On the angel investor tax credit, we had wonderful testimony. This guy was so memorable. His name's Chad Olson. He came to the tax committee and talked about his app that he developed on the college campus of the University of Minnesota called Buy Me. It's basically a college version of Groupon. He works with businesses to give deals, and then the students that are on campus can go to that business, use it, and get a break. Innovation. He said he was committed to staying in the state of Minnesota, even though he had folks in California wanting him to come there and start his business there instead. This bill makes it possible for him to stay here, grow that business, and spin off even more, helping to create jobs in this state. Folks, we have a fantastic bill, a bill that tells Minnesotans, yes, don't stop believing, because we can make it better here in the state. Thank you, Chair Davids.
Member from Carver, Representative Nash.
Well, Mr. Speaker, members, Chairman Davids, I began believing from the very first day, and I want to bring a message from Main Street, Carver County, where people sent me here, and I think they sent all of us here, to work for them. We got folks in Carver County, in Waconia, Norwood, Young America, Mayer, New Germany, Hamburg, places like that, that sit around their kitchen tables and they pay their bills a couple times a month, and they're looking at the checkbook and they're looking at the bills, and it just doesn't always add up. And they have said to me repeatedly, and they've said to a lot of you repeatedly, help us out. Give us some tax relief. We're regular, ordinary, hardworking Minnesotans in the middle class. We need somebody who's going to go and help us out. And I'm happy to do that. I'm happy to stand up today and work hard for middle-class Americans to provide some relief for them. I've got families who are excited about the education credit, Chair Davids. I've got families that are excited about being able to come back as a military retiree and come back to the state that they grew up in, and they're thrilled to death. And when I told them that this was going on, they began believing. So not only am I a believer, we've got people who are around our state, in my district, who are serving in our armed forces in other states. They're going to come back if we can get this passed. They're going to come back and retire here because now they're believing. And Chair Davids, thank you so much. Members, I urge you to think about folks on Main Street who are sitting around that kitchen table paying bills and vote green.
Member from Sherburne, Representative Knobloch.
Well, thank you, Mr. Speaker. Members of the House, there are a lot of great middle-class tax cuts in this bill, but one that I would like to highlight that's only been a little bit mentioned is the whole education tax deduction and education tax credit area. You know, members, on the education tax deduction, we're increasing that tax deduction for families that have children's grades K through 6 from $1,625 to $2,500 a year, grades 7 through 12 from $2,500 to $3,750 a year, a 50% increase in the size of that tax credit. And remember, something I don't think people commonly know is that for 60 years, since 1955, our state of Minnesota has allowed that tax deduction for a whole variety of school expenses, including private school tuition. There are 230,000 taxpayers that are going to benefit as a result of this increased tax deduction. Members, we're also expanding the education tax credit from $1,000 to $1,500, and this is a true middle-class tax break, because right now it only goes up to families at $33,500 and begins to phase out at that level of family income. We're bringing that up into about the $50,000 range. So now, members of the House, people that are watching on TV, if you've got that sort of income level, you'll be able to take that $1,500 tax credit for school supplies, for books, for computer software, for tuition, for tutoring to help with your children. This is a true middle-class tax break that is right now helping some 54,000 taxpayers a year, but with this bill is going to certainly expand it further to thousands of additional middle-class taxpayers across the state. And Representative Davids, thank you so much for including this in your bill. Members, please support this bill.
Member from Meeker, Representative Erdahl.
Thank you, Mr. Speaker and members. This tax bill provides millions of dollars of relief to millions of Minnesotans. And I would just like to highlight one area that I worked on a little bit in this bill, the master's degrees incentivized in your content area, so that teachers are actually getting their advanced degrees in areas in which they teach, and maybe not affecting right now so many people, but the impact of it can be great over time. Now, I wondered if Chair Davids could do this. He was given a very large task. But as we've heard, Chair Davids kept saying, "Don't stop believing." And I wondered, was he monkeying around? And I had my doubts. But then I saw his face, and I'm a believer, no doubt in my mind.
Member from Ramsey, Representative Lesh. Member from Ramsey, Representative Lesh.
Sorry, thanks, Mr. Speaker. Representative Dill was just yelling at me for my last speech. So members, I can't believe the LGA attacks on Minneapolis, St. Paul, and Duluth in this bill. Yeah, I can't believe it. If I polled my neighbors in St. Paul and I asked them, do you think it'd be okay to take money from cities in need in order to fund your preferred projects? And they'd say no. They'd say that's not what we do in Minnesota. They'd say we're all in this together, and isn't that why we have a formula in the first place? To ensure fairness. And wouldn't you want to ensure that fairness remains the standard in the law? I hear you guys want this to be your theme, Don't Stop Believing. But have you ever listened to the lyrics of that song? That was my coming-of-age song in junior high, 1985, okay? It's about a small-town girl and a poor boy from a rough neighborhood in South Detroit who didn't have much and couldn't make it. They had nothing. Don't stop believing. You guys aren't taking care of them in this bill. You're taking care of your rich cronies, your campaign contributors. Just look at where the money is going. It's not going to those in need. It's not going to those hopeful people. Don't stop believing. They can't believe it. Mr. Speaker, would Representative Drazkowski yield to a question?
He will. Representative Lesh.
Thank you. Representative Drazkowski, Do you know the need factors in the current LGA formula?
Member from Wabasha, Representative Drazkowski.
Thank you, Mr. Speaker. Representative Lesh, all I know is that Minnesotans don't want to stop believing, and they want us to look at having government yield to middle-class families again, something we haven't done in the last 2 years here in this legislature. And so if we work together and pass this excellent piece of legislation, you and I will both be able to watch Minnesota, and they won't stop believing.
Member from Ramsey, Representative Lesh.
Thank you, Mr. Speaker. Representative Drazkowski is going to try to do the same thing to me that I did to you the other day. Okay, well, I'll tell you, Representative Drazkowski, it's a formula and reforms that were enacted in 2013. They were bipartisan, supported by all city groups. The GOP co-authors on the bill were Davids, Hamilton, Torkelson, Keel, and Fabian. Now, the factors included are jobs per capita, the age of the housing stock older than 1940, and housing stock 1940 to 1970. So you think you got a better way to go, Representative Drazkowski. Mr. Speaker, would Representative Drazkowski yield to another question?
He will, Representative Lesh.
If you think that formula was enacted by those august characters I just mentioned is insufficient, and you want to cut these funds from Minneapolis and St. Paul and Duluth, what would you propose to be a better formula?
Representative Drazkowski.
Thank you, Mr. Speaker. And Representative Lesh, I think the best formula would be tax cuts for Minnesotans in the form of $2 billion in tax cuts. One that government finally yields to the Minnesota families out there working hard every day. Families like the Sunrise Cafe in Malmo. 800 pies per day, Representative Lesh, just to pay the state general tax. That's what they're paying now. And they're struggling to stay in business. If we can work hard and work together to lift these burdens from Minnesota job creators and families, they won't stop believing. Thank you, Mr. Speaker.
Member from Ramsey, Representative Lesh.
Okay, thank you, Mr. Speaker, and Representative Drazkowski. Thanks for the effort. But we have bakeries in St. Paul, too. In fact, we got Sugar Rush right up there on University Avenue, which I am telling you, the donuts at Sugar Rush up there on University, just west of Dale Street, are absolutely to die for. Now, the thing is, every time you go in there, there's some guy sleeping on a couch, and I don't know what that's all about. But the donuts are outstanding. I mean, in fact, just talking about it makes me want to go there now. Now, I don't know how many pies they sell, Representative Drazkowski, but you're taking money from these folks. These are people who have to fund your change of the formula or your modification. And when they ask me, okay, why is it all of a sudden that I have to pay more for the infrastructure in the city because of our older housing costs and infrastructure costs? And I'm going to tell them, well, I don't have a real fair reason on the formula. It's something about Representative Drazkowski saying somewhere else they have to bake more pies. I don't think that's going to wash for them because it's not fair. I think it's hard-hearted, Representative Drazkowski. Now, don't get me wrong. The infrastructure costs that we have in St. Paul and what they have in Minneapolis, we moved there for a reason. I chose St. Paul to live there. I've been in St. Paul now for 20 years, and yeah, I like living in an older home. I think it has more character. And yes, I have more work to do on it. Got to fix the sink, and I got to tuck point the basement because we got some old limestone tiles in there. And it's not brand new cinder block, but I enjoy it. So part of that is my choice. There's no question about it. And to be clear also, we love entertaining all you guys when you come to town to visit. When you come in, you go to the Wild game and you flush our toilets and you throw your paper cups in the trash and flick your cigarettes and get picked up for prostitution. Yeah, no, seriously. No, seriously. The married people, the married fathers of 4 who get picked up over the lunch break down by the river to meet a boyfriend, absolutely. St. Paul City Attorney's Office is glad to provide you that service. And no, they're not from St. Paul. They're from the exurbs. They're from rural Minnesota. But we provide that service free of charge, and we know you're all happy for that. And this building, members, this building here, and all the government buildings around here, 1/3 of St. Paul's tax base is government buildings, universities and colleges and churches. This includes 6 million square feet of state property, including the Capitol and the SOB, and this is the same size as 6 target fields. The universities, by the way, we love to educate your kids. We love to educate your kids in St. Paul. St. Paul has more institutions of higher education per capita than any city except for Boston, Massachusetts. We love all the kids that come in, even those who throw their kegers around St. Thomas and other colleges. Afterward, I get calls from the neighbors who ask why some frat boys peeing on their porch at 2 a.m. and the cops get called in. We provide that service free of charge from the 911 call all the way to detox. So we're happy to do that, and we understand we chose this community for a reason, but it has different needs and different costs than yours. Some of those needs and costs are reflected in the formula. Some, like the public safety factors, which are not counted in the formula, and which amount to a plurality of our LGA spending, by the way, are not counted in. But we still take that as part of our burden to take care of it because we think it's our job as folks at St. Paul, and we try to be fair to everyone. But in order to meet this bill, St. Paul would need to increase its tax base by 90% in order to meet the per capita threshold established in this bill. There are over 300 LGA cities that have a per capita LGA appropriation higher than St. Paul, yet none of them, not one of them, are cut in this bill. Purchases made in St. Paul contribute to an estimated $209 million to the state's sales tax collections. Employees working in St. Paul contribute approximately $382 million in income tax to state coffers. St. Paul corporations account for an estimated $42 million of Minnesota's total corporate income tax collection. Taxes on St. Paul properties amount to approximately $41 million of the state's property tax levy, and St. Paul's combined contribution of these taxes is estimated at $675 million. And this does not include St. Paul's contribution to motor vehicle sales, motor vehicle license tax, and the gas tax. Members, there's all kinds of things you didn't consider when deciding to be as hard-hearted and unfair in the LGA formula as you're being. And when we created that formula, we weren't interested in doing that to Mazeppa, Representative Drazkowski. We weren't interested in doing that to any of your cities. We thought it was to be fair, to make sure if you met the criteria of the formula, you were treated fairly. But you don't want to do that in this bill. It's hard-hearted and it's unfair. I kept hearing "don't stop believing" when this bill came out. You know who else wished that people wouldn't stop believing? P.T. Barnum. You know what his other famous quote was? "There's a sucker born every minute." Members, don't be a sucker. Vote red on this bill.
Members, just a point of information for the body. There are 15 members listed on the current speaking list. Just a point of information. Member from Pope, Representative Anderson.
Start the timer, Mr. Speaker. Members, I would like to also add my support to this very good bill. Does a lot of good things for the real people in greater Minnesota. And I'll just take a second to talk about the proposal that Representative Drazkowski has in the bill pertaining to the school operating, or the capital referendums on school referendums. We came into session, a lot of talk about ag taxes, property taxes, big concern about how school levies are funded. And Representative Drazkowski worked very hard and came up with an excellent compromise that pulled that credit back to about 50% without shifting taxes to anybody else. That's the real key here, not a shift to residential or CI property. So I'd like to say thank you to that outstanding measure, Representative Drazkowski. It pertains to new and existing capital referendums, so a key part of the bill that will do a lot of good things for ag land property taxpayers in greater Minnesota. Thank you, Mr. Speaker.
Member from Ramsey, Representative Pinto.
Thank you, Mr. Speaker. I was surprised at that, so give me 1 second. Okay, Mr. Speaker, This is a very frustrating day, I think, for many of us from these three big cities, but for many of us in general. I have to deviate from what I was going to say just briefly, because I was kind of astounded about the discussion about what happened 2 years ago. I was not here, Mr. Speaker, members, but it seems to me, from what I'm aware, that rather than 95% of Minnesotans having their taxes increase, actually over the past several years, 90% of Minnesotans have had their tax rates decrease, the only exception being the top 10%, which had a small increase, and the top 1% having a still fairly small increase. That's it. Our tax system has become, state and local tax system has become a little bit more progressive over the course of those last couple of years. That's what the tax incidence study says, from what I can see. And I'll just point out, we have had decades now of Minnesota being one of the best performing economies in the nation, while we have had a somewhat higher tax system and somewhat better government services, and we are living off that in the work that we're doing now. So I guess I really resist that. It is interesting the bill is being referred to as "Don't Stop Believing," because belief, it seems to me, is in fact a core driver for the Republican majority of this session. Whether it comes to an issue as big as climate change or as small as a fiscal note, belief seems to be driving things rather than facts. So we really do need to be looking at facts. I appreciate belief, whether you were believing, you continue to believe, you're going to stop believing, start believing. What I'd suggest is looking at the facts. The facts are that these LGA cuts, because this really is a core focus for me, of course, in the city of St. Paul being under attack, these LGA cuts will have devastating consequences for our cities and really for the whole state. Property tax increases, service cuts, more likely both, for 800,000 citizens across the state. Make no mistake, this is a property tax increase bill. 800,000 Minnesotans will have property taxes increase across the state. Now, Representative Simonson had this question that he asked. Representative Simonson had a question that he asked, which is what he asked, why? Why are you going after these cities in this way?
Members, the noise in the chamber has become quite loud. Please take your conversations to the alcoves or to the retiring room so members can engage and listen to the debate. Thank you. Representative Pinto.
Thank you, Mr. Speaker. Representative Simonson, he asked why? Why these three cities? And I want to attempt to answer that, at least in part, by directing the body's attention to that Star Tribune article from a couple weeks ago. You remember that Chair Davids had a statement that these cities get more LGA per capita than other cities across Minnesota. And we had Representative Davney pointed out that, in fact, there are hundreds of cities throughout the state. He demolished that assertion. Hundreds of cities throughout the state get more LGA than these cities get now. Even more will get more LGA than these cities would get as a result of this bill. Now, there was actually another comment, though, that was not addressed at the time, and this came from Representative Quam, who's the person who proposed this bill. Representative Quam said, you've got these cities where a large portion of their budget is coming from LGA. So we know that it couldn't be that it's these cities getting more LGA per capita. Maybe it's that these cities get a large portion of their LGA, of their budget in LGA. So would Representative Quam yield, Mr. Speaker? Is he in the chamber? Perhaps he's not.
I do not see him, Representative Pinto. Representative Pinto.
Thank you, Mr. Speaker. I will then ask Representative Drazkowski, Chair Drazkowski, if he would yield to that same question. Does he agree that the percentage of the city's budget, as Representative Quam said, is a real driver here in why these cities were targeted, because such a large portion of their budget comes from LGA?
Member from Wabasha, Representative Drazkowski.
Thank you, Mr. Speaker. Representative Pinto, thank you. We have a real good bill before us here, Representative Pinto, one that Minnesotans all across this state are going to appreciate, one that puts middle-class families at the top of the decision-making structure instead of one that is reactive to the needs and whims of government. One that strengthens Minnesota families and helps more people become employed, helps Minnesota families build up that net family income that has been declining or barely increasing over the last several years, while government has just been skyrocketing in its revenues that it's been taking from the fabric of our culture here in Minnesota. So thank you for the question, Representative Pinto.
Representative Pinto.
Thank you, Mr. Speaker. Chair Drazkowski, I don't think the citizens of Minnesota think quite the same way that you and your colleagues do. They don't simply say, well, there is belief and we don't need any sort of facts or justifications. I'm going to ask you again, what is the justification for these three cities receiving lower LGA? It can't be the fact they get more per capita than other cities do. We've already had that demolished. Is it perhaps, as Representative Quam said, that such a large proportion of their budget comes from LGA? If the chair will yield.
Representative Drazkowski will yield. Representative Drazkowski.
Thank you, Mr. Speaker. Well, Representative Pinto, as I mentioned in my opening comments, the average of the 4 first-class cities are still at 112%. Of 112.5% of the average of the rest of the cities. So this is still a very generous LGA bill for, or LGA distribution for those cities. Lots of money is going out to them. But the good parts of the bill beyond that is that we have some very strong provisions in here for farmers, for working families, for college students, and people all across this great state. Thank you, Mr. Speaker.
Representative Pinto.
Thank you, Mr. Speaker, and thank you, Mr. Chair, for that answer. And it certainly is. Of course, it's generous. I will point out St. Paul generates $675 million in tax revenues for the state of Minnesota, gets back about $60 million in LGA. The City of St. Paul, of course, is grateful for that. We'll recognize, again, 10 times as much money going out to the state as coming into the city. Representative Drazkowski, do you know your city of St. Charles in your district, do you know what proportion of that city's budget is represented by LGA? If the chair will yield.
He will yield. Representative Drazkowski.
Thank you, Mr. Speaker. Representative Pinto, I believe it's about 40 or 50%, as some of our rural areas are. Very good area in St. Charles, in case you haven't been there, as I'm sure your neighborhood is. But I appreciate if you would support this bill. Don't stop believing, Representative Pinto.
Representative Pinto.
Thank you, Mr. Speaker. Well, I guess I'll point out that members, and I won't bother asking the chair about this, but let's just think if a city is getting half of its support in LGA, I'm going to call that generous as well. I think the state is being generous, and may I point out, appropriately so. Appropriately so. The formula that resulted in these LGA payments to cities across Minnesota, represented by members across Minnesota, were agreed to and developed by a bipartisan group of legislators, a bipartisan group. They result in cities across Minnesota receiving a wide variety of funds. And I'll point out, this is an important component here, St. Paul, Minneapolis, Duluth, as a result of this bill, will get $108 per capita. Keep that number in mind, $108. Representative Quam, the bill author, he's got 4 cities above that. Dodge Center gets $256, Mantorville $220, Chair Drazkowski, 17 cities in Chair Drazkowski's district get well above that $108 per capita these cities will get. Now, is the state of Minnesota being generous in what it's doing there? I'll allow you to judge that. But I'm thinking the generosity apparently flows to cities throughout the state if we're going to start characterizing it in that way. The co-authors of this bipartisan formula, Representative Lesch referenced that. Chair Davids, his, and I say this with respect, he may not even be here, but Chair Davids, $377 per capita. There he is, $377 per capita, Mr. Chair. Nearly 4 times as much money per capita as these cities would receive for a city in his district. Representative Hamilton, again, these are all co-authors of the bipartisan formula. Representative Hamilton, Mountain Lake, his hometown, Preston being the hometown of Chair Davids, $406 per capita compared to the 108. Representative Torkelson, he's got Hanska, his hometown, $313 per capita, and Sleepy Eye actually has got $405 per capita. Representative Keel in Crookston, $451 per capita. Representative Fabian, his hometown of Roseau, $250. War Road, those gets $478 per capita. Now, here's the thing, members. These members participate in putting together a formula. What's wrong with it now? It's got a good result for your cities. It's got a good result for a number of cities. It has worked for our state. What is wrong with it now? This is a question Representative Simonson asked. It's a question that I asked repeatedly in property taxes, issuing a challenge. What is the problem with this? And I have to say the phrase, have your cake and eat it too, is one, and I am sorry, but this is kind of comes out as a St. Paul resident. Because when you participate in putting together this formula, that apparently results in your cities getting $450 per capita, but apparently there's something wrong with it that we can't actually put our finger on that results in these cities getting a much lower amount. Be careful, members. Keep an eye on this. This formula takes into account capacity to tax and then need. It works for all those other cities, but happens to not work for 3 cities represented by Democrats. Members, this bill is a threat to my city, certainly. It's a particular threat because of our role in the state capitol. I was going to ask the Speaker to comment on this, but I'll simply point out if somebody has a heart attack on the House floor right now, which city's fire department is going to respond? It's going to be St. Paul's. And you better hope that they're well funded and in good position to do so. It is a threat to the economic health of our state. And it is a threat to individual cities throughout Minnesota. And that's why, members, I'd like to direct you to the letter from the Coalition of Greater Minnesota Cities distributed by Representative Davney, in which these cities, your cities, our cities, say that when a city's LGA distribution is divorced from the formula, then all cities are at risk of losing their LGA. Remember little Johnny from Representative Marquardt's speech the other day? Little Johnny, he's got his $1. $29 in tax cuts to corporate special interests, he's got his $1. But here's the thing. Where is little Johnny growing up? The LGA formula is developed to ensure that wherever he grows up, he's going to be growing up someplace that's going to have some basic services. That's going to take into account the resources available to his community, the needs that are present there, and make sure that he's all set. What this bill does is it says, you know, little Johnny, it's going to matter a heck of a lot more than it used to where you grew up and where you've got that dollar. That's what's going to matter. And that's why the Coalition of Greater Minnesota Cities, not St. Paul, not Minneapolis, not Duluth, had this to say. If this is to be the Greater Minnesota session, by the way, you can read along right at your desk. If this is to be the Greater Minnesota session, the House cannot and should not undermine the LGA program, which is vitally important to our rural communities. Put plainly, it is time to stop messing around with LGA. If you vote in favor of this, members, you are messing around with the LGA from your own communities. That's not coming from any of us. We want to have it be, all of us should have it be, this is benefiting our state as a whole. Continue the bipartisan approach on this, vote no on the bill, and let's get back to doing the people's business. Thank you.
Member from Polk, Representative Keel.
Thank you, Mr. Speaker and members. First of all, members, I have to say hello to my mother and dad. My mom's not been feeling very well these days, and she spends quite a bit of time resting. And her rest is quite often watching and listening to us debate. She can tell me things that I missed. So hello to Mom and Dad. Members, I'm a farmer's daughter. I moved away 5 miles and farm with my husband. We've spent recent years working on estate planning and how to pass the farm on to the next generation. My son is now farming and managing more and more of the farm each day. My brothers also are taking over. Actually, my nephews are starting to, and I'm watching my nephew's children look for that. I want you to know that farmers may have great value in their land, but what they own, they almost never see the cash in their pocket. They plan to transfer that to the next generation. And that becomes an issue and why we discuss what we do about transferring land. The average age of a farmer in Minnesota is 58 years. That's a serious problem. We need to make sure that we encourage the next generation to farm. It is a great life, but it comes with great risk, as we have seen with the avian flu. Many of those farmers are really struggling and will for years to come. Members, this tax bill provides tax relief for middle-class families. Every dollar that a farm generates turns over 4 times in our small communities. It generates all kinds of dollars for the jobs that we provide or that happen. Agricultural areas, which most of the western side of Minnesota is heavily involved in, has a lot of agribusiness with a lot of opportunity for those businesses and those people that are interested in that. But our restaurants, our Main Street stores are very, very reliant on how successful agribusiness is in rural Minnesota. Agriculture is the second largest industry in Minnesota. When farmers are seeing success, our Main Streets businesses are seeing success. Our schools are seeing success. My district is primarily small towns and agriculture. This bill, this tax bill, also provides for veterans and seniors. A large amount of those live in my district too. We see an aging population. This bill brings government spending in line with family budgets. It is very vital that we support the rural industry, rural areas. We have talked about all the differences, and I want you to know that rural Minnesota is very, very willing to work hard and does what it can to find success in Minnesota. But what my leaving message is, we talk about members, but Minnesotans that are listening, don't stop believing.
Member from Traverse, Representative Becker.
Thank you, speakers and members. Two things. This is a good bill for rural Minnesota. You know, it brings government spending to what families do. As mayor and serving on the school board for many years, local government, we have to keep our spending down, and this bill does it. Number two, it provides tax relief to seniors, families, farmers in our district, and the fact is when you give tax relief, they have more money in their pocket to spend the way they want to. Thank you, members. So I'm supporting this. Thank you, Chair Davis and Chair Durkowski. Thank you very much.
Member from Morrison, Representative Kresha.
Thank you, Mr. Speaker and members. We talked a lot about the entities and so forth of this, but what we haven't talked about is the 39,000 people we all represent. I door knock my district 3 times, maybe 4 times a year, and as I talk to those folks, they all say the same thing. When you go down there, remember who you're representing. Remember who you're talking to. Remember why you're there. And the reason we're here is to help them out. This will put more money in their pockets, more money that they can spend, more money that they can use to get educational supplies, more money for their families. This grows family budgets. This doesn't grow government budgets. Thank you, Chair Davids, and don't stop believing.
Member from Ramsey, Representative Moran.
Thank you, Mr. Speaker and members. So I stand before you to talk a little bit more also about LGA and the impact of the 30 million LGA cuts to the city of St. Paul. So when we look at property taxes, if the reduction was addressed by property taxes alone, taxpayer will experience the following: a 38% increase in property tax to homeowners and businesses. That equates to a $200 increase on a medium value home that's valued at about $145,000. A downtown commercial property value at $19.1 million would see a property tax increase of $42,000+. Cuts to LGA would mean cut to city departments. Personnel cuts make up 82% of the city budget. A $30 million cut to LGA will result in the following position and reductions. 226 positions will be eliminated. That is 226 jobs will be eliminated in the city of St. Paul. 294 full-time employees would need to be cut to hold the police and fire personnel harmless. After position reductions happen, St. Paul would still need to cut another $5.6 million of non-personnel budget. Spending, if we try to spread the 30 million cut proportionally across the city in all departments, this will result in the following cuts. We have to cut our libraries by $2.1 million, our parks by $3.6 million, our fire department by $7.3 million, our police department by $10.4 million, and all other departments by $6.9 million. The impact of these cuts could include the fact that libraries will have to reduce their open hours by 40%. or close 5 libraries. We need a safe place for our kids to go. And part of those safe places is having our libraries available, not only for safe havens, but also it's a tool for learning, relationship building, and being a part of the community. Parks will have to close 17 of its remaining 25 rec centers. That is 46 full-time employees. 46. The fire department will have to cut more than 5 fire companies, resulting in layoffs of 78 firefighters. That's almost 20% of the city's sworn fire personnel. The police will have to reduce sworn officer ranks by approximately 95 full-time employees, or 16%. This is huge, people. This is the impact of this cut to LGA for the city of St. Paul. To hold public safety department harmless, spreading the $30 million cut proportionally across all city departments will result in the following cuts. And again, with the importance of libraries, that is a $5.1 million cut. Parks, that is a $8.6 million cut. And all other departments across the city is $16.5 million. And so, you know, when this bill came before us and we talk about stop believing, I stopped believing the moment I saw this bill. And not only did I stop believing, there are so many other people who stopped believing in the possibility. You know, we sit here and we're all state legislators, but it seems like it's a little bit one-sided here. And yes, we should do what we need for the rural community. What we should do, we need for the farmers. That is fine. But to pit the rural community against the 7 metro area, something about that just isn't fair or just. Something about that doesn't represent who we are as a state. Something about that brings the inequities that we consistently see within all of our systems. So we had a party over there in the majority who said they cared about disparities, that they wanted to work hard to ensure that we was creating better educational outcomes. How can we do that? How would that happen with the cuts that we are putting on our school systems? You heard it talk about the number of teachers that would need to be laid off, the paraprofessionals that would need to be laid off, the large classrooms. What makes that fair and equitable in your minds? How can you only look to the rural community and think that that is okay? So there are needs. There are needs as you look into your rural communities and as we look into the urban community. Our communities, our state is growing more diverse. It is more diverse, and it's only going to grow more diverse. But I do not hear that in your conversations. I do not hear that that not alone is a priority, but that it even matters. That it even matters, that we are creating more fair and equitable across the board. And to believe that if we create these laws for the rural community, it's going to trickle down, right, to everyone. It's just will trickle down to communities of color. That every child and every family will have an opportunity, a chance to pull themselves up and become self-sufficient and self-sustained. It would not happen, and it cannot happen with a bill like this. In St. Paul, when we look at our educational system, and as an urban district, these are some of the things that we are experiencing. We are experiencing concentration of poverty, and there's a difference between people in poverty and poor people. We have highly mobile and homeless population that has grown from 723 to over 2,400 in the last 10 years. We have nearly 60 in our school system. We have nearly 60 children living in cars during a 3-week period in a year, living in their cars. The level of physical, mental, and chemical health impacting our students and families, that is a daily challenge. And new immigrants arrive at our doors every single day. And you know what? We take all comers. We take them. Responding to the language, the health, and the community needs. 72% of students are eligible for free and reduced lunch. 16% are special education, and 34% are ELL, with over 100 languages and dialects spoken in our school system. So what we need is, we need $50 million from our general funds for special ed, and $14 million for ELL, above and beyond what we see in category of aid. But to make matters worse, when we look at the federal government Title I allocation for poor students, that is going down, and all our students in Minnesota are impacted by that. But the concentration hits St. Paul Public Schools particularly hard. So you say, don't stop believing. Well, I have a piece of paper here from the Coalition of Greater Minnesota Cities, right? And what they say about the impact of the LGA across the state is this. This makes no sense. More concerning than the lack of logic displayed in these choices is the fact that they set back the program made on LGA in the last couple of years. In 2013, the LGA programs were reformed and refreshed. The revised formula continues to base the LGA programs on an evaluation of a city need versus its tax base. The provision in the House Omnibus Tax Bill breaks that connection. When that connection based on objective factors is broken, it is only a matter of time until a critical mass of legislators lose their faith in the program and its future becomes shrouded in doubt. We are so there right now. And this comes from the Coalition of Greater Minnesota Cities. They don't believe. So here's what school officials are saying about the Republican education budget. They say that this is embarrassing in a state that values education to the level we do. Next year, there will be pink slips flying through the state like crazy. That's Owatonna superintendent. There's a $2 billion surplus, and why are we going backwards? Why are we going backwards? And that is from the superintendent in Austin. Looking at a budget, we need to do more. We need to do more. We have almost a $2 billion surplus. Will you guys tell me why are we borrowing for Paul to pay Tom? Why? We have a $2 billion surplus. Why are there has to be winners and losers here? And for some, there's not even a, we're not even an afterthought. We're not even thought about. Why do we do this in this bill? And so, despite a $2 billion state budget surplus, Republicans are shortchanging our kids so they can provide massive tax breaks for corporations. Shortchanging our kids while we give massive tax breaks for corporations. I don't get it. How will we ever work towards closing an achievement gap? How can we ever work close to ensure that we are creating more fair, equitable outcomes for all our children? How can we get there and ensure that we're going to be a thriving economy where I just stated the number of people that will be laid off with the cuts in LGA for the city of St. Paul. And I'm sure that's not just St. Paul. I'm sure the same thing's happening in Minneapolis and Duluth. We have to do better because we don't believe. We are not believing this, and we are not buying this. We matter, all matter, and this bill does not take us there. So, Representative Joukowsky, who said Minnesotans across the state will appreciate this tax bill. We're not appreciating it. Many are not appreciating it at all. It does not strengthen families. It does not build up net incomes unless you are a big corporation. You know, you do a little sprinkles here and a little sprinkle there to appease a couple of people, to make a little difference. But overall, you are leaving so many people out of this process, and many being those folks from communities of color. And Representative Anderson, which I believe I heard him say, and I'm still trying to get a feel for what I think he said, but he said that there are good proposals in this bill for the real people in greater Minnesota. We're all real people who matters. We are all real people, whether we're urban, whether we're rural. This is about us investing in all of us, and not some of us, because we're all hurting. Families are hurting across this state. And we got to do better. We have to do better. So I just end by saying this. Advancing equity not just matter. It's not just for greater Minnesota, but it's also for communities of color. People of color are important to me. And you want to know why? Because my parents were people of color, because my children are people of color, because my community is made up of lots of people of color, along with our state. So policies that recognize disparities, how we budget within this tax bill matters. It matters. And that is important to me and so many other people across the state of Minnesota. And I just wish that you have taken more time to talk to maybe a more diverse population, to see how you can engage this in this budget bill right here. Because they matter statewide, they matter in the rural community, and I have not heard once that they matter and that you're going to create an opportunity for all of us to do better. And so because of that, I would say that members, please join me in voting red for this bill. Thank you.
Member from Hennepin, Representative Loon.
Well, thank you, Mr. Speaker, and members. I'll be very brief. Representative Sarah Anderson mentioned one of the provisions I have in the bill, and I want to talk about it a little bit just because it's something that I've talked about when we discussed taxes in the previous biennium, the previous legislative session, and really going back to my service here. And with all of the discussion about the importance of early childhood education in our youngest Minnesotans and supporting them and their families, I have to say I am very pleased, Representative Davids, that you've included my bill on expanding the dependent care tax credit in this legislation. I think it's a very nice component to work alongside with the investment in early education scholarships and other things we're doing to support our families with the young children. You know, having a baby is, in my opinion, the most wonderful day of your life and the most exciting thing that happens, and then the bills start coming. You know, diapers, maybe formula, baby food, clothes, doctor visits, daycare if you're in the work world, and most of our parents are with young children under the age of 5 or before school are in the workforce. And those costs are very expensive, especially for quality care, which we want our families to be able to afford. So we have said to parents, we're going to allow you to keep more money of your own in your pocket and give you back a tax credit if you have these dependent care expenses, because we want you to have more resources to support your children. And so we have made the investment of doubling that tax credit. It used to be $750 $20,000 for one child, and we're going to increase that to $1,050 for a child, and $2,100 for 2 dependent children or more. And I think that's really important, as well as the fact that we have increased the level of income for which families could qualify. Our current policy, which basically eliminates the credits for families making $39,400 or more, left a lot of families who are certainly not wealthy, certainly I would say lower to lower middle income, behind. I did a quick calculation, and so for 2 parents working full-time at $8 an hour, that's a gross income before any adjustments of $33,000. Not much. But we are investing by increasing that level to get the full credit at $44,000. Certainly a move much more towards the middle class, and phasing that up for the credit for if you have 1 child up to $56,000, and for 2 children to $68,000. So we are doing, I think, great help to families. About close to 40,000 families who are currently not eligible for a credit for the dependent care expenses are going to get it under this bill. It's going to put several $100s in their pocket, and that'll go a long ways towards groceries and diapers and books and all the things that you want to purchase for your children, so to give them a great start in life. So I want to thank you, Chair Davids. I could talk about a lot of other provisions in here, another one on research and development tax credit for entrepreneurs, for sole proprietors, which is a big deal for lots of us that have real smart, innovative people tinkering around maybe in their basement and coming up with some great ideas to maybe grow the next Medtronic or 3M or other things. But a great job of balancing our tax relief to make sure that we are focusing on middle-class families. And that's what this tax bill does. So I ask members to support it. Thank you.
The member from Clay, Representative Marquardt.
Thank you very much, Mr. Speaker and members. There's a lot of high hopes, a lot of high expectations, a lot of rhetoric. This was going to be the session for rural Minnesota. And yet, now that we've seen all the budget bills come through except for a couple, this session has been a big disappointment for rural Minnesota, a big failure for rural Minnesota. And quite frankly, it's been a flop. It's been a dud for rural Minnesota. And I guess maybe that should not have been a surprise, because in this House majority, rural Minnesota did not stand a chance against the big metro special interest. I guess it just really wasn't even a fight. Big metro special interest won. And it's really unfortunate. It's really unfortunate because in the last 2 years, we had excellent results and great momentum for rural Minnesota and the entire state. Because Governor Dayton, Speaker Thiessen, and the DFL, we had a one Minnesota philosophy where we believed that if the metro and the suburbs and the rural Minnesota all did well, the state all did well. In contrast to what the Republican plan is, which is divide and squander. Squandering the opportunities that we laid out the last 2 years for rural Minnesota and the rest of the state. In areas of taxes, education, health care, jobs, lost opportunity, lost momentum. Let me talk about this tax bill. This tax bill is not a friend of rural Minnesota, despite what I heard members say earlier today. This does not help rural Minnesota. Let's start out with the $84 million in cuts to local government aid. Oh yes, $84 million cut in local government aid. We've got a $2 billion surplus, and the Republicans have passed the highest spending budget of all time in this state. We cut $84 million from local government aid. In contrast, when we had a deficit, last 2 years, we added $88 million to local government aid. And it's not only the cuts to local government aid that are to 3 cities, this threatens every single rural city because it gets to the heart of the credibility of the local government aid formula. And when you lose credibility and you lose political support, you are putting the entire program in jeopardy. Rural Minnesota gets 65% of those dollars, over $330 million. It's the lifeblood for these local rural communities. You are threatening that. And so, while only 3 cities are impacted, including 1 rural Minnesota cities, every one of your rural Minnesota cities are threatened by this bill. Make no 2 ways about that. Also, much like what I heard 4 years ago, members, your leadership is not telling you everything. I remember 4 years ago, July 21st, I think, 2011, the 21st day into the longest shutdown in our nation's history, I believe. It was passed where the market value homestead credit was eliminated. And I remember people on your side, you're in the majority, saying, don't worry, this will be fine. You know, we got to find $500 million in the budget. It's going to be fine. And yet we know the results, don't we? In rural Minnesota, taxes on homeowners went up 8 times higher as an increase than in the metro. 8 times higher. Farm property taxes, that's when they began to go up because it shifted taxes onto farms. And now what they won't tell you this year is about when everything gets phased in. You've got to listen very closely to Ways and Means Chair Representative Knobloch and Tax Chair Davids. They don't want to talk about when the budget goes beyond what the eye can see, beyond the 18 and 19 years. Because in this bill that you guys are ready to pass, things continue to phase in. Little poison pills there. And so you heard, and this was passed out by Representative Drazkowski, you've heard numbers used that, yeah, in 2016, when you phase out the business industrial, it's pretty close. In the first year, it's 52% to the metro and 48% to rural Minnesota. But then if you look at the second to the last column here, it says when it phases in at about $100 million a year in the next 6 years, you know what the percent is each of those next 6 years? 71% benefit to the metro, 29% to the rural. So when it ultimately phases in I think 2087, something like that, whenever it is, it will be, rural members, and by the way, it's going to be a $2 billion cost. So $2 billion you're passing off this floor, 66% are going to the big metro special interests. 66% is going to the metro. And you know what that will be when it phases in about 6 years? $1.3 billion of property tax relief to the metro. And then we've got some ag relief here. $50 million. $50 million. Agriculture represents 20% of the economy. 20%. You know what the comparison is? 50 to 1.3 billion. The metro area, the skyscraper guys, they're going to get $26 of tax relief for every dollar your farmer gets. 26 to 1. Not quite as bad as what Johnny's getting, but 26 to 1. And you know what that metro skyscraper is going to get? He's going to get a 30 to 40% property tax cut. You know what on the average your farmer's going to get? 7%. Boy, that's going to be good. Go back to your farmers and say, you know what? With a $2 billion surplus and the biggest spending spree we've ever had, we gave you a 7% cut. and we gave the Mall of America and their tenants 30 to 40%. That is, if you're a farmer who does not live in one of the 48 school districts that don't have a school debt levy. There are 48 schools that do not have a debt levy. That means if you've got farmers who live in one of those 48 districts, and by the way, they're all in rural Minnesota, you know how much tax relief they're going to get this year? Zero. Zero. And you know how much the Mall of America and their tenants are? $1.3 billion. And some of your farmers are going to get zero. That's in the bill. That is in the bill. And while these metro skyscrapers get $1.3 billion, your homeowners and renters, zero property tax relief. Zero. In fact, there's 3 cities where the residents are going to see a property tax increase. So while you gave all of this to the metro, $1.3 billion to the skyscraper guys, your seniors, your homeowners, your renters back in your communities get zero. But oh, wait a second. I did find out in the bill there are 2 cities where their residents will get property tax cuts. The cities of Rogers and the city of Coates. By the way, they're 2 metro cities. That's in the bill. So when you go back home, sorry, couldn't give you any property tax relief, but a couple metro cities did get some property tax relief. That's in the bill. And then let me give you one more. This is in the tax. The seasonal rec property tax reduction. While someone in East Grand Forks will get no property tax relief in East Grand Forks, somebody who lives across the Red River to the west in Grand Forks is going to get a pretty significant property tax decrease on their lush home, their lush cabin on the lake in Minnesota. So that resident in East Grand Forks gets nothing. In Grand Forks, pretty hefty property tax decrease if they have a nice lake home in Minnesota. Likewise, in Breckenridge, not one single dime of homeowner relief, but that person in Wahpeton, the sister city right to the west in North Dakota, you know, they're doing, I feel, you know, North Dakota, they're doing pretty rough over there with all that oil and everything. So we're going to give them a tax break on their lush seasonal cabin, their second home that they can afford. That is in the bill. And I'm just wondering, as someone in rural Minnesota, what they're going to say when I talk to residents and say, you know, a couple cities in the metro area, pretty well-off cities, businesses are going to get $1.3 billion of relief. Your neighbors over in North Dakota are going to get some property tax relief. But you know, we just couldn't provide any for you. I wonder what they're going to think about that in rural Minnesota. But that's in the bill. And you know, everything else, when we talk about a failure for rural Minnesota, it's because we couldn't afford the other programs like education and higher ed and everything else, because we had to afford to pay for these huge tax cuts for the metro special interests. Education, I know we talked a lot about that the other day, but I'm going to cover a couple things, because there was just a survey done of rural school districts. And of the 190 that were sent the survey, 120 rural school districts responded. And this was responding to a 1 and a 1. A 1 and a 1. And what the surveys came back in rural Minnesota, You talk about economic drivers. Not only do schools in our small communities provide education for our students, which is the most important thing, but they also many times are your largest employer. They're the hub of your small rural community, and folks in rural Minnesota, you know that. They're talking about laying off, as the survey came back, 160 teachers and 80 support staff. That's 240 out of those 120 schools. When we have a $2 billion surplus. And they said there's going to be larger class sizes, fewer electives, less areas for support personnel. That's in a time of a huge surplus. And that's because of this tax bill, because we had to pay off the wealthy special interest, $1.3 billion. We can't, and in contrast again to what happened the last 2 years, all-day kindergarten, over $500 million of investments. And the record's very clear. Rural Minnesota is being left behind with these budget bills, but mainly the budget bills reflect because of the tax bill. Last year we froze. Chair Pulowski was the leader in freezing tuition for 2 years at all of our colleges, all the systems. This year, with a $2 billion surplus, U of M, Crookston, Morris, whoa, tuition, up it goes. With a $2 billion surplus and 4-year MNSCUs, there will be an increase in tuition. We just couldn't do it because we had to pay off the special interest in the metro area. You look at health care that we talked about last night. With a $2 billion surplus, we have to eliminate MnCare. Over 40,000 people from rural Minnesota will have less access and higher costs to their health care. Many of them farm families. And you know, I heard a lot of bragging last night about the 5% increase to our personal care attendants. One time, and then they cut back down. One time, 5%. But oh no, these metro special interest property tax cuts, not only do they go up and up and up, but they're permanent. Putting the skyscraper guy over those personal care attendants who are working with our most vulnerable citizens. But that's what that tax bill does that you're ready to make a yes vote on. And when it comes to jobs, I think there's a total of $8 million in broadband. Last year we did 20 in a deficit. There's nothing in this bill for workforce housing. We know how crucial that is to economic development out in rural Minnesota. But we couldn't afford it because we had to pay for all these tax cuts. So, members, this is a failure. The budget in this tax bill is a failure by any stretch of the imagination. And rural Minnesota residents are going to figure this out. In fact, you're hearing about it right now. You were given a golden opportunity to continue with the opportunity that Governor Dayton and the DFL had given you, and you squandered that. You put rural Minnesota behind because you put your wealthy metro special interests first. And let me end with one thing. Little Johnny. First of all, besides what we heard last night, the fact of the matter is, when you phase in all of the tax cuts, there are $29 of tax cuts, many of them to that skyscraper guy, to $1 of education for little Johnny. And you know what? Little Johnny, he could benefit from some of these things that are in this bill. But I'll tell you what, there is nothing in this bill that's more important than education. I'll argue that with anyone. But besides that, this bill will lead us into deficits, into constant budget deficits. And if you listen carefully to Ways and Means Chair Knobloch, he was a little elusive of the future. And yet we know how many years have we gone before you hit the next recession. And there are huge, huge obligations into the future. So no matter what Johnny's short-term benefits may be out of this bill, his long-term detriments is lack of education. There'll be a lack of health care, lack of the infrastructure he needs to be a successful citizen for this state. Because this budget leading into the future, this tax bill, over the cliff beyond the eye can see, is reckless. And it's going to lead us to future deficits. So little Johnny, without the education and into the future, when budgets are going to be cut and education is going to be cut and health care is going to be cut, it's not going to be good for Johnny. We can do much better for little Johnny. If you really care about little Johnny, vote no on this tax bill. This is a major flop for rural Minnesota.
Members, just a couple of more speakers before we go our separate ways. The member from Hennepin, Representative Davney.
Thank you, Mr. Speaker and members. It's a powerful evening here on the House floor. I want to thank my colleagues on this side of the aisle for the intellectual rigor and honesty that they've exhibited in looking at this bill, the mirror that they've put up to the majority on the impact that this tax bill would have, not just on Minneapolis, not just on St. Paul, not just on Duluth because of the targeting of 700,000 Minnesotans who live in those cities and their property taxes, but the impact, the negative impacts this bill would have across Minnesota. 4 years ago, we had the smoking hot tax bill. This year, it's just a hot mess of a tax bill. What happened in between those 2 days? We balanced the budget honestly 2 years ago with Chair Linczewski's leadership. For the first time in a decade, we moved away from the deficits, we moved away from the shifts, we moved away from the gimmicks, we moved away from the unsupported and dangerous deficits and stood up and did what Minnesota asked us to do. Balance the budget honestly, balance the budget in real, sustainable ways. Minnesota had grown weary of the compounding property tax increases brought on by cuts in local government aid. 86% cut, or 86% increases in property taxes. 2013, for the first time, Minnesotans paid less in property taxes. Under this bill, zero for property taxes. A $2 billion budget surplus, you could have zeroed in on the Minnesota middle class. Instead, you zeroed the Minnesota middle class on property taxes. And instead, put forward a bill, when fully phased in, will be a $4.5 billion cut to Minnesota's revenues and a deficit for Minnesota government. A deficit for Minnesotans who'd grown weary of higher class sizes for their children's schools, of increased activity fees that priced their children off of the sports team, off of the band, out of the school play, out of those enrichments that are so important. Minnesotans had grown weary of the tuition increases, relentless at the University of Minnesota and the MnSCU systems that Chair Pawlowski put a stop to. But this year, corporate special interests are more important than the students of the state, whether they're in the K-12 system or trying to get a college degree or certificate to move forward. They'd grown weary of longer response times when they needed public safety, when they needed that fire department to respond to a health crisis or a fire, when you needed police to respond to a crisis. Those response times during our deficits of choice got longer and longer. 2 years ago, we responded in Minnesota and said, it's time. We looked out for all of Minnesota. It's time that we delivered a balanced, sustainable budget that is a matter of choice. This bill, again, choices made, a blip for the middle class, and $1.5 billion in unsustainable property tax cuts for business. You know, last night, Representative Mack rose on the floor, and here's a little bit of what she said. To spend that one-time $2 billion surplus with promises we cannot sustain in the future, she went on, that's not responsible. Representative Mack, you're right. That's not responsible. It's a one-time surplus, but it's not honest because the money continues to be needed long after the surplus is spent. Members, we're sent here as custodians of the state. We're sent here to be responsible stewards of the taxpayers' money. This bill doesn't do it. This bill sets us up for future deficits. This tax bill squanders a $2.2 billion surplus. It ignores the needs of middle-class Minnesotans and the needs for corporate special interests instead. I urge a no vote.
Member from Hennepin, Representative Lencheski.
Thank you, Mr. Chair and members. And I want to thank Chair Davids and Chair Drazkowski. Before I go through some of my disagreements, I really do want to say they've both been wonderful chairs this year, and I think I can speak for minority members. Most of the people on the committee had a pretty good time. We feel strongly about our positions, but in these two committees, it was a really good time this year. I just really want to once again, as I have said many times in committee, offer the assistance of the minority. Chair Davids really wants a signed tax bill, and I think we know this isn't it. And we want to tell folks in the minority, as the minority members, we are here to help you get that signed tax bill. And in fact, we provided a number of options for you today, and they were pretty roundly rejected. But I do want to bring a few points up, before we finish off for the evening. A lot of things have been said on the floor, and I have to say, I think members have not been paying attention to what's in this tax bill at all, or have not paid attention to what the amendments were. Because so many of the things that were said in these closing speeches are just, I don't think people know what they just voted on. So for example, Representative Detmer got up and said, this bill is so great, you should vote for it because it has this veterans stuff in it. That was in the minority report, so everybody over here voted for that too. So there's no issue there. We kind of heard people walk through these things. Representative Scott got up and said, she even asked Representative Lean to yield and wanted to know what he thought about the tuition tax credit, and I think people weren't paying attention, but Representative Moline did an amendment to increase that, and the majority voted against it. So if you want to go get the votes, you might want to check how you all just voted. So Representative Moline said, hey, let's get rid of that estate tax, and let's supersize that tuition tax credit, and everybody voted it down. So I think it's pretty clear we were comfortable with that because we all voted for it. In fact, we improved it and gave a bigger tax cut on that issue. Representative Scott also talked about, that this bill was for middle-class tax cuts, but we actually took the middle-class tax cuts in your bill and made them bigger and permanent, and you voted that down too. So in case you weren't paying attention to what was going on here on the floor today, Representative Nash mentioned that too. These are middle-class tax cuts for folks, and we did 3 times. We had you have the choice to not have a 2-year puny little measly afterthought of a tax cut for folks, but instead make it bigger and forever, and you voted it down. So, members, I'm not sure if you were paying attention to the amendments. I know people are busy. I know they're tired. But, let's be clear what just happened here on the House floor. Representative Loon, you talked about your dependent care credit. And again, Representative Moline took that, or Representative Bernardi took the dependent care credit, supersized it, and you all voted it down. Because estate tax provisions or other things for corporations were more important. Representative Knobloch got up and talked about his K-12 credit. We also offered you an opportunity to dramatically increase the size and the eligibility for the K-12 credit. Representative Moline offered you that. You voted it down. You know, so I think members might want to check what you're saying and what you're doing. And this is...
Members, if you could please take your conversations to the alcoves or to the retiring room so that members may listen to the debate. Representative Lachesky.
Thank you, Mr. Speaker. And I think I'm probably bothering people because people don't want to accept that what people are saying on the floor they're for and how they're voting are not the same. So I understand that's stressful for people, and it's particularly stressful for people when you're new. You know, on the property tax division, we had 5 freshmen, and Chair Drazkowski was a great chair to show freshmen what it's like to be a engaged member and participate. And so Representative Kosnick, Vogel, Whalen, Pinto, and Joachim were all part of that, and it was just a great experience. But freshmen, you know, to you can pretend that this vote is not, that your vote really doesn't matter here, but your votes matter, and you've been taking them all day. And you have been saying you're for middle class tax cuts, but you've been voting against them over and over and over again. Why? To keep your corporate tax cuts and to do the estate tax. And you know, we can have the pages run all those roll calls around for you all so you can take a look. So there's nowhere to run and hide from this. You know, this is the day you own your bill. Here it is. And I know tomorrow people are going to want to immediately dismiss it. Oh, you know, we're off to conference. That's not, you know, we want to talk to the Senate. We want to talk to the governor. But you're voting today. So today is the day you own the majority's view of a tax bill and every other piece of the budget resolution. It is because of this bill that Chair Knobloch gave targets to one finance chair after another that were inadequate and irresponsible and relied on gimmicks and shifts. This bill is causing that. We don't have to do what's going on in Health and Human Services, kick people off MinCare and make up numbers. This tax bill is demanding that. And it's not, the majority is not middle class tax cuts. If people want to say at one day in time that that's what's happening here, that it's 75% middle class tax cuts, it's not. If you want to say that, then turn off the corporate tax cuts. Put a motion forward to say we're going to end them. We're only going to do the small business tax cuts, which, by the way, we gave you that opportunity to keep that vote too, and you voted against that multiple times. But if you want to really say this doesn't grow in the future, it doesn't cause deficits in the future, it's not out of balance, it's not really a $4.5 billion corporate tax cut, then you should have said, we'll only do this much CI corporate tax cuts, and we won't do the estate tax, and we won't give out angel credit investments and R&D investments and net operating losses and all the other corporate provisions in here. But the facts are going to remain that that is what you voted for. And in fact, we tried to help by saying, you know, you're saying you're for middle class tax cuts, so let's have you put your money where your mouth is, make those tax cuts permanent. Take the puny little measly middle class tax cuts that are in here and make them bigger and better and forever. And you voted no. See, this is the day you own the Omnibus Tax bill. Mr. Chair and members, you know, Representative Keel talked about that this bill was for farmers in the middle class. And again, you know, our members all voted for the provisions for farmers. So if you weren't paying attention to what was going on in those amendments, anything that was in there for a farmer, every member of the minority voted for that. You know, but Representative Keel, maybe you didn't know that the border city provisions that you care so much about were doubled by the minority, and then you voted against that. So, you know, I know we're busy and we're tired, but members should pay attention to amendments and how they're voting. You know, and it's fine if people want to say we like our approach better and we didn't like your amendments, but you can't simultaneously say this bill is really for middle class tax cuts when you voted them down repeatedly. You know, we had some conversation fairly early on. I think it was Representative Wills was talking about, I think she was the member who raised this idea of real people. And you know, we're all, and all of our constituents are real people. And our amendments demonstrated the amount of property tax and income tax and sales tax relief we wanted to give all those real people, but they were voted down. It's clear to me that getting rid of one of the, or actually limiting one of the most progressive taxes we have in the state, which is the estate tax, was a bigger priority than the middle class tax cut. So, just to be clear on that, what Representative Moline said on that was absolutely right. And when people want to believe that there's all these constituents they have and all these farmers who are going to be helped by what's in this bill, it is not accurate. So I just want to walk you through an example. If anyone forgets, last year we doubled the estate tax relief for everybody in Minnesota. Last year. Pretty sure folks all voted against that. But so now it's back again to do even more. But much of what people are talking about is not accurate. So if you're one of the lucky 600 estates in the state of Minnesota who's going to get this $343 million tax cut, this small group of people, and remember that's twice Representative Loon's target for all of K-12 spending. This small group of people is going to get that twice the money the whole K-12 bill got. So, just an example. So let's say I have $10 million and I'm dying, or I'm planning to die. We're all going to die. And so I and my spouse get in this current law, we get a $2 million exemption in current law right now. So $4 million right now. That's current law. And that's, I guess, not good enough for the majority. We need to help people at $4 million in current law get a tax cut. Okay, but what can we do? I have 10 million, so I get 2, my husband gets 2. I can give all the rest of it to charity and avoid the tax. There's all kinds of things I can do with that money and not pay a nickel. But if I don't want to, because I don't want to give anything to charity at all, I don't even want to give $1 million, what I can do is leave that $6 million in wealth to my 3 kids, let's say. So 2, 2, and 2. Those poor little kids, wah, wah, wah. I have 4 kids, and if I'm fortunate to leave them each $2 million, I hope they're not going to complain that after they get that $2 million, they might have to pay some taxes on it. They're still going to have $1.9 billion that they didn't earn. So, this is what we're talking about, members. And if you all think you have all these constituents in your district that have 10 million, 100 million, 500 million, you best check again who we're talking about here. So right now, as Representative Moline told you, current law affects 800 estates a year. And with this bill, is going to be under 200. So, that's the priority, I guess, that's happening. Now, the other thing I did want to spend a little bit of time talking about is this whole idea that the corporate tax cuts for businesses they're really not for the people who own these buildings. They're somehow for the tenants in them, and it's going to get passed down in lower prices or higher wages. There's nothing in the bill that says that. Does anyone here think that if we pass this and it becomes law that Best Buy is going to rush out next week and reduce the cost of a dishwasher? Really? Is that what people think? Or are they going to raise the wages of the people stocking the CDs on the shelves? Because, they don't have tenants, so let's not get confused about this tenant argument. They're owning their building. And that's in a district next to mine. That's in Richfield. In my district, which people have talked a lot about, the Mall of America, let's take the tenant example. And I did try to, think through some of those, and I had it written down, but, I'll probably get a little bit of it wrong. But so people were saying to me, in fact, that, I heard from the business community this morning that, it's not accurate that these tax cuts aren't going to small businesses even within the mall. So if any of you have been in my district in the Mall of America, I don't know what you're seeing in there, but they're mostly big businesses in a bigger building. And they're mostly not based in Minnesota. So the way that would work, if you were under a net lease, and many are not, many businesses in the state are not, but if you were, the way this would work is, let's say you have a 3-year lease and you are H&M. So the Minnesota legislature passes a permanent commercial industrial property tax cut. So what does H&M say to the mall? Hey, in my lease, I get that relief. And the mall says, you're right. So for 3 years, we're going to pass that to H&M, who, by the way, is based in Sweden. Okay? So Sweden gets that. And then after that 3-year lease is up, it goes back to the Canadian owners of the mall. And another example, people know of the Gap. So, you pass that tax cut for the mall, and the Gap says, hey, I have a net lease. So I want that relief. So the Gap, which is based in San Francisco, I don't know who owns the Gap in San Francisco, but they get that tax cut. Whether they would ever do anything in Minnesota related to that, who knows? And then when their lease is up, it would go back to the Canadian company. One more example, just to think about, Representative Loeffler talked about how if the folks who run Legoland, that's Denmark, and there's Hooters. So if you want to give Hooters a tax cut, then the people who own that, which is in Atlanta, Georgia, would get a tax cut. And then when their lease is up, then it would go back to the mall. And so what would happen in the mall then, as those leases run out, that is built into the value of the land. I mean, people get fundamental real estate, right? If your taxes on your land go down, the value of your property went up. So it is a big corporate handout, members. Excuse me, and people know I've had a cold this week. I had a number of other things I wanted to say, but we're running out of time, and I really do know the job that Chair Davids has, and I know the job that Chair Drazkowski has, and I know the job that Speaker Dowd has, and we don't have a lot of time. But I do want to talk about the reality we're in right now at this moment. The governor's tax target is $172 million. And the Senate is $237. And the House, $2.293 billion. I mean, it's a long way to go here. I think we need some reality about how this might play out. And so I hope as the majority works within their caucus to get people to understand how compromise works, that you will turn to the minority for some help on that. I would suggest you start by stopping the attacks on certain parts of the state. I've tried very hard to not do that. It's not healthy when people sort of pick on parts of the state, because it creates resentment that follows you a long time. I mean, I have made mistakes, and I actually talked about one in taxes about something I said to former HHS chair, former Commissioner Pawlenty, Representative Goodnow. And after I said it to him, I made a partisan comment, I went and apologized to him, and he couldn't even remember I had done it. But what you learn over time is when you go after folks in a special way, it's hard for people to set that aside. They'll say to your face, oh, we're good, that's fine, no, that's okay. But they don't forget it, and it's painful. So I will give you an example. When I got here, I met Representative Phyllis Kahn, and we all know Representative Phyllis Kahn, right? So she had this bill, and she was walking around like she does to all of us, how she kind of haunts us on the floor, sign this, look at this, whatever. And she said, there's this condurator thing, and I didn't even know what she was talking about. In my district, this is super important to me, and I was like, well, okay, whatever, and I voted for it. And she remembered that for like 10 years, thanks for voting for the condurator. And it was a lesson to me that people care about their districts in a way that is so personal and so pronounced. And this bill is going after Rochester, for example. The zip rail provision in there isn't even a tax provision. And so it's going to be hard for Representative Liebling and Norton to forget the day that the Minnesota House decided to go after Rochester. It's also going to be really hard for a bunch of Minneapolis legislators and a bunch of St. Paul legislators and a bunch of Duluth legislators to forget this vote. It's not going to go away in a minute. They'll probably be really gracious, and they'll probably say, we understand. But I challenge you to think about that a little bit. And I want to encourage Chair Davids to do that. The very first thing when he walks into the conference committee is drop those provisions. Because people don't like people messing in their districts. It's just, I don't understand all your districts, and I don't think that's a good start. So I hope people will do that. I guess just in closing, I really do think one of the biggest problems within this bill is actually what it does to the rest of the entire budget. And I think you all know here, deep down, that the HHS target is going to go up. You're going to put more money into HHS, and you're going to get rid of these corporate tax cuts. And you're going to put more money into K-12, and you're going to get rid of this, some of this stuff that's going on in this tax bill. Because this tax bill is crowding everything else out. And Representative Downey, who is now the Republican Party chair, he served on taxes. And you know, his dad and my dad were teachers together, and his dad lives in my district, and he's a great guy. And Keith and I always got along really well, but you know, it felt like to me, and I'm sure Representative Davids will correct me, or Chair Drazkowski in their closing comments, that somehow he upped the ante and said, hey, give it all back. You know, and so now you're in a position where I guess you're sort of doing that, but it's mostly for a very small group of fortunate, wealthy Minnesotans and corporations. And then at some point you're going to have to reverse course, and you're going to have to do it fairly quickly. So, you know, I again want to help Speaker Doubt. I want to help Chair Davids, and I want to help Chair Drazkowski and any other person in the majority work with the Senate and the governor. I think they've put really responsible plans out, and I hope you will take a very long look at the governor's tax proposal and at the Senate's. And they're doing exactly what we should be doing. So, you know, members, I appreciate the indulgence in listening to me today, and I strongly encourage you to vote against the Omnibus Tax Bill.
Member from Hennepin, Representative Thiessen.
Thank you, Mr. Speaker. Well, members, as we look over the last 10 days or so and the budgets that have come across here, capped off by the reason for all those budgets, this tax bill today, it's clear to me that you've stopped believing in Minnesotans. You stopped believing in Minnesotans who want to get a good, affordable higher education in Minnesota by raising their tuition, raising taxes on college students. You stopped believing in Minnesota parents who want lower class sizes, who want more enriching education for their kids. You know, those folks are out of luck. You know, you can talk about the education, the K-12 tax credits in this bill. I would bet if Representative Loon had the choice, she would have rather taken that money from the tax bill and put it into her education bill where it actually belongs. And I really think Representative Gruenhagen would like that, because by putting it in Representative David's tax bill, what you're doing is sending 15 to 30% of that right to President Obama. That's the impact of that. If you put it in Representative Loon's bill, 100% of that money goes to education. It goes to schools, it goes to early childhood education. Put in Representative David's bill and give a tax credit, that changes your federal taxes. So 15 to 30% of those dollars that you're putting into K-12 tax credits, right out the door to President Obama. I can't believe you're going to support that, Representative Gruenhagen or Representative Drazkowski, but that's exactly what you're doing in this bill. You know, you stop believing in working Minnesotans in this budget you put together. 100,000 of them, their health care, you're jeopardizing in this budget that the Republicans have put out. You've stopped believing in Minnesotans who are working because you're cutting their wages and you're cutting their jobs in the budget you put out. Is that a way to build our economy? I don't think so. You certainly have stopped believing in greater Minnesota. No broadband, you're cutting LGA, you're cutting Minnesota Care, you're not doing anything for the oil train situation. You know, Representative Marquardt talked about that very clearly, but that's exactly what you're doing. And you know what? Of all of our districts in this room who are going to benefit from this huge corporate tax cut that you're going to phase in, $5 billion in corporate tax cuts over the next 8 years, guess how many of the top 67 districts, the half of this body, top 67 districts, are the top 67 beneficiaries, district beneficiaries are in greater Minnesota? 12. 12 of the 67 of the most benefited districts under the David's massive tax giveaway proposal to corporations, they're going to be benefited in greater Minnesota. The rest of them are right here in the metro area. That's not a bill for greater Minnesota. But the real question is, you're doing all these things, and I keep getting people asking me this question. Why are they doing that? We have a $2 billion budget surplus. Why are we throwing people off health care? Why can't we fund our schools? Why are we raising tuitions on college students? Why are we cutting people's wages, cutting people's jobs? And the only reason, again, is because you want to give a $5 billion tax break over the next 8 years to corporate special interests, while giving $50 to $70 a year in Jesse checks for the next 2 years to Minnesota families. $5 billion, $50. That's the choice you're making in this bill. Well, if you think you can pull that over on Minnesotans, I think it's not don't stop believing, it's Ripley's Believe It or Not. Because Minnesotans are a lot smarter than that. And I also have to say, with this bill you're putting out to benefit these huge corporate special interests, it is no wonder that you want to blow the lid off our campaign laws and allow corporate contributions as many corporate contributions as possible to fund your campaigns, because after you pass this bill, you're going to need it. They're going to be your only friends. Now, Representative Dean the other night said, last night, said, let's look out 6 years over the horizon and see what's going to happen. Well, if we do that on this bill, we have huge deficits in front of us. And all the stuff you think you did last night that you might have done for nursing homes, that you might have done for long-term care workers, all the things you think, well, you didn't actually do anything for schools, all the things you might have done for two-year colleges at Minskew, that is out the door. And your constituents know that. Minnesotans are smarter, I think, Republicans than you think they are. They actually understand what's going on. You can't fool them with stuff like this. But I guess this theme that you seem to love about don't stop believing is an apt theme in one regard. And that's because we have less than 3 weeks to go to finish up this session. The clock is really starting to tick. For the new folks over there, you might not understand this, but we are far, far behind where we ought to be to get this session done on time. And the bill that you're passing today, the bill you passed last night, the bill we passed on Saturday, are actually taking us farther away from getting done than closer. So we have less than 2 weeks, and instead of trying to bring these things together, we're driving them apart. We're getting farther and farther and farther apart. And it's incredible to me, but if I look at the budgets that you've passed off the floor and compare them to 2011, these are actually more extreme, more ideological than the 2011 budgets you've passed. I mean, it's almost impossible for me to believe that that was going to be the case when we started session this year, but that's exactly what we're doing. Somehow you think you have this massive mandate that you won in November of 2014 to do something that's even more extreme and more ideological than you did in 2011 when we went, as Representative Marquardt said, into the longest state government shutdown in the history of this country. So what you got to think about tonight after you cast your green vote, and people have explained the consequences of that green vote to you very well, what you need to immediately do after you don't go home to bed, don't go back to your offices and do constituent mail, what you need to do is actually start reading through this tax bill and figuring out, okay, what are the billions of dollars of things I'm going to throw away? Because that's the only way that you're going to get done. Are you going to throw away the R&D credit? Are you going to throw away the dependent care credit? Are you going to get rid of the Social Security pieces? Because you're probably going to have to get rid of all of those to get to the number you're going to have to reach. Are you going to get rid of the estate tax? Are you going to get rid of the CI tax? Are you going to get rid of your Jesse checks? Because those are the decisions you're going to have to make. And I would start doing that tonight, members. You know, Representative Baker, Representative Daniels, Representative Hancock, Representative Rarick, Representative Lewick, again, it's almost impossible for me to believe that you would let your constituents down so much, but you actually voted against giving your homeowners and renters property tax relief tonight, and instead are going to give it to Representative David's massive tax cuts for corporations. Representative Baker and Backer and Miller and Bennett, you decided to vote against tax relief for seniors and the elderly. My God, that's at the heart of what you've wanted to do this year. But you decided to throw them under the bus in order to vote with Representative Davids on his massive tax cuts for corporations in the metro area. Representative Bennett and Wills and Peterson, you voted, I know that you really believe that child care is an important thing, and making sure that we support families with kids so that they can afford their child care is an important thing. You voted no to give some more relief to those folks instead of closing some corporate tax loopholes on some companies in Minnesota. Most of them probably not even in Minnesota. That's the decision you made, and you all voted today against funding broadband once again. So, members, it's going to be hard to get to where you need to go, because not just because of the negotiating position you put yourself in, but because at the end of the day, for all the criticism that we're giving of this budget, this is what you believe. You actually believe, and I think this is sincerely held, you actually believe, as Republicans, that $15 in tax cuts to every $1 in investment in education is the right thing for Minnesota. You believe that. And it's going to make it harder and harder for you to give up on that position. You believe raising tuitions on college students is more important than dealing with tuition for college students is less important than giving big corporate tax breaks. That's what you believe. That's what your economic philosophy is. And more power to you, but it's going to make it a lot harder for you to balance this budget. You believe that it's better to jeopardize the health care of 100,000 Minnesotans than to lessen by a little bit the big, massive tax corporation giveaways that's in Representative David's bills, because that's your economic philosophy. You believe that you give it to those corporate special interests, somehow that's going to trickle down. It hasn't worked, but that's what you believe. And I know that it's hard for people to give up on their beliefs. It's hard to not stop believing. But if you're actually going to get this session done on time, after this budget is passed, capped off by this huge giveaway to corporate special interests in a time when we have a $2 billion budget surplus, I think that belief is all you got. So I can understand why you're clinging to that belief, because I think the odds of us finishing on time at this point, being so far away, are almost impossible. And if you would have told me at the beginning of, well, I guess at the beginning of March when we found out we had nearly a $2 billion budget surplus, that there would be even a chance that this legislative session wouldn't finish on time, I would have said you're crazy. Because that is like the lowest bar in the whole world. This is the easiest session in my time here to actually come up with a package of stuff that works for Minnesotans. So I wish you good luck. I hope you hold on to your belief, and I think you should be voting no tonight.
The member from Hennepin, Representative Pepin.
Thank you, Mr. Speaker and members. Well, we've heard a lot of people talk about priorities and choices tonight, and you're right. That's what this is about. I think the tax bill is one of the best opportunities for Minnesotans to see a clear difference between Republican and Democrat priorities and choices. You see, Democrats, you remind me of one of my favorite Minnesota bands, the band Soul Asylum. Do you remember them? Soul Asylum had an album that came out in the early 1990s called Grave Dancers Union. And I love that album. You might remember it. I had it on vinyl. On that album, there were two big hit songs, Somebody to Shove and Runaway Train. And Democrats, you remind me of that album because like Soul Asylum, you also have two big hits with the same thing. Two big go-to songs, if you will. Your two songs are Tax and Spend. That's right, members. Like Soul Asylum, you want someone to shove. You want to shove around the taxpayers of Minnesota. Tax, 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 tax. That's what Democrats are about, Minnesota. Here are some of the tax increases that have been proposed over the last few years. Income tax, beer tax, corporate tax, small business tax, energy rate tax, snack tax, auto insurance tax, metro area sales tax, estate tax, sales tax, mortgage and deed tax, vehicle excise tax, cigarette tax, additional $1.60, health insurance premium increase, electricity surcharge tax, solar tax, babysitter tax, really? Surgical procedure tax, vehicle wheelage tax, frac sand tax, gas tax, telecommunications tax, warehouse tax, and Representative Mark Ward, one that you voted for, farm equipment tax 2013. You talked a lot about rural Minnesota, but Representative Mark Ward, you voted for the farm equipment repair tax. Democrats passed more than $2 billion in tax increases. $2 billion of tax increases in the last biennium. And you borrowed $800 million from schools. And property taxes went up by 3.4%. Even with this $2 billion surplus now, Democrats have come forward with a gas tax of an additional 16 to 20 cents per gallon. 16 to 20 cents per gallon in additional gas tax, in addition to what we already have. And the irony of that is that according to the Office of Management and Budget, a large part of the reason we have that $2 million surplus is because the price of gas has gone down, and therefore the discretionary income has come up. And what was the plan for transportation? The plan, that's right, Representative Erickson, to raise the gas tax. That's what the Senate did. That's the only solution that Democrats have brought forward this year for fixing roads and bridges. Democrats have said they're committed to fixing transportation, and the only proposal they've come forward with is increasing the gas tax. And what happened today when the Democrats in this chamber had an opportunity to show rural Minnesota that they care about the roads and bridges in those small towns, Representative Marquardt? The Democrats could have shown rural Minnesota and the rest of the state that they cared about transportation. And what happened when the only bill that they brought forward was presented? A red board, 132 no votes against gas tax increases. So even when the Democrats bring forward the taxes, what do? They hide. And you know why? Because they're not popular. Because you know why? Because Minnesotans do not want government spending to grow faster than their own family budget. Unbelievable. And why did the Democrats make the choice of bringing massive tax increases to Minnesota? All of those I just listed? To fuel their desire for the other song, the runaway spending, the runaway train. More spending for health care, while conveniently brushing the OLA report that showed that many on public programs don't actually qualify for the program, some who haven't been audited for 2 years. So we know, because the bipartisan, nonpartisan OLA has said that these programs have not been audited, so we know there's waste in the system, but yet we just want to brush that away. We don't want to get at that waste. What are some of the other spending items? Bonuses to the board members of the failed MNsure exchange, in which over 100,000 people lost their plans. What else? What are some of the other spending things that the Democrats just couldn't go home without? They needed to raise taxes so that they could pay for that office building. Oh wait, I guess that they didn't actually pay for that. They just appropriated the money. And what else? More spending for political appointees. Tax, 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 spend, 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 tax, spend, tax, spend, tax, spend, tax, spend. Those are your two hits, your two songs. This is your priority, Democrats. Those are your priorities. It's pretty simple. Here's your message to bring home. Your two priorities. Number one, tax middle-class Minnesotans, tax all Minnesotans. And two, spend more. Tax and spend. That's your choice. We heard that a lot tonight. That is your choice. You say that we're not giving middle-class tax relief and that you did? Give me a break. When you controlled the House and the Senate and the Democrats' office, all Democrats, the governor's office, all Democrats, Representative Lincheski, you brought forward a $2 billion tax increase. So when we're talking that we voted it somehow against middle-class Minnesotans, let's not forget the past. Yes, Democrats, you did that. You raised taxes by billions. Own it. You asked us to own this bill. You own the tax increases. You raised $2 billion in tax increases. Own it. Members, like my Soul Asylum album, your cries of tax and spend is a broken record. So, members, the public has a clear choice. I illustrated the Democrat choice. And in case anybody missed it, again, the priorities for the Democrats are, maybe I can get some help. Two priorities there. First, tax, and second, spend. That's the Democrat priority. And what's our priority? Move on to that. Now for the Republican plan. Our priority, our choice is also clear. We believe, quite simply, that the state budget should not grow faster than family budgets. It's a pretty simple explanation. Test it out with your constituents. Go home to your constituents and say, when you go see them at a grocery store or at church, say, do you think that government spending should go faster than family budgets? And see what they say. I challenge you, because I think they're going to be with the Republicans on that one. Family budgets have grown about 12% since 2000. And if we pass the Democrat plan this year, the $43 billion in spending, with no middle-class tax relief, that would be a 75% increase in government spending. So present that to your constituents. Do you think that it makes sense for family budgets to grow by 12% and government spending to grow by 75%? I'm guessing they're going to be with the Republicans. Not a good idea. So today I want to thank Chair Davids, Chair Drazkowski, Vice Chairs Barrett and Quam, and tell you a little bit about what our bill does, our tax relief bill. Our bill includes $2 billion in tax relief over the next biennium to middle-class families, college students, aging adults and veterans, farmers, job creators, innovators, middle-class families. We provide tax relief for middle-class families. An example, $538 million to give Minnesotans relief through a new state version of the personal or dependent tax exemption. Thank you, Representative Davids. The middle-class families, thank you. Tax relief for college students. An example, $130 million for college, technical, and trade school students, and tax relief through a new tax credit for principal and interest payments on student loans. Tax relief for aging adults. $263 million in relief going to aging adults living on fixed income by phasing out the tax on Social Security. Tax relief for veterans. $51 million in relief for veterans by no longer subjecting military pay and pensions to income tax. And farmers. 240,000 farmers could receive property tax relief to reduce their disproportionate share of school district debt service. Much better, Representative Marquardt, than the farm equipment repair tax that you voted for in 2013. What else? Tax relief for jobs and innovation. $453 million to lower prices for consumers and increase wages for employees by modifying, phasing out the statewide general property tax. Also, this bill brings government spending in line with family budgets, which is what they expect and they want. Our budget invests in priorities like education, roads and bridges. It puts money away in the rainy day fund and still provides significant tax relief to hardworking families. Because Republicans believe, we believe offering a different approach with a different philosophy. We believe that growth in government spending should not grow faster than family budgets. Simple. A budget surplus is not a reason to spend even more of the hardworking tax-earned dollars of Minnesota taxpayers. That is not the balanced approach that Minnesotans expect from us. They expect us to be fiscal stewards of their tax dollars. They expect that when they pay their taxes to the state, they expect that we are analyzing every single dollar and that we are not wasting it. Because while the state of Minnesota may be currently in a $1.9 billion surplus, most families in Minnesota are not experiencing that same surplus. So we are charged with being good stewards of taxpayer dollars. Tax dollars come straight out of our constituents' pockets, and I don't want any of us to forget that. As representatives, we are here to protect family budgets and make sensible decisions with their tax dollars, including tax relief. When we overtax, we need to provide relief back to Minnesotans. Members, the choice is clear. The Democrat plan, tax and spend, and the Republican plan today, $2 billion in middle-class tax cuts. Thank you, Representative Davids, Representative Drazkowski, for a job well done. Members, I ask for a green vote.
The member from Wabasha, Representative Drazkowski.
Thank you, Mr. Speaker. Thank you, members, for the robust discussion here today on the House tax bill. I'd like to begin with thanking the members of our committee, beginning with the Vice Chair, Representative Quam, the DFL lead, Representative Davney, and a great committee we had. We had a great deal of time, as Representative Lencheski pointed out. We had a great time together, learned a lot together, and I look forward to working again as we did very well this year again next session. Those other members are Representatives Anderson, P., Erickson, Hertas, Kosnick, Lencheski, Lean, Marquardt, McDonald, Pinto, Simonson, Vogel, Whalen, and Joachim. Thank you all for your contribution to what we brought here today. Also would like to thank the staff, DFL researcher Molly Richardson, our House nonpartisan researchers Steve Hines, Pat Dalton, Chris Clayman, Nina Manzi, and Joel Michael, our House fiscal staff person Kathy Schill, our committee legislative assistant Grant Erickson did an awesome job, as did our GOP researcher Gary Kay and our committee administrator Stephen Rubis. Also thank you to the Department of Revenue. They were there to help us at times when we needed it, there for questions, Paul Cummings and Amy Hing. So appreciate that. Members, as we look at the bill before us, we have a lot of different tax provisions in here to try to reduce the burden on Minnesota taxpayers. Our committee focused on the property taxes, and as we know, property taxes increased significantly in the last 2 years, 5% increase throughout the state. In the last year, it was about a 2.1% increase in Minneapolis and St. Paul, while outstate Minnesota increased by 4.2% in their property taxes. So that's why we had such a big focus on rural Minnesota members, because rural Minnesota is where the property tax burdens over the last couple of years have felt it the worst. And I talked about and chronicled earlier the Sunrise Cafe in Malmo, and the Westerland family there, as they try to keep their family business alive and build it and help build their community. We talked about all the pies they are baking and selling in order to try to pay off this huge 800 different pies that they need to make and sell in order to pay off this very burdensome state general levy. Well, members, there's Sunrise Cafes all across Minnesota, as many in your districts, including the Fry and Pan Family Restaurant in Representative Marquardt's district, the Moon Terrace Cafe in Representative Seltzer's district, the Hi-Ho Tavern in Representative Marquardt's district. Hope you're not there too often, Representative Marquardt. Allied Meats in Representative Marquardt's district, the Mountain Owl Inc. in Representative Atkins' district, Paul's Auto and Tire in Representative Atkins' district, Travel Tags in Representative Atkins' district, Representative Lencheski Johnstone Supply, the Traveling Vineyard in your district. Representative Dill's got Betty's Pies, and I'm sure he eats there often. Sven and Ole's Pizza for the best pizza in town. Rockler Hardware, Representative Applebaum's district. Representative Moline's got Floodwood Hardware. Representative Joachim, Lakeshore Learning Store. Gratz Sewing in Representative Winkler's district. Blooming Grounds Coffee House in Representative Pulowski's district. Longville Bait Company in Representative Purcell's district. Representative Lilly, you've got Blue Ribbon Bait and Tackle. And Representative Lesch, you had the Minnesota Music Cafe. Representative Hornstein, Sweet Retreat Cupcake. Representative Fisher, I didn't pick the names, members. Representative Fisher, Lila and Claudia's Yarn and Gifts, and Representative Lesh, that St. Paul Bakery that you talked about where you frequent every morning. Members, those are other examples of the Sunrise Cafe in the state of Minnesota. And there's many more in your districts and many more in all of our districts throughout the state that will benefit immensely from the provisions we have in this bill to cut the overly burdensome state general tax that these small businesses in Minnesota have placed upon them. But as we look at the bill generally, it's a big bill. It's probably a 2-pounder. Well, we have a lot of taxes in the state of Minnesota. In case you didn't hear Representative Pepin's speech about how they have accumulated over the last many years. But this bill could just as easily be called Little Johnny's tax relief bill, because little Johnny lives in a middle-class family. And little Johnny and his family are eligible to receive a portion of the $538 million available for the new state version of the personal exemption that Representative Davids placed in the bill. If little Johnny's family is on MNsure, there's $50 million in tax relief in there for them. If little Johnny is in 7th grade, you know, there's $47 million in there to increase the education deduction that will benefit little Johnny's family. And if little Johnny's in daycare, $35 million for families with children, expanding the dependent care credit. That could help little Johnny. And if little Johnny's into digital music, we repeal the 2013 Democrat tax on digital music so little Johnny can listen without paying another tax. And little Johnny might be in pre-kindergarten too, and there's tax relief for him if he's there. Expanding the education deduction for pre-kindergarten, $20.3 million. And if little Johnny and his family are into a fitness facility, $1.9 million for that very fit little Johnny family. And members, if little Johnny's a little older, maybe he's medium-sized Johnny, and he's in college, there is $130 million in the bill to give a new tax credit for principal and interest loan payments on the student loans that little Johnny's got to pay in order to get into the workforce to pay all the taxes Democrats have foisted upon him. And if little Johnny is in college, there's another tax credit to help his family save for those higher education costs, $40 million. $680,000 for student relief to help little Johnny overcome the burden of the price of textbooks and supplies. And if little Johnny's mom is a veteran, there's $51 million in the bill for her and little Johnny's family so that they no longer have to pay those pension benefit income taxes in their family. And if little Johnny's grandparents are on Social Security, we provide a $237 million tax cut that would allow little Johnny's grandparents to keep more of their money too, so that they could take little Johnny to the zoo. And if little Johnny grows up on a farm like I did, there's $60 million to provide relief so family farms can pass on the family farm to the next generation, so that when little Johnny farms someday, he doesn't have to sell off half the farm in order to just pay the taxes on that farm. And little Johnny's farm will also be able to have half of their cost of their school district debt service relieved through the tax relief offered in this bill. So no longer will little Johnny's farm family be paying 10 times as much for the school as their cousin, as little Johnny's cousins in town, but now he'll be paying 5 times as much as their cousins in town. If little Johnny's looking for a job, $453 million in the first biennium to provide lower prices in their communities, to increase wages in those businesses like the Sunrise Cafe, and maybe little Johnny's going to work at the Sunrise Cafe. And if he's going to work at the Sunrise Cafe, maybe we create room in their budget for one more part-time job so little Johnny can work there while he tries to work through college. $102 million of tax relief in the bill for businesses in little Johnny's neighborhood to encourage innovation through research and development credits so that little Johnny can grow up to have a good paying job and help us help his family overcome the cost of government. The bill also grows jobs in mining, timber, and manufacturing through a new markets credit. So if little Johnny lives on the Iron Range and is involved in the timber industry, trucks timber to the mill, there's a new markets tax credit. Maybe little Johnny can be hired as they expand that operation. $15 million in the bill to grow biotech and tech jobs. Maybe little Johnny's going to be in the tech industry. Members, there's all kinds of tax relief in the bill for little Johnny and the members of his family. And if we are going to move forward and make our choice, not only for little Johnny, but for all other little Johnnies and their families across the state of Minnesota, we need to make a choice. And as Majority Leader Pepin pointed out, we can tax, 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 and spend, 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 as has been going on around here for way too long, which has led to a bigger, richer government at the expense of Minnesota families. Or we can reduce the tax burden on Minnesota families so they can keep more of their own money in their own pockets and spend it in only the best way that they know how, which will help create stronger, healthier, middle-class Minnesota families in our state. Republicans believe in working families. It's time for the government to yield to our middle-class families here in the state of Minnesota. Members, this bill accomplishes that. Mr. Speaker, hardworking Minnesotans all across our state are growing weary from the heavy burden of government that has been placed upon them. This bill provides the relief they seek. Members, join me in voting for this bill so the people of Minnesota don't stop believing. Thank you, Mr. Speaker.
The member from Fillmore, the bill author, Chair Davids.
Well, thank you, Mr. Speaker, and I will be long. And members, I have to just wrap up a couple of things here as far as the bill itself. I neglected Representative Slocum's Zapper bill, which is one of my very favorites. I think you got the TIF stuff too for your district there. We did put in the workforce housing TIF district, which should help. There's been some debate, should there be the credits or whatever. There's two parts of the bill that I really don't understand that well. One was something from the Iron Range for Representative Ansel's, but he said he'd help me on that. And there was this thing about fitness facilities. I've never been in one of them, so I don't know too much about that. But members, this is tax relief for Minnesota families. That's what this is. Now, Chair Linchesky, I couldn't agree with you more on something you said. And Representative Joachim, you said you own this bill now. You own this. It's yours. Thank God it is. What an awesome, awesome tax bill that our tax committee put together. on a bipartisan basis as far as what's in here. Chair Dabney had some great ideas on tax credits. We can just go all the way around. Representative Simonson, Slocum. There's a lot of members on my side of the aisle that have provisions in this bill. Very, very bipartisan bill. So I do totally and completely agree with that. We own this. I own this. This House will own this, and this is what we'll be taking in the conference committee. I'm very proud of that. But I would certainly be remiss, and I know Chair Drazkowski did some things, but I have to do it too. First of all, I thank every member of the Tax Committee, Republican, Democrat. We had 40 meetings. 40 meetings. You did a lot of work, and I thank you for that. Vice Chair Barrett, thank you. Great job. Chair Drazkowski, Division, Property Tax Division, thank you. DFL lead, what can I say about Ann Lancheski? I just thank you. I just thank you for all of your work and your knowledge and your background on the Tax Committee. DFL research, researcher Molly Richardson, House Research. Now, these next 6 or 7 folks here, let me come back to them. Committee Legislative Assistant Andrew Hassick, GOP researcher Gary Kay, Committee Administrator, what's his name again? Stephen Rubis. Stephen Rubis. Great job. And I have to give credit where credit is due. The Department of Revenue sent over their A-team to us. Commissioner Bowerly when needed, Paul Cummings, and Amy Hang. Man, I tell you what, you needed something, you need information. If Paul didn't know it or Amy didn't know it, they got it to us really quick. And that to run a committee, you need that from the department. And Governor Dayton, I want to thank Governor Dayton for meeting with me on tax issues. But I think before I get into the research and the fiscal, we could not have run the meeting without Representative Simonson, who moved our minutes every meeting. And I thank you for that. You were there for us. But if the Department of Revenue folks are the A-team, I got to introduce the dream team. Nonpartisan House Research, Steve Hines, Pat Dahl, Chris Clayman, Nina Manzi, and Joel Michael. House Fiscal, Cynthia Templin, and Kathy Schill. That's one thing we can all agree on, that they are the dream team, and they really help make this whole thing work. Now, members, I haven't done live radio that much. You know, I have a radio show every week, and you go on there for 15 minutes, and you just say what happened during the past week and how great Republicans are and how great the tax bill is, things like that. But I don't know if you've ever done live radio. That's a different animal, because people call in and ask you questions. And that gets a little hairy at times, I will say that. But KROC AM, I did a live radio show last week. And this caller calls in and says, you know, her husband was 23 years in the military. He commits suicide. And she's living off her military pension. And she doesn't think she should be taxed on that income. That's what she said on the radio. And I said, boy, have I got a deal for you. I said, don't stop believing. Right on the radio. Because in this bill, she gets to keep her deceased husband's military pension. The whole thing. She doesn't pay tax on it. It goes to her. So yes, I plead guilty. I plead guilty to the fact that this is a bill of special interests. It is. Let's call that lady that called me on the phone, let's call her Kathy, because her name is Kathy. And she is my special interest, because I think she should be able to keep that military pension, every penny of it. That's what I think. We're one of about 6 states, 6 or 7 states 6 states that taxes military pensions. We shouldn't be doing that. What are we doing that for? We have a $2 billion surplus. What are we taxing military pensions for? I don't understand. Those people are one of my special interests. Another special interest. Every senior on Social Security will not have to pay taxes on their Social Security at the state level. They still have to do the federal thing. 50% at one level, 85% included at another level. We have a $2 billion surplus. Why are Minnesotans paying taxes on their Social Security? I know not why. Under this bill, they don't. Don't stop believing, members. The education credits, Representative Wills, 529s. We have a $2 billion surplus. Why don't we have a 529 program? Well, we will if you don't stop believing. What about the increased subtraction? All this corporate special interest stuff. Members, this bill is about the middle class. My special interest is the middle class. And what do? Every Minnesotan gets an exemption. We have a $2 billion surplus. Why don't we give them an exemption? I know not why. So with that, members, I could go on and on and on, and I think I will. You know, there's been a lot made of Governor Dayton, fine gentleman, our governor. And he said, you know, he didn't say this, but everybody's saying that, well, you're at $2 billion in tax cuts. He's at a less than 200 million in a sense, a little bit over 200 million. Members, we're close. I can feel it. We're getting there. Because members, please vote green on this bill because Governor Dayton and the Senate and the House, we're just not that far apart. And don't stop believing. Please vote green.
Seeing no further discussion, the clerk will take the roll on the bill. Clerk will close the roll. Pearson switches from nay to aye. There being 74 ayes and 58 nays, the bill is passed and its title agreed to.